Or broadcast, sorry. Okay, I declare open this hearing of the Senate Economics Legislation Committee into the 2025-26 supplementary budget estimates. I begin today by acknowledging the traditional custodians of the land on which we meet today and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee has set 11th of December 2025 as the date by which senators are to submit written questions on notice, and 29th of January 2025 as the date for the return of answers to questions taken on notice. The committee's proceedings today will begin with the Reserve Bank of Australia. The committee will be conducting today's hearing in person and via video conference. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also as contempt to give false or misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in estimates are relevant questions for the purposes of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate's order specifying the process by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into the Hansard. I remind senators of their obligations under the Behaviour Code for Australian parliamentarians to treat witnesses with dignity, courtesy, fairness and respect. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. And I remind committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. The committee welcomes the Reserve Bank of Australia and its representatives, Governor Ms Michelle Bullock and Assistant Governor Dr Christopher Kent. Governor, would you like to make an opening statement?
No, thank you, Senator.
Great. All right. We will kick off and go straight to questions. So we'll start with Senator Patterson.
Thank you, Chair. Thank you, Governor. Do you agree that the neutral rate could be pushed higher by growing fiscal deficits?
So the neutral rate is basically determined pretty much by relative supply and demand for funds, so savings and investments, if you like. And it's also influenced by what happens with the global rate, so global savings and investment. Prior to COVID, there was a feeling that the global neutral rate, including in Australia, was quite low because there was quite a lot of savings in the world economy, not as much investment. So if you take that sort of framework and you think about government deficits worldwide, then there is a possibility that if you have an increase in investment at the same time as you've got less savings in total, then that might have an impact on the neutral rate upwards.
So in simple terms, all else being equal, higher fiscal deficits could mean a higher neutral rate.
They could, but I emphasise again that there's domestic factors here, but there's also global factors.
Of course, of course. We don't control global factors, though. The only thing Australians can control is Australian factors. So is it fair to say that, again, taking all else being equal, that higher fiscal deficits in Australia could push higher the Australian neutral cash rate?
All other things equal, if there is less savings in the economy, and that includes by the government as well as by the private sector, and at the same time investment doesn't come down, so all other things equal, then that would put a bit of upward pressure on the neutral rate.
Okay. You probably know I'm alluding to a speech given by the head of the International Department at the RBA, Penelope Smith, last week, which she argued that could be one of the factors pushing the neutral rate higher in Australia. that also means, all else being equal, that interest rates need to be higher. You, as the RBA, need to set interest rates higher in order to stabilise inflation, isn't it?
It means that if we want a restrictive policy, it means that the cash rate has to be set higher than a higher neutral rate. So, yes.
So last year, the Australian government had a deficit of $10 billion, and this year it's forecast to be $42 billion. If the deficit was instead there was no deficit, or the deficit was much lower, that would mean the interest rate could be lower, all else being equal.
Possibly, but we've got models of the neutral rate, which and they take into account these sorts of things. I might let Dr. Kent speak about this, but there's a wide range. So I don't think you can make a statement that says take 10 billion off, neutral rate does X. So Chris, did you?
Yeah, I mean, I think it depends as well what's happening on the investment side, and we need to think about both federal and state governments.
Yes, that's a very fair point. What I'm just trying to do is just isolate this factor, though. That's why I keep saying all else being equal. It's very common in economics when you're trying to assess the impact of a policy change to assume all else is equal. So let's assume all else is equal. And I'm not asking you to specify exactly how much lower interest rates would be, but if we were not projected to have a $42 billion budget deficit this year at the federal level, take your point about state deficits, but let's assume they're all else be equal. If that instead was a lower number, or indeed a surplus, then interest rates could be lower, couldn't they?
I think in theory, yes, at the margin, all else equal, but the reality is the bigger fiscal pressures are coming from offshore, and that's having an effect on global neutral interest rates, and that's reflected somewhat in ours as well.
Yep. We might come to that in a minute if we have time. In the most recent quarterly print, which I understand is reflected in your latest forecast, both underlying and headline inflation is back above your target band. And again, as I understand, your forecasts say that it will remain above the target band now until 2027 and not return to the midpoint at any time within the forecast horizon. Is that right?
That's broadly right, I think. Let me just check the... our target is, as we've said before, our target is headline, but given what's happening with rebates for energy in particular at the moment, it's a bit difficult to read. So that's why we've been focusing on trim mean. So I think our current forecast, November, we see headline inflation coming back in the band in 2027, and back towards the midpoint by the end of the forecast period 2027.
Okay, but not actually back at the midpoint by the end.
It's not back at the midpoint, but it's back 2.6. And given how uncertain forecasts are outside that far out, Senator, you'd understand that 0.1 is 0.1.
Fair point. I think Senator Hume will have some questions about Nauru in a minute, but just for our purposes, it's the RBA's view, isn't it, that the current unemployment rate is below the natural rate of unemployment?
We think the labour market is still a bit tight. I try to steer away from talking about a single number like the Nauru, because, as we've said before, there's a whole lot of things that we look at to judge that the labour market is a bit tight. That is one of them, and the model estimates of that is one of them, but there's a whole lot of other things as well. So I would characterise it as saying we think the labour market's still a little tight.
Okay, I'll leave Senator Hume to get into that into more detail in a minute when she has the call. But would it be fair to characterise the economy today as operating above its potential?
I think at the moment we feel that it's a bit uncertain. We think that the output gap probably has closed, but it is uncertain. But it does mean that we're in a position where, even if we're in balance, that there are upside risks if the economy grows a bit quickly, if we're already at potential. So that's sort of the issue we're dealing with.
All the recent data, correct me if I'm wrong, has surprised on the upside. Inflation has been higher than your forecast and Treasuries. Is that right?
Certainly inflation has surprised on the upside. The unemployment rate hasn't. The unemployment rate's pretty much come in as we expected. And then, of course, we're getting some data at 11:30, which will tell us how the economy went in September.
Yeah, but if unemployment is roughly where you expected it to be, but inflation appears to be accelerating, that does indicate that perhaps the economy is operating above potential?
Possibly, but there's some other possibilities as well. There's certainly some suggestion that what we were observing through the middle of 2025 was a little bit of pressure on business margins that may be now recovering. So it's suggestive that costs are biting on businesses and they're able to pass them on. It doesn't necessarily mean that we're operating beyond potential, but it does mean that demand is recovering enough to allow businesses to pass on cost increases.
Yeah. Whether it's kind of in balance or above potential, I think either way, what would you assess the impact of a positive demand shock to be?
Well, a positive demand shock, if we are already at balance and demand increases much more sharply than we'd expected, then we might expect that would put a bit of upward pressure on inflation.
Yep. So I want to take you to some recent statements on monetary policy. I was going to provide you a copy, but I see that that's going to be technically difficult given where you are, but I'm sure you've got access to them. In the November 2024 statement on monetary policy, it states, and I quote, "Growth in public consumption is expected to remain robust over coming years, supported by the provision of government services to households." And it goes on to say, "Growth in government spending has been stronger than expected, driven by public consumption. The staff forecast of public consumption has been revised higher several times over the past year in response to announcements of additional spending." In brackets, the staff forecast does not typically incorporate expenditure that's not been budgeted. So again, all else being equal, if the economy is either in balance or above potential, what's the consequence for inflation and interest rates when there's a positive shock to government spending?
Well, again, in theory, what happens is that if you end up with total demand in the economy above what we're forecasting there, that would suggest our forecasts would, depending on supply and our assumptions about supply, that we would expect that inflation would be a bit higher.
In the May 2025 statement on monetary policy, there's an observation which I'll quote, which is public demand accounted for around half of GDP growth in that quarter. So if we rely on the government's latest forecast from the budget for spending in the current financial year and their nominal GDP forecast for this financial year, nominal GDP has increased by a bit over $300 billion in the last 3 years, and federal government spending has increased by about $150 billion. So around half of all additional GDP in the last 3 years is accounted for by federal government spending. Does that sound right?
Oh, look, I accept your numbers. I haven't got the specific numbers in front of me, but... Year-end.
Probably about right.
About right, probably.
Yep. Okay.
A bit less than half.
Yep.
But not much.
So, I mean, half of all GDP growth being attributed to federal government spending is a significant proportion, isn't it?
Yes, but if you, government I've made this point before, government sometimes in circumstances where, and if you look back over GDP growth and the contribution of public over the last few years, in times when private demand is not doing very well, often what happens is the public demand comes in to fill the gap. And that's certainly what we've observed over a number of periods in recent years.
Sure, but I mean, federal government spending as a proportion of the economy is roughly about a quarter and has been roughly about a quarter for 20 years, add or subtract a point or two. If in the last few years federal government spending has accounted for half of all economic growth, that's a very significant increase.
Contribution. Yeah, it's a contribution to GDP growth, and that moves over time.
Yeah.
And it depends very much on what's happening to the private contribution. And if the private sector is not contributing much in a cyclical sense, say it's in recession, then you would expect the public sector to be accounting for more of the growth. That's a cyclical phenomenon.
Sure. Is it a sustainable phenomenon?
Well, no, it's a cyclical phenomenon.
And that's why I'm asking it. Would it be sustainable?
Well, it's not really a point of being sustainable as the economy picks up, and what would generally happen is, in a cyclical sense, is that it would decline as a share of contribution to growth.
And we had a discussion at the last round of estimates about a private sector taking over as the leader of growth. Is that what we've seen?
Well, we're starting to see it, and our forecasts are that we will continue to see it, and it will pick up. Yes.
I think the discussion we had that private sector would be taking over from the public sector, but in the June quarter, public demand grew by 1%. In the most recent statistics of government financial statistics released yesterday, growth in public demand has actually doubled to 2.1%. So it doesn't seem to me like government is taking a backward step and the private sector is taking over, at least not yet.
But we'll wait and see at 11:30.
Yes, indeed, we don't have long to wait. All right, I think the chair's about to round me up anyway, so I might leave it there. Thank you.
Thank you, Senator. Senator McKim.
Thanks, Chair, and good morning to you. Thanks for your attendance today. Lending indicators are showing that a record amount of credit is currently being lended to property investors, the highest amount ever on record in the last quarter, for which the ABS has provided statistics. Do those numbers and that surge in credit for property investors raise any concerns for the bank in terms of system stability?
So a couple of things. Property investors are actually typically not that riskier lending. Where the bank has potential financial stability concerns to do with lending to property investors is that property investors can tend to exacerbate the housing price cycle, and if that has implications for owner-occupiers who try to chase the market and end up in more indebted situations, then that can potentially. But we're not seeing concerns about that at the moment. But nevertheless, that's the general concern we would have.
Okay, and when you say you're not seeing concerns, are you talking about owner-occupier mortgage default rates? What are the data sets that you're looking at there?
The data are the things like the loan to valuation ratios and high debt to income lending. They are remaining pretty low, and they're remaining pretty low for owner occupiers, and even they're not really high for investors either at the moment. So they're the sorts of warning signs we'd be looking at. Certainly, default rates are incredibly low.
Do tax concessions for property investors tend to increase demand for credit from property investors?
I don't really think I have an opinion on that, Senator. There's a lot of different taxation treatments for housing for investors, and certainly it makes it attractive in some circumstances for them. What we do know is that when interest rates start to decline, it tends to be the property investors that are first cab off the rank. They tend to respond more quickly, and you see that in credit. Is that entirely due to taxation treatment? I'm not sure, but other people who've studied this much more extensively, I think, would have views on that.
Well, the RBA's previously made submissions to government inquiries into helping first home buyers, and both times in 2003 and 2015, the bank has made the case that tax settings that advantage property investors are disadvantageous to aspiring first home buyers. Is that still the view of the bank?
Well, we haven't done any recent work on this. Certainly in the past we did a lot of work on this, so I can't say if we'd still have the same view. Senator?
Why aren't you, as you put it, Ms Bullock, doing any work on this?
Because the housing market, our mandate, Senator, is inflation and unemployment. The housing market is a very important social issue, and people's ability to purchase houses is very important. Housing prices is not a mandate or a goal of the Reserve Bank. Certainly the housing market is a way through which monetary policy works, and that's the lens through which we look at it. But whether or potential taxation changes to address housing issues are not the bailiwick of the Reserve Bank.
Well, your mandate's the economic prosperity and welfare of the Australian people, both now and into the future, isn't it?
An overarching mandate through which we achieve that through our inflation and employment mandate, not through housing policy, Senator.
Well, you spoke last month, Ms Bullock, about stamp duty stopping downsizing. That's tax policy and housing policy. Why is it okay to speak about that but not about things like the capital gains tax discount?
I spoke about that in the context of mobility of labour, which is important for employment and important for what is the inflation, the level of unemployment, which is to do with inflation staying low and stable. That's the context. So it was much broader context. I wasn't opining on taxation. I was opining on things that might impact mobility and therefore the non-inflation, accelerating rate of inflation.
So stamp duty is not a tax? Is that your argument, Ms Bullock?
Stamp duty is a tax, Senator. That's not what I said. I said that it was about the context, the broader context of the question was things about to do with the non-inflation accelerating rate of the NIRU. So, and things to do with mobility of labour impact that. I'm certainly not advocating any taxation changes. The only observation I would make is that one of the only things I think economists can agree on is that stamp duties are inefficient taxes.
Well, you won't get any argument out of me on that. That I'm glad we can agree that, in fact, they're taxes. But, Ms Bullock, I want to ask you, given you have accepted that the increased lending to property investors may raise concerns around system stability, and please, if you think I'm sort of misrepresenting you here, feel free to correct me, but my view is that you have accepted that. And given that it's, even though you say you haven't done any work on it, I mean, you work in, one of the core parts of our economic system, and the decisions that you make impact on the financial lives of many, many millions of Australians, and I don't think it would be controversial to say that tax concessions for property speculators are part of what is driving a significant increase in credit for property speculators. So I find it passing strange that you won't comment on something like the capital gains tax discount, and not only will you not comment on it, you won't do any work on it. Will you put the impacts of the capital gains tax discount on your overarching mandate, which is the economic prosperity and welfare of the Australian people? Will you put the impacts of the capital gains tax discount on your overarching objectives into your work program for the future?
Our work program, Senator, focuses on our key mandates, which are inflation and unemployment. And I restate the point that we take these things as given, and what we have to do is work with what we've got, our one interest rate, to deliver those mandates. That is what delivers what we can do for the economic prosperity and welfare of the people of Australia. Housing policy, yes, I've said in the past that there are things that you can do with, it's a supply-demand issue, and we really need to get to the nub of that, but I am not the person to be advocating what needs to be done for housing policy.
Well, it is a supply and demand issue, and part of the demand side of the equation are tax concessions for property speculators, aren't they?
Yes, but again, housing policy and housing prices are not part of our mandate, Senator.
All right. Well, I would argue that housing policy and housing prices absolutely relates to the economic prosperity and welfare of the Australian people, both now and into the future, given that large parts of an entire generation of young people in this country are watching the great Australian dream of owning their own home disappear into the distance. Why is it that the RBA in the past has been prepared to jawbone about the capital gains tax discount and tax concessions for property speculators, which you did in both 2003 and 2015, and why is it that you're not prepared to talk about those things now?
Senator McKim, if I recall correctly, I believe what we did say in those instances, we were making submissions broadly about housing issues, and we said any consideration of tax changes should be done in a very holistic way, not just looking at any particular aspects. And housing is just one asset that you'd want to be thinking about. There are other tax effects when people come and invest in other sorts of assets, including equities. So I think what we said is, if you're going to look at this, it's a wholesale review. But again, it's not for us to opine on what should or shouldn't happen to government policies.
Thank you. Yes, in 2015 you did say there was a case for reviewing investment property tax settings. Is that still the view of the bank?
I don't think the bank has a view on this at the moment, Senator. Our focus over the last few years, quite frankly, has been on bringing inflation down and keeping unemployment stable. We are, of course, interested in what's going on in the housing market, but like everyone, we have to prioritise our efforts. Let me say that as a mother and a grandmother, I understand all the points you are making. But in terms of the mandate of the Reserve Bank, we don't have a mandate to be making suggestions and taking views and making suggestions on housing policy and taxation policy. That is not our mandate.
In 2019, you prepared an internal briefing note that was released under Freedom of Information, and I'll quote from that briefing note: "Lower investor demand for housing may dampen price cyclicality and limit speculative demand as it shifts incentives away from capital gains and towards rental income." Is that still the view of the bank?
Well, that's a comment basically that we would make in the context of our financial stability mandate, and when price increases, as I said earlier, when price increases in housing take off, the investors tend to be the first ones in, and when prices aren't increasing or they're decreasing, then the focus naturally of investors is more on the rental side.
So then, in terms of financial system risk, would reducing speculative demand for housing lower the financial system risk?
It could. If there was less speculative activity on the upside, then it would tend to limit the swings in housing and the potential. I say potential because we don't see it at the moment, but the potential impact then on other people trying to get into the market, exacerbating the housing swing.
Senator, you're almost at time.
But that's time, is it?
Almost.
All right, well, I'll just quickly go to another matter, which is the fact that you're currently looking at corporate pricing behaviour. Your Assistant Governor Economic, Ms Hunter, gave a speech a little while ago saying you're going to have a look at how businesses have changed their pricing since COVID. And Ms Bullock, I do recall an exchange that we had early last year where you agreed with my suggestion that some firms in some sectors are using the cover of a significant rise in inflation and a lack of competition to boost their profits over and above what would be required to meet increases in their input costs. Is that part of what is driving you to have a look at corporate pricing, or as I would phrase it, whether corporations are price gouging?
No, that's again, that's a matter for the ACCC. What we're interested in is how this might impact the flow through to inflation of price increases. So we're very much interested in it from an analytical perspective, not from a competition perspective.
All right. Will you be working with the ACCC on this body of work?
We work with the ACCC on a lot of things, but this isn't necessarily a matter about ACCC's competition concerns. This is an analytical matter about what the data tell us about corporate margins and about the ability of firms to pass on cost increases. Are margins decreasing? Are margins increasing? And it's an analytical, data-driven piece of work. The source of what is driving the change in margins, whether it's lack of competition, that is a matter for the ACCC.
All right, thank you. And look, just I will come back to that in my next tranche of questions, but just to tie off this tranche and back on the capital gains tax discount, you have been invited by the Senate Select Committee that's inquiring into the capital gains tax discount to make a submission to that inquiry. Will you be doing that?
I'm not sure we will, Senator, but we'll discuss it.
All right.
Thank you, Senator. I'll go to Senator O'Neill.
Thank you very much, Chair. And thank you for being with us today in this unusual way, virtually. But I appreciate the evidence you've given this morning so far, and I'd like to go to the global outlook if I could. Australians understand that, you know, we're splendidly physically isolated, but we operate in a very significantly connected global market. So could you take me through what are some of the key risks to the global outlook?
There's a few, I suppose. There's still the issue of the US policy on trade and tariffs and so on. That still remains a risk, although I'd have to say that since April, when the tariffs were first announced, the risks there seem to have alleviated a little bit, primarily because, a couple of reasons. One, the tariffs didn't turn out to be as bad as initially thought, although they're still much higher than they were at the beginning of the year. Second reason, that a lot of countries, there was a concern that some countries would retaliate with their own tariffs. Largely, countries haven't. So that still remains a bit of a risk, because it does seem that tariffs can be used for all sorts of different things. The second thing is just general geopolitical risk and concerns about fragmented world economy. Obviously there are wars in some other countries, so these sorts of things can disrupt trade flows. They can cause fragmentation. So that's a risk. The other risk that's sort of a longer term risk more broadly is the issue offshore of increasing budget deficits of many countries. So there's increased defence spending, which is putting pressure on budgets. Certainly, if you look at any IMF publications, they would raise that as something that's of concern going into the future. The other risk, which sort of is more really for ourselves, is thinking about China, because China is such an important part of our trade relationships. It's 30% of our exports. So what happens in China is very important to us, and what we observe there is that the real estate market in China is still very much in the doldrums. That at the moment they're managing to offset that with growth in other areas, but there's still a risk to growth in China. I think that's something that's sort of at the top of our mind as well. Can you think of anything else to add to that, Chris?
Oh, one thing that I think is on the minds of many central bankers around the world is the valuation of asset prices. Quite elevated, I think, is how many would describe equity prices, and credit spreads are quite low. So markets have a relatively optimistic view of the future, whether it's through the productivity benefits that will come from AI or just generally benign conditions. So that could change for any number of different reasons. Now that may, if asset prices were to fall, that may just reflect some other shock that's affecting the economy. Whether it's an amplifier of such a shock is a big question. One thing that is giving people some comfort is, at least in equity markets, there's not a lot of leverage behind those positions that people have. So those can unwind without necessarily causing much damage to the economy. But there might be hidden pockets of leverage here and there. And one area people are focused on is private credit markets. Not so much in Australia because it's not such an important part of our financial system, but it has become increasingly important offshore, particularly in the US.
Certainly, the Corporations and Financial Services Committee has been discussing with ASIC private markets, and it's a very live conversation here in Australia. I'm heartened that you indicate that you think it's less of a risk nationally than it is internationally.
Yeah, I think it's a smaller share here than it is offshore. What I think has been focused on here by the relevant regulators, and ASIC in particular, is those that are operating here, that they have fulsome disclosure of their exposures and the nature of their products to investors, particularly investors that might have be less sophisticated than otherwise. So it's a protection of the investor, much more so than a concern for the financial system as a whole.
The other angle on that is, I think in Australia there is a tendency for the private credit to be heavily weighted towards real estate. So that's the other sort of wrinkle here.
Thank you. Thank you for the sort of overarching commentary there. Geopolitically, you know, sitting in Asia with 30% of Australian exports head for the Chinese economy, you mentioned concerns there about real estate. What else, with regard to the Chinese economy, could potentially impact Australia?
Again, it depends a little bit on what happens with world trade, but one of the main concerns with the tariffs was that if it impacted China quite substantially with very high tariffs, one possibility is that it would result in a decline in Chinese manufacturing. That hasn't really happened. What's tended to happen is that trade has managed to flow to other places. So the reason that's important is that we export a lot of iron ore and coal, obviously, to China, and the steel industry there is very important therefore. But what we'd observe is that the iron ore price really hasn't done much. So we're not seeing signs yet that that's impacting us, but that's the risk that if the trade, the restrictions on trade and the tariffs end up impacting China quite heavily, then that will impact steel manufacture in China and also, therefore, ultimately us.
We need to continue to watch that. I guess with regard to the Chinese economy, how are the authorities there responding to the risks in their economy? You've mentioned tariffs, but how are they responding to the housing situation? Is there anything else that we should be alert to?
Well, the housing situation is that there's an excess supply of housing over there. They have obviously some issues with developers over there. I think the Chinese authorities, my view is what they're doing is they're not bailing out developers, but they are sticking to their view that developers have to be responsible for their own business, and they're not bailing them out. What they are doing is they have loosened monetary policy. I think they characterise monetary policy as mildly accommodative over there now. Is that right, Chris?
Yeah.
And the federal government have been, the government over there have been looking to support demand in other ways, and in particular through consumption. They have been subsidising, for example, upgrades of household equipment for households. So they have been trying to push a bit of consumption as well to add to demand. So they are leaning in where they can, I think, on monetary policy and fiscal policy. But in terms of the real estate market, I think that's just going to remain in the doldrums for some time, because I don't think there is any appetite over there to, in any sense, bail out the real estate market.
Okay, so in terms of your assessment, by comparison to April, where the tariffs were of concern, there's been some settling of that, and through the use of monetary and fiscal policy, the Chinese economy is more or less stable. Is that a fair characterisation?
I think we think that they will meet their target of around about 5% growth. As I said, they are finding markets for their goods, even though their trade with their exports to the US have declined. They're finding other markets for those. There is a risk in all of this, and this is back to the trade situation. There is a risk in all of this that the markets they find for their goods, those markets might respond by restricting trade if they feel it's for example, disadvantaging their own industries. So there is still a little bit of risk in this, but at the moment, the world trade seems to be adjusting.
So in your view, Ms Bullock, as the Governor of the Reserve Bank, is it your view that Australia is actually well placed to manage the global risks that you've just articulated here?
I think we are. We're in a situation where we have a cash rate of 3.6%, so it's not down at the lower bound. So if things take a bad turn in the world economy, then and that has implications for us, then we've got room to move on monetary policy. But at the moment, I think the world economy has somewhat defied forecasters, and indeed a lot of forecasters that really lowered their growth rates for the world economy back in sort of April, May. I think forecasts are now back where they were. I think there's a feeling, though, more generally, that this is a bit of a slow burn. Ultimately, restricting trade, high tariffs, these things aren't good for long-term growth in the world economy. So even if you might see a very, very sharp reaction, growth is going to be lower than it otherwise would have been in the absence of these sorts of restrictions.
Thank you very much. That's quite helpful. Can I go to one of the core mandates that you have made very clear in your answers to Senator McKim this morning are your entire focus, unemployment and matters related to that, and inflation. As a Labor senator, obviously everyone having a job is a very, very important matter to me. So I want to understand just the historical frame before I ask a couple of questions. Could you give me a sense of the current labour market indicators for unemployment and participation, and put them in a historical frame of like where are we right now and what has preceded this?
The unemployment rate at 4.3%, that's lower than it's been. If you look back, it was sort of around 2% in the 1960s and 1970s, but basically that's historically a pretty low level. It was lower during the pandemic when it hit 3.5%, but the labour market at that point was really tight. There was a lot of vacancies and there was a lot of pressure. Participation rates and employment population ratios, they've dipped down a little bit in the last couple of months, but they're pretty much at historic highs. And the underemployment rate, which is sort of the concept that people are employed but they feel they might like a little bit more work, that's at pretty much historic lows as well. So the labour market's in a pretty good position at the moment.
So, that's jobs for people, and that changes lives in every possible way, not just in terms of the money that comes into the house, but in terms of a sense of connection and stability for the whole society. There have been a range of views expressed. Could I ask for your beliefs about success in getting inflation down while maintaining the strength of the labour market that you've just recorded for us?
Well, that's, and I've said this a number of times, that's been the aim of the board, is to try and bring inflation back down to the target without sacrificing a lot of the gains we've had in the employment market. We do need to balance these two things, and most of the time we can. And so that's been the explicit aim of the board. And I think, an unemployment rate of 4.3%, I think we still think the labour market's a little bit tight and it might ease a little bit more. That's still a very, very good outcome. It certainly contrasts very well with some countries overseas which have seen they've brought inflation down, but they've ended up with much higher unemployment rates than we have.
And the flow and effects of that are very real. If people haven't got a job, we all know that that's not a great place to be. Thank you very much, Chair.
Thank you, Senator Hume.
Thank you, Chair. I actually wanted to continue on this theme of the inherent frictions in that dual mandate, Governor. There was an article, and this is the context, I suppose, that I want to ask my questions in. There was an article about a year ago or so given by the I was going to say the Assistant Governor, but it wasn't. It was by Mr Hauser. So, and he said in that article, and this was to John Keogh, it was in the AFR, and he was talking about that dual mandate, and he said part of our strategy is to test that full employment, not uncritically, because we need to make sure that we bring inflation down, but if there's an opportunity to capture those gains on the employment side, I think we have an obligation to do it. That's what the Treasurer, that's what the Parliament, that's what the public of Australia have asked us to do. I am unapologetic about that. Could it go wrong? All central banks face uncertainty, but that is our strategy, and I think that that has just been reiterated by you, Ms Bullock. And I want to understand this idea, because obviously this was sort of came to the fore. Seems to have been tested to see how low the unemployment rate can stay following that major revision to the Statement of Conduct of Monetary Policy that was agreed between the Treasurer and the Bank following the government's election. So I just want to understand whether that is more rhetoric or whether it is strategy. Can you tell me in a practical sense what it means? How that change to the Statement of the Conduct of Monetary Policy has changed the conduct of monetary policy? Has there been more focus on keeping unemployment low as opposed to keeping inflation low?
No.
Okay, thank you. You mentioned to Senator Patterson that the most recent couple of inflation prints and your most recent forecast, the headline inflation returning to the band was temporary. It's dropped back into the band due to the energy rebates. Now it's popped back out again, and it won't return to the targeted time during the forecast horizon. So would you say that so far during this post-pandemic cycle, you are yet to return inflation sustainably to target, which I know is your objective, I should say, noting that you had your own quite emphatic statement during your most recent press conference that you're targeting that midpoint of 2.5%.
So we're obliged to target the midpoint. That's the new arrangement. We always had, but we still have a band, and the concept is that it doesn't have to literally be at the midpoint. That's a very difficult thing to achieve. So the band is a good thing to sort of think as a range around the midpoint. Have we got it sustainably back in the band and to the midpoint? As yet, no, I would have to say we haven't. But that's the whole point of what the board is grappling with. We've lowered interest rates 3 times. We've got a whole set of data. We use those data to project forward what we think the future path of inflation will be. And where we think that, if we think, for example, that a particular interest rate setting is needed to deliver that, then that's what the board will do. And that's been the whole, when interest rates were going up and when they've been coming down briefly, that is the whole purpose of the board, to try and bring it back sustainably. Have we done it yet? No, we haven't done it yet. So we need to keep working on this.
Okay. So trimmed mean inflation has strictly been greater than that target midpoint now for 16 quarters in a row. And it's risen in each of the last 3 months. And your latest forecasts have it remaining strictly greater than that midpoint for another 2 years. So that would bring the length of time that inflation has spent above target, knowing that target is that midpoint, for more than 6 years. 6 years.
So a couple of points here. First of all, we don't target trim mean, we target headline. The reason we focus on trim mean is because, as I said earlier, because of all these rebates for energy, the headline number has been moving around a lot. We think that trim mean gives you a better idea of the underlying pulse. Trim mean inflation in the June quarter of 2025 was 2.7%. It popped up for a variety of reasons in the September quarter. But what we would say is that some of that we think is temporary. And so the quarterly number, even though the annual number will stay up because it's got this big number in it, until that number drops out, all the year-ended numbers are going to remain up until that big number drops out. The quarterly numbers we expect will start to decline a bit from that quarterly number in September. So you're right that inflation has been out of target for a number of years. That's very, very true. And that's why the board has always said they want to get it back, but they want to get it back in a reasonable time. And the reason for that is inflation expectations. And so far, we've managed to keep inflation expectations anchored at around about 2.5%. And the longer it stays outside or above that, or it's outside the band, then the more risk there is of inflation expectations moving. So that's why the board is looking very hard at these recent numbers to determine the extent to which it's temporary or the extent to which it's giving us a signal that there's some more permanent inflation pressures in the economy. If a lot of it's temporary, we can look through it and we will start to see the trend back down towards the midpoint again. If it's not and it's more persistent, and we'll get more information on this in the next couple of months, then that's suggesting it to us that the demand pressures are persisting, and that might have implications for the future path of monetary policy. It will have implications for the future path of monetary policy.
However, Governor, your forecasts have inflation staying outside of that midpoint until 2027. And given that inflation has failed to sustainably be back at target any time in the past 4 years and isn't expected to come back into that band in the next 2 years, would you say on balance that this experiment has been a failure? I know that what certainly Mr Hauser said, that he was, could it go wrong? All central banks have to face uncertainty, but that is the strategy. Do you think that it has gone wrong?
Absolutely not. I think we've got a situation where we've got an unemployment rate of 4.3%, and we've got an inflation rate at 3.2 at the moment, admittedly, but forecast to come back down into the band. And so I think the strategy still is alive.
So I want to ask about that unemployment rate, and I understand that obviously all of this hinges on that unemployment rate that's consistent with full employment. I know you mentioned before the NAIRU, and that it isn't the only measure, but it is a very good indicator. I have with me a document that was released under FOI that suggests that the RBA's staff views of the NAIRU is around 4.7%. And yet you've just said yourself that unemployment is currently now at 4.3%. And that you, so I want to understand sort of, first of all, have you personally or has the RBA formally updated its view on the NAIRU?
The RBA's view on the NAIRU is as we discuss in the Statement on the Conduct of Monetary Policy. I don't know what document you're looking at, but I suspect it's a document that basically says these are what the models are telling us about the NAIRU. The models aren't the only thing that we take into account when we look at what we think the NAIRU might be. But as I said earlier, there's lots of things we look at, and the pure model versions of the NAIRU have the NAIRU for what it's worth higher. Staff judgment is that the NAIRU probably isn't that high, but again, it's about judgment. So the current judgment of the staff is that it's not that high. It's a bit lower than that.
Right. Okay. So the document I have in front of me, and I'm sorry, I would have given it to you had you have been here, but it says NAIRU and output gap update December quarter 2024, and it says the model average NAIRU estimate decreased from 4.75% at the time of February statement of monetary policy to 4.69%. That was where I got the 4.7.
Yes, it's the models.
That's the model. Okay. So given inflation is now, my last question, Chair. So given inflation is now rising again with unemployment at around 4.3, doesn't it suggest that the NAIRU might be closer to that of that staff view than the recent RBA board decisions imply?
No, the staff view has always been that the NAIRU is a bit lower than those model estimates, as they have, I think, outlined in the statement on monetary policy. There has been an active debate, and we have been actively challenged by many people to say your estimates of what an unemployment rate can be sustained with low and stable inflation are too high. So we have actively challenged ourselves on that. These estimates are inherently uncertain. So what I would say is that what we've always said is that we still think the labour market is a little bit tight. And that, if you want to read that in terms of NAIRU, that suggests the unemployment rate at 4.3 is a little bit below what the NAIRU is, but you can't observe the NAIRU. All we can do really is observe where it pops out, which is inflation.
Okay, thank you, Chair.
Thank you. I might, is there another coalition? Okay, who? Senator Canavan. So just so that everyone knows, we're doing 10-minute blocks. So we'll come to you, and then Senator Roberts, and then we'll come back to the coalition.
All right,
yep.
I'll be pretty brief. Thank you, Governor. I just wanted to ask about Japanese bond markets. You, I'm sure, have seen a significant increase in Japanese bond yields to levels that haven't been seen since the global financial crisis. I wonder if you could let us know what your thoughts are in the implications of that for Australian financial markets.
Ask to Dr. Kent.
Yeah, sure. I mean, the fact that yields in Japanese bond markets have been going up in part is a good news story for Japan, because they had long suffered from deflation and then very low inflation, and they have been trying to bring inflation sustainably to their target of 2%. And what markets are doing is looking at recent outcomes in Japan, including on inflation, and saying that looks to be coming our way. And so that's an environment where nominal yields on government bonds should be moving higher. And again, that's a good news story from that perspective. The other thing that's happening at the moment is they have fairly high public debt, and they are pursuing further fiscal stimulus. And so bond markets are reacting to a government that will need to borrow more and saying, well, we're going to push yields up a bit. In terms of its effect here, Japan's an important market, not just in terms of their government bonds, but the Japanese investor has significant holdings around the globe. And so if they're being offered better bond returns by investing at home in Japan, that means at the margin there will be upward pressure on yields elsewhere, including here in Australia. I'm not sure that it has any particularly strong implications. At the margin, that should put a bit of upward pressure on the yen. Downward pressure on the Aussie dollar at the margin.
Okay. I'm a little surprised you don't think it has much implication for ourselves. there's a pretty strong commentary around the world that a lot of perhaps the asset price inflation you mentioned earlier we've seen in Western markets since the global financial crisis is or has been sustained by the so-called carry trade, the ability to borrow in yen at very, very low interest rates and convert those to other currencies and invest in higher interest rates. That seems to be unwinding here. So just what is your thought? Are you suggesting that the carry trade has no real implications for Australian investment?
No, I mean,
hang on, I just haven't finished my question, sorry. Australian investment or asset prices here in Australia?
No, I don't mean to say that at all. Indeed, I was sort of saying the Japanese are significant investors offshore, and one of the reasons for that is for a long time they've had very low returns back at home in Japan. So as those returns go up in Japan, they will naturally invest more of their funds back at home and less offshore.
But this is not.
The yen appreciating is at the margin, a slight unwinding of the carry trade. Whether it completely reverses is another question entirely. And I don't think it's the only reason why asset prices are elevated. Indeed,
hang on, I didn't say that. And I just trying to understand here, are you only interpreting this through the lens of Japanese investors? Because, I mean, my understanding is that overseas and institutional investors can do the carry trade too. I mean,
sure.
they can borrow in yen and convert and swap currencies and invest in another currency or another bond market. So that presumably has a much bigger impact when it's globalised, so to speak, not just the impact of Japanese investors. I'm just wondering, are you analysing that from that perspective or only from the perspective of the Japanese investor?
No, I think I'm saying much of what you're saying. At the margin, the Japanese market will be slightly more generous returns, so there'll be more money in net flowing towards Japan and less into other asset markets, and that will have a knock-on effect, including here. And the broader story of a tightening in Japanese monetary policy should, at the margin, contribute to higher yields and therefore lower valuations of things like equity prices globally. But at the same time, you've got the US Fed looking like, at least according to market expectations, of having further easing. So there are cross currents here moving in different directions for global asset markets.
I mean, as we've seen this unwind in the last few months, we've seen a significant increase in Australian government bond yields. I checked this morning and 10-year yields up to 4.6, just over 4.6, up from 4.1 only a month or so ago. Do you see any implications here at the end? If the carry trade does end, will that put stress on the Australian government's ability to borrow money at lower rates and therefore have implications potentially for what we can do regarding fiscal policy and monetary policy without creating inflationary pressures?
Look, I would agree that what's happened in Japan in recent times has had a marginal effect on our bond markets in the direction that you've suggested. But we can run, because we have a flexible exchange rate, very independent monetary policy. And I would think a lot of what's happening to bond yields is driven by expectations of monetary policy here in Australia. And the market expectation has moved from a few months ago to the possibility of a couple more cuts in the cash rate of 25 basis points a time to no longer pricing in cuts and some small chance in the market's minds of a rate rise next year. So that's probably having the bigger effect on our bond yields than what's happening in Japan. But Japan is having some effect.
Right. You mentioned earlier that, I thought you mentioned that equity prices seem overvalued. Is that, I just can't remember the exact words you used, but I thought there was some suggestion.
Somewhat elevated, I think,
somewhat
would be
elevated,
the
right.
euphemism.
Yes,
but,
okay. Okay. I'm just wondering then, to the extent that we see higher yields here in Australia, higher interest rates, is that a concern then, that level of slight elevation might unwind?
I'm not sure it's a concern as much as I think slightly higher yields here of late at the margin should be weighing on Australian equities a little bit more than they are offshore, where yields potentially heading the other way. As I said, the Fed, in the market's mind, is likely to ease further. And if that happens, that will support valuations in equity markets there at the margin. And what's happening here is heading a little bit in the other direction. So I don't know that it's a concern, it's just helping potentially to explain some of these market moves.
Right. What about the property sector? How much have you ever looked at to what extent our banks, the finance for our banks, and therefore what they can lend at what rates for real estate here in Australia are impacted by these global flows? I'm a little sorry. I don't know. I don't follow this as closely as you, but I see a lot of commentary about the carry trade, and I'm a bit surprised you hadn't mentioned it yet this morning. And I'm just trying to understand. You seem to think that this has almost very little, or only marginal, in your words, implications for lending in Australia. Is that your position?
Yeah, fairly minimal effect. It has some effect on banks' funding costs. I think that it's quite tricky to think through, but because we have a floating exchange rate, essentially it means Australian banks pay rates that are largely determined by Australian conditions, including on monetary policy. So even though they borrow some of their funds offshore in US markets, for example, they bring those US dollars home and ostensibly they're paying Aussie dollar interest rates for almost all of their funding.
Have you ever looked at this and seen how much of those lending flows, if they are from the US, are originating in yen-denominated markets?
Not so much. I mean, they raise funds in the US, but I don't have good visibility on exactly where all those investors are coming from, and some of them would be coming from offshore. They also raise funds in Europe, and those are the primary destinations where they're obtaining funding. But again, what they're doing is swapping those the foreign exchange funding they raise in those markets into Aussie dollars to fund some of their Aussie dollar lending, and they're paying Aussie dollar interest rates on those funds, and someone else is paying those foreign interest rates.
Okay, thank you, Chair.
Thank you. Senator Roberts.
Thank you, Chair. Thank you for appearing again, Governor. Look, I'm concerned about government spending, but I'll ask a few questions before getting onto that directly. In October, you said to me, quote, "Well, all the evidence we have is that inflationary expectations have remained reasonably anchored at around 2.5%. I know you went to this with Senator Hume's question. That's what has made it possible, I think, to bring inflation back down towards the target range so that we're now under 3% and heading towards 2.5%, and to maintain a relatively healthy labour market. You couldn't achieve that without anchored inflation expectations." That's the end of the quote. With the Consumer Price Index, now the headline rate at 3.8% in the year to October, and trim mean up 3.3%, it certainly doesn't appear that we're heading to 2.5% anymore. Do you still have no evidence that inflation expectations are above 2.5%?
What we've observed is what we usually observe is that the very short-term inflation expectations rise, but at the moment we're still seeing that the longer-term inflation expectations are remaining reasonably anchored. But you raise a very relevant point, and it's a risk, and it's something the board is very focused on.
Thank you. What does it say about the credibility of the Reserve Bank, or more likely the credibility of government in terms of the government's spending if inflation rears its head again?
I think credibility is demonstrated by where inflation expectations are. Inflation expectations in the long term remain anchored, which I think says a lot about the credibility of the central bank.
Thank you. In 2026, are more families going to be pushed to the brink and paying more on their mortgages because you cut interest rates too early while this government attempted to jawbone and pressure you into doing it?
We've never been under any political pressure, Senator. The board has done what the board has thought was the right thing to do. We thought we were moderately restrictive. We made a conscious decision not to go up as high as some other countries. Our projections still see inflation coming back down, but obviously we're alert to the possibility that there might be inflation pressures building, and the board will respond accordingly.
Do you expect, under current government strategies and policies, to be having to deal with the government again on this, and be it?
We take what the government is doing as given, and that is in our forecast, Senator.
I want to go to federal budget discipline, their credit rating and mortgage rates. The banks are implicitly guaranteed by the government's AAA credit rating, which allows them to borrow cheaply. If the federal government was to suffer a significant credit rating downgrade below its AAA, could that imply higher borrowing costs on the banks and a wider spread between the going mortgage rate and the Reserve Bank cash rate? Could interest rates rise, in other words, charged by the banks?
The Australian banks aren't only underpinned by the government, Senator, they're underpinned by the fact that they are very, very strong, unquestionably strong, according to the language. They have strong capital, strong buffers, low arrears rates. They're rated well because they are very strong financial institutions.
Thank you. I appreciate your clear answers. Nonetheless, if the federal government doesn't get their spending under control and they're given a lower credit rating, what people pay on a mortgage could actually go up without the Reserve Bank raising rates. Is that right?
It could possibly tighten financial conditions, and those are the sorts of things that the Monetary Policy Board would take into account in setting the cash rate. The cash rate, financial conditions can vary for similar cash rates. Cash rate at a particular level now isn't necessarily the same tightness in financial conditions as the same cash rate in the past. We have to take into account financial conditions.
Thank you. Just a quick one to tidy up my understanding of where you get your figures. The RBA, as I understand it, does a lot of listening right through the community. That's correct, isn't it?
We have a very extensive liaison program, Senator, yes.
Yeah. What are the sources of your inflation rate and the unemployment rate? Is it many factors? ABS, for example. Who else would be involved? And then
well, the inflation rate is the CPI published by the Australian Bureau of Statistics, and the unemployment rate is the same.
Thank you. The unemployment rate is just over 4.4%. What is the? Do you have any understanding of what the actual? How many people does that translate into being unemployed right now in Australia?
I'd have to get back to you on that in terms of the actual numbers.
It's just a straight calculation, right? Arithmetic.
Well, it depends on the labour force and who's in the market. So I don't know what the number is, Senator. I'll have to come back to you.
So that varies month to month, of course. My concern is that the actual number unemployed may be far greater than what is indicated by the unemployment rate, because as I understand it, the definition, and I'm looking for guidance here, is that anyone who's employed or paid work for 1 hour or more in a week is counted as employed.
Correct.
Is there any consideration of underemployment in your deliberations?
Yes, we consider underemployment, Senator, and that's a rate that we calculate, and basically that captures people who are employed but would like more hours. So
what is your level of confidence in the accuracy of the unemployment rate and the underemployment rate?
We're pretty confident that the ABS does a very good job of calculating these numbers.
Is one hour per week employed really employed? I know it's underemployed.
That's the definition, Senator, but there are other, as I said earlier, for what it measures, we're confident they measure it well, but that's why we take into account a lot of different indicators, including things like vacancies, including things like job ads, including things like how many people actually have a job but would like more hours. These are all things that we consider as well.
Okay, thank you. Thank you, Chair.
Thank you, Senator. Senator Bragg.
Yeah, look, thanks very much. I wanted to ask you a few questions about the housing system. So, effectively, if you go back 10 years or even 5 years, we were getting more like 200,000 houses a year on average. We got as high as 220,000 new dwellings, I think in 2017. We're looking at about 170,000 this year. Where do you think we're heading on supply?
Well, I'm not sure I'm qualified to talk about supply of housing, Senator. All I can say on this is that the government, certainly where I sit in New South Wales, the government is extremely focused on supply. And one of the issues about supply has been regulation and development. Whenever we go out in our liaison programs and we talk particularly developers in New South Wales, they all say it is so difficult to get high density housing through. So my only comment would be that yes, we have a structural undersupply of housing and we've had it for many years. It's been a chronic underbuild. There's obviously regulation and development, so on, that's getting in the way of this. The government's recognised it. And if you just look at the numbers so far, according to targets, it doesn't look like we're going to get there, quite frankly. But that's not to say that, that the governments haven't focused on it and think it needs to be addressed.
Okay, so you obviously look at the overall housing system and noting that we are not going to get there from a housing target perspective, what impact do these, if any, Commonwealth demand side measures have, do you think, on the pricing, on the prices people are having to pay, noting that we are in a supply constrained environment?
So any policies that add to demand in a supply constrained environment obviously will find its way into prices, Senator. I have no particular insights on amounts. Other people have done their own calculations of those sorts of things, but by definition, yes.
Okay, so in relation to the 5% deposit scheme, last time you appeared at this committee, you said that, I don't want to verbal you, Governor, you said that prices might be a bit higher than otherwise were. I'm not going to ask you the same question, don't worry. I'm sure the answer will be the same. I guess we now have found out that this policy was announced without there being any modelling undertaken by the Treasury. The Treasury's evidence was that they did do modelling, but that modelling occurred after the announcement of the policy. Were you consulted, or was the bank consulted in the process of Treasury doing modelling on this scheme and the price impacts?
I don't believe so.
You don't think you were consulted?
I don't believe so, but I'll take it on notice and I'll ask the relevant people.
Okay. The October data from Catality and from SQM and others has shown direct links between the 5% deposit scheme coming in and, in their words, adding to higher prices at the entry-level point of the market. Is that something that you agree with? Does your own data stack that up?
Well, we wouldn't do any independent analysis of that. We would usually use Cotality's data.
Okay, so you think Cotality is a reasonable data house?
I think they're a reasonable data house.
Look, I think we've also seen we see the lending data, and that suggests that there were a few extra first home buyers coming in October once this scheme kicked into being in its new form. And there was what you did notice was a slight increase in the average value of the loans going to first home buyers. So that's consistent with that. But translating that into a price effect is another thing entirely.
Well, let me come to that, Dr. Kent. Cotality says, I'm going to quote them now for the record, the step up in growth rates also coincides with the expanded 5% deposit guarantee scheme going live on October 1, which is likely added to housing demand, especially around the lower to middle price points of the market, end quote. So it sounds like you think that's a reasonable assessment.
Yeah, we would think that's a reasonable assessment, and I think that's exactly what Chris is saying, that the lending data, although it doesn't go to prices, suggests that that's what's happening. There is a response of first home buyers.
Yeah, so the 5% deposit scheme changes have increased prices in the first month.
Well, what we have seen is, the data I have seen is suggests slightly increased average value of loan going to first home buyers.
That's not the same as
It's
price.
not the same as the price, but it would be consistent with that story.
Okay, so when you say average balance of the loan, you're talking about a 95% loan?
No, I'm just saying, we can see the number and value of first home buyer loans. The average value of a new loan going to a first home buyer has picked up.
And that could be that there's a higher loan to valuation ratio, or it could be that because there's no cap on the income of the first home buyers now, it could just be that there's some higher income people coming in.
Higher income people coming into the government scheme?
Yes, because the cap on income of the first home buyers was removed.
That's right.
So people who would have been constrained because they earned too much now could come in.
Yeah, so potentially that is then resulting in lower income earners with a higher LVR not being able to use the scheme.
No, they can still use the scheme.
But it might not be possible.
They can still get a loan up to 95% of the valuation of the property.
But it might not be possible under the new macroprudential tools. So have you been consulted on the new APRA macroprudential arrangements?
Yes.
You have been consulted, okay. And what was your input to that informal or behind-the-scenes consultation?
So the way the process works, Senator, is that we provide advice to APRA on the macroprudential environment, the macro-financial environment, potential financial stability risks. We don't tell APRA what to do. We tell them where we see the potential risks arising, and where we would highlight, it was back to an earlier conversation, is increased investor lending. And the concern is that if you end up with increasing riskier lending, and they can find themselves in high loan to valuation ratios or high debt to income ratios. So we advise them that there might be some pressures building. They're not substantial at the moment. And so that's the advice we provide to APRA, and then APRA go away and think how they want to think about that and what they might do.
Okay, and they announced that last week. So,
yes, correct.
So effectively, the position is that if you have a 6 times income to debt ratio, there will be, for owner-occupied or investor, you might find that you can no longer get finance. That's basically the position, isn't it?
Possibly, but the limits are nowhere near binding, Senator. The amount is 20% of the flow, so 20% of loans can go to high debt to income borrowers. So that's 20%, and the limits are nowhere near binding.
So
in aggregate, I think high debt to income lending at the moment is sort of still down the single figures, 6%, something like that.
But you think it's an important measure or not?
I think it's an important measure to have as a guardrail. It's preemptive. It's not binding at the moment, but it just cautions banks that to be careful in their high-risk lending because they will come up against these guardrails. It's a common technique also, or a common policy often used in overseas economies.
Okay. Well, is it a...
You can wind up.
I haven't really finished, so do you want to...
Yeah, so we've
got 5 minutes.
Yeah, if we can keep our questions tight, we'll try and, if you want to finish off, then we've got Senator Sharma and Senator McKim, who's just got 5 minutes. Then I think we can...
Okay, I probably only need 3 minutes.
Okay. All right, so are we... Senator Sharma? Off you go.
Okay, thank you. I'll try and keep it sharp.
Thanks.
Good morning. I just had some questions about the credit card surcharging review. So I understand that the banks announced that final decisions will be delayed until March 2026. Are any further extensions beyond that likely?
No.
So the decision will be announced and...
Decision will be announced in March.
Okay. And then in the November statement of the board, I noticed that that extension was described as being to allow appropriate time for additional information requests to be completed. Can I ask what additional information is being sought?
We've got 170 submissions to consider. A number of those submissions suggest to us, particularly on the data about issuer costs, were not complete. And so in the interests of making sure that people had an opportunity to provide us with what they thought we were missing, we've extended the time.
So that additional information is predominantly related to issuer costs?
Predominantly related to issuer costs, but others who are, with the extension, those that particularly wanted to put extra information with respect to the surcharging regime have an opportunity to do so too.
Okay. And is the board considering any significant changes from the options outlined in the July 2025 consultation paper?
The board hasn't come to any conclusions yet, Senator. The board has an open mind. It is considering all views, and I think that was indicated in the media release.
Okay. I noticed there was a mention in the board system minutes, sorry, the board payment system board minutes, that question was being looked at whether commercial credit cards should attract a higher interchange caps than consumer credit cards. Would you mind just explaining that consideration in a little more detail?
So at the moment, commercial credit cards are captured in the benchmarking and caps on all cards. Under the new proposal, there would be a hard cap of 0.3% on interchange, and that would include commercial credit cards. It's been put to us, and this is one place we're gathering more information, that that would have a very big impact on the commercial viability of commercial cards issued by banks, and so in particular competition with American Express, and so that's the issue we're looking at.
I'd also heard it put that these commercial credit cards are often used to basically provide cash flow facilities and credit to small and medium businesses. Have you had that concern put to you as well?
We've certainly heard that issue expressed to us, and that's sort of part of the thing we're considering. That, of course, isn't the only source of credit for small businesses. They can get credit in other areas, but that's certainly one of the concerns that has been expressed to us.
Okay, but it is a source of credit to small and medium businesses, that we do have evidence that businesses of that size are using commercial credit cards.
Yes, they do, and typically though they use it as a transactional account. They don't pay interest; they pay it off. It's very much it's a short-term funding.
Short-term cash flow facility. Okay. And then just with the recent changes to the RBA's powers that Parliament has passed and its ability to now regulate three-party schemes like American Express, but also new payment systems like Apple Pay and Google Pay, is the Payment System Board giving consideration to bringing these new or these other payment systems into the scope of this review, or how will that sort of competition issue be dealt with down the track?
No, the way I describe it is that, we need to address these things. If we were going to expand the review and incorporate everything with the new powers, we're looking at no changes to anything for a couple of years. This is going to be a big job thinking about these new payment systems. So the way I would describe it, Senator, is that the Payment System Board is looking for what can it do on a no regrets basis that it doesn't think would be overturned by considering the holistic ecosystem of all these other different payment systems, and so do some things that will be no regrets and then move on to the more holistic review and consider it there, because that will be a big job.
Okay, so do some things that are no regrets in March 2026 that will not alter the competitive landscape or not favour these newer platforms over the existing or incumbent ones. Okay, I saw there was mention also in the Payment System Board minutes of a public consultation exercise that would commence in mid-2026.
That's right.
Taking into account the payments regulatory issues that extend beyond the review of the merchant card payment costs and surcharging. So what will that review or the public consultation exercise seek to capture?
Well, it was just what we were talking about. It's about the new legislation giving us powers to regulate parties in the payment system that currently are beyond our regulatory powers. And the consultation will be looking at some of the areas that people have already put to us that they would like addressed and asking people to prioritise where we think we should be focusing our efforts.
But if I, sorry, just to finalise here, if I understand you correctly, although that public consultation exercise will begin in the middle of next year, you don't expect to be making any significant further changes beyond the March 2026 changes for a couple of years?
March no regrets changes, and then we will have to go into a process of doing the holistic review and figuring out what we might be trying to achieve there and how we will improve competition efficiency and safety in the context of holistic review. I say a couple of years because consultation processes, which we are obliged to follow, take time, Senator.
Yeah, no, that's fine. I just wanted to get a sense of the timeline, so a couple of years. Thank you. Thanks, Chair.
Thank you very much. So perhaps, Senator Bragg, if you want to finish off, and then we'll come to you, Senator, and we'll finish. Yep.
Look, I just finish off what we were talking about before. So in relation to the 95% loans, I mean, maybe it's a dumb question, but is it good to have a lot of these in the system?
They're high loan to valuation ratio loans. There are some of them out there. I think about 5% of loans at the moment are at high loan to valuation ratios. They are risky. But that's why, in the absence of this thing for first home buyers, normally if you take out a high loan to valuation ratio loan, you're expected to have mortgage insurance. And what this does, the government's proposal for first home buyers, is that they don't have to go and buy mortgage lenders insurance. The government effectively guarantees it. They're inherently more risky because, as you would understand, the more you borrow, the higher the loan to valuation ratio, then it doesn't take property prices far to fall before all of a sudden what you're owing is worth more than the asset that's backing it. At the moment, this sort of concept of property prices that are worth less than the loans, there's practically none of them at the moment. I mean, we occasionally have graphs on this in the Financial Stability Review if you're interested, but because of the rise in property prices, practically no one is underwater in terms of their loan to valuation ratios. But the higher the loan to valuation ratio is, yes, the more risk there potentially is in the system.
Okay, well, just finally then, I want to just get you on the record on the mesh between the APRA macroprudential rules and the 5% scheme. Because the way I look at it is, well, if APRA is going to reduce the number of these loans, by definition, at the same time that the government is pushing these 95% loans, wouldn't it be the case that higher income earners could actually stay in the 5% scheme, but lower income earners with fewer assets, lower incomes, could actually be squeezed out of the program because of the macroprudential rules?
But I come back again to my initial point, Senator, these aren't binding. There's actually headroom for banks, so there's no sense in which APRA's imposed these things and all of a sudden people who thought they could get loans couldn't. The banks have headroom here. It's not binding.
Thank you. Senator McKim.
Thanks, Ms Bullock. We spoke earlier about the spike in investor credit during the September quarter, an eye-watering $40 billion in credit issued to property investors in just 3 months. It's a matter of fact that that occurred just before the government's 5% deposit scheme started, but after that 5% deposit scheme was announced. You said when we spoke about this earlier that investors are often the first in at this stage of a property cycle where prices are starting to increase. Do you think that property investors were rushing back into the market to capitalise on expected price rises that were generated by the government's 5% deposit scheme?
I couldn't attribute it to the 5% deposit scheme, but I would say that what we observe with investors is that when interest rates start to come down and they think property prices are going up, you usually see investors respond more quickly, yes.
So you're comfortable to say that you think investors were anticipating a rise in price, you're just not comfortable to attribute that to a particular policy, is that fair?
Yeah, I think that's fair. I think that's what investors tend to do.
All right, thanks. Well, ABS data shows that housing was the biggest contributor to the higher than expected inflation rate in the last quarter. So housing costs are critical to what you say your mandate is, are they not?
Yes, the two costs that go into that are rent and building materials costs. Effectively, the cost of building a new housing. It's not house prices.
No, I understand. Sorry, I didn't mean to talk across you there, Ms Bullock. I thought you were finished. No, thank you. And I understand that we're talking about rents and construction costs in terms of the housing elements of the CPI basket. And I understand a lot goes into housing costs, but I go back again to the tax concessions enjoyed by property investors in Australia, and in particular the capital gains tax discount. And I'm struggling to understand why the RBA wouldn't be doing some work to try and disaggregate all of the factors that impact on housing costs, because the CGT discount is a demand-side policy that exists from government, and it would be Economics 101 to assume that that policy setting is impacting on housing prices and impacting on demand for things like housing construction. So isn't the CGT discount relevant to what you say your mandate is, because it impacts on, for example, demand for housing construction, which, as you've just accepted, is a core part of the CPI basket, and therefore what you say your mandate is around inflation and interest rates. So why is the RBA not doing work to understand those factors?
We understand that the taxation system broadly has implications for the way people invest, including in the way people invest in housing. It is not our job to forensically examine individual taxation policies and advocate to government to change them. We take government policies as given and we look at how they impact the monetary policy transmission mechanism and the potential impacts on inflation and unemployment.
All right, thank you. But if the capital gains tax discount is a given, as you say, and you take it as a given, and by the way, I have no quarrel with that. I have a quarrel with the policy setting, I should be clear. I have no quarrel with you accepting it as a given. But wouldn't you want to know the extent to which that is driving an increase in demand for things like construction of houses, because that is directly relevant to inflation and therefore your mandate? I'm not asking you to advocate for change, as you've just implied. You've previously called for a review. Sorry, this is not under your leadership, Ms Bullock, but the RBA has previously called for a review of investor tax breaks. I understand that's about as far as the RBA could go, but you're not prepared to do that now. And when I've asked you why not, you've said because you haven't done the work to inform that. So again, I ask you, why are you not doing the work to understand the role that tax concessions like the capital gains tax play when they do stimulate demand, which flows through to increased demand for housing construction costs, which is totally germane to what you say your mandate is?
So have you already pointed out, Senator, we've already done a lot of work on it, and I guess the question is there anything to be added by continuing to prioritise work on that particular issue as opposed to many multitudes of other issues that we've got to deal with? We've done a lot of work on it, you've already pointed to it, and I guess, you know, yes, we are interested in the housing market, we're doing work generally on it, but focusing on the particular issue that you want us to focus on, we've got to weigh that up against all the other things that we've got to focus on, given that we've already done a whole lot of work on it in the past.
Moreover, Senator, it hasn't. The tax system here hasn't changed in regards to capital gains tax for some time, so it won't have changed the sort of dynamics in the market of late. If it was to change, then yes, I think an argument could be made that we'd want to think about how that's going to affect our forecast. But given it hasn't changed in many years, it's not driving the dynamics. But we are looking very carefully at all of the things that affect demand and supply in the housing market and what's happening with investor demand and investor housing loans and so on. We do look over very carefully. But as the Governor suggested, we're not pulling apart the contributions of various things, and changes is what matters a lot here, and the system hasn't changed so much in recent times.
What we can do is, if we can keep inflation expectations anchored, we can try the bit that we can influence potentially is building costs, and if we keep inflation low and stable, that will anchor those as well.
Senator McKim, we're at...
So last question, yep, Chair, thanks. So, Dr Kent, thank you. I do understand that the CGT discount hasn't changed for a long time, and certainly not since the RBA called for a review into investment property tax settings in 2015. But my question remains, if the system hasn't changed, is it still the RBA's view that there is a case to review investment property tax settings?
We have no particular policy on that, but to Chris's earlier point, I think if we're going to do this, it's got to be done holistically. You know, picking one particular piece, I don't think is the way to do it. But we don't have a formal policy on it. That was in that submission was in response to a request for a committee on specific questions, which we gave a holistic review.
Okay. Thank you very much. Thank you to Ms Bullock and Dr Kent. We will now suspend for a short break and resume at, what time is it, 10:40? About 10:55. Thank you.
Thank you, Senators.
Thank you.
Thank you. Merry Christmas.
The committee welcomes Senator the Honourable Katie Gallagher, Minister for Finance, Minister for Women, Minister for the Public Service and Minister for Government Services, representing the Treasurer. Morning. And the committee welcomes representatives from the Department of Treasury Revenue Group. Do either of you have an opening statement?
I don't, no.
Ms Brown?
And I don't have an opening statement. The Secretary will appear tomorrow and she'll make a statement then.
Perfect, thank you. We'll go straight to questions. First off, Senator Patterson.
Thank you, Chair. Does Revenue Group have any visibility or knowledge of the $2.3 billion of unlawful payments by Treasury?
That's a question that's probably more directed to Fiscal Group. That's the
I will be
payments
asking
to
them
the
too,
states.
but I just want to know whether Revenue Group has had, whether you consulted on the issue, had involvement in mitigating or managing the issue.
There's been discussions at the board level, but probably more around executive board members rather than a Revenue Group issue.
Okay, all right, good. I will discuss that with them. I want to discuss the government's changes to superannuation taxation. Has Treasury done an assessment on the reduced revenue that will be collected as a result of the changes?
Yes, we have. The Treasurer included costings in his announcement on the 13th of October and they were produced by Treasury.
What is the reduced revenue?
I might, sorry, no, I haven't got the top of my head, sorry, but I might get Mr McKenna to maybe answer that question.
Ms Brown, could you just speak up a little bit? Everyone, it's hard to hear with the microphone.
Certainly, I'll try.
Shane Johnson, First Assistant Secretary, Tax Analysis Division. So the numbers are contained in the Treasurer's press release, but excluding the Listo change, the amended superannuation policy is expected to generate revenue of over $2 billion over its first year of operation. That's in 28-29. That's a little bit less than what was in the original formulation. I think the Treasurer indicated in the press release after that in 28-29 the new package would be around $2 billion in revenue collected. The previous one was just over 2.5, if that helps.
I've got. Do you have anything over the forwards or the medium term?
Over the medium term, so the package is expected to raise about $2 billion over the forward estimates compared to the previous gain of $6.2 billion. That was under the original policy. I think that was also in the media release. The main difference there, the main thing that's affecting that is the 1 year delay in the commencement.
And Senator, the details of the costing will be published fully in the MAEFO when it's released as a budget, as a measure.
Yeah, I've got information here, which I'm happy to be corrected on if it's wrong, that the PBO has estimated that the difference in the revenue is much greater than that, that it's to the tune of $15.5 billion, that the original policy would have collected $40.8 billion and that the revised policy will collect $25.3 billion. Are you familiar with those numbers?
Senator, that was in an article in the Financial Review today. We haven't seen the PBO report, so I don't think there's...
They're not numbers I'm aware of.
So Treasury hasn't run numbers over a longer period of time.
So is that over a 10-year? Is that what you're talking about? I haven't seen the PBO report, so it's hard to answer questions on it.
Sure, yep, but I'm just interested in whether it accords at all with any of the numbers that Treasury has considered.
Well, the numbers will be updated in the normal way, as you would expect through MyEFO, and you've had the evidence already this morning from Treasury officials about what the expected change in that would look like.
So I think I heard you say, earlier, Dr. Johnson, that the main revenue difference between the two versions of the tax is simply from the delayed start date of $2 billion. Is that right?
That's of those numbers over the forward estimates, yes.
Yeah. Has Treasury made any assumptions about behavioural change?
So anytime we do costings, we do look into potential behavioural changes, yes.
And what behavioural change do you anticipate people will make as a result of this?
So people can make a range of different behavioural changes to policies. On the original policy, one expectation was that people would, potentially take money out of superannuation and put it into assets outside of superannuation, for example. And so, with this change in policy, we would expect, for example, a reversal of that kind of change.
You don't think people will be taking money out of superannuation as a result of this, or fewer people will be?
We would expect that the impact would be less, yes.
Because the thresholds are different?
No, because of the change in the policy design.
From the unrealised taxation to only taxing realised gains?
Yes.
One of the other behavioural aspects, which I think is alluded to in the AFR article this morning that Ms Brown referenced, is that people may not sell assets within superannuation so that the gain is never realised. Is that a behavioural effect that you've modelled?
Look, so, I mean, those kind of things that, so I think in the article itself talks about potential things around housing. They're typically a very small proportion or a small proportion of assets in superannuation funds. In fact, the majority of funds actually have quite a diversified portfolio, and many factors will influence people when they will realise. I think in terms of the potential revenue still arises through the taxation of interest, dividends, and rents and other things in the system as well.
But correct me if I'm wrong. If I've got a self-managed super fund and I don't want to pay tax, then one of the ways that I can legally limit paying the tax is just by not selling assets within my fund.
So that would be the case on the current system.
Yeah, but it's one of the differences between the first version of this tax and the new version, isn't that not right?
It's a difference.
In both versions, it would depend on a disposal.
Exactly. But now, potentially, depending on how much assets I have in my superannuation, I'm facing a tax of up to 40%, which I didn't face before. That's a pretty powerful incentive to not sell an asset, isn't it?
So you're paying tax on the proportion of the gain that's above the thing, so it's not an additional 40% tax.
Yes, but I've never before been charged 40% in my SMSF, have I?
No, but
that's a new tax which is being introduced as a result of this change.
Is a new tax, but it's not a 40% additional tax.
Well, I mean, I think it's kind of dancing around it. Was there ever a headline 40% tax before in super?
There's not. Well, there's at the moment the additional tax isn't an additional 40% tax. That's all. Yeah.
Okay, but I mean, I feel like I'm talking at cross purposes here. Prior to the announcement of these changes, there was no taxation rate of 40% in superannuation, was there?
No.
And these changes will introduce for the first time 40% rate of tax, as you say, on above...
Only on gains that are above the threshold.
Sure, I'm not suggesting otherwise.
Which means that the effective rate of tax would be lower than the 40%.
Sure, but that's the headline rate, right?
That's the headline rate.
It's a headline rate applying to a very small proportion of people. The highest rate would only apply to a very small position.
Just not as concessional, Senator Patterson.
Yeah, and I'm not arguing that point, Minister. What I'm arguing is that people who face that headline rate, it's going to influence their behaviour, isn't it? Most people don't want to pay a 40% rate on their superannuation if they can legitimately avoid doing so, and one way they can legitimately avoid doing so is by not selling assets. Is that not right?
The tax will be payable on realisation.
Correct.
But if the asset earns income, rent, dividends, whatever,
sure,
that would also be taxed during the holding of the
Indeed.
life,
So,
yes.
so I'm just trying to understand to what extent has that behavioural response been factored into Treasury's costings?
So the costings considered the range of assets in the portfolio as part of coming up with the costing. And as Dr Johnson said, we did look at some behavioural assumptions. We would look at the more material behavioural assumptions, behaviours. Here, as Dr Johnson said, housing is a very small proportion of, if you're talking about housing, of the portfolio. Even real property is not a particularly significant part of the holdings. As Dr Johnson said, it is a diversified portfolio that most super funds hold. And then there's a range of reasons, not just tax, for why people will decide to dispose of
Sure.
assets.
Another reason why there might be a discrepancy between the first version of this tax arrangement and the latest version is that the first version contained no indexation of thresholds and this one does. What magnitude of the difference in revenue collected can be attributed to the change on indexation?
I think we'd have to take that on notice. We provide costing at an aggregate level. Of course, we consider all of the changes, but I'm not sure if we have at hand the breakdown between the impact of a year, the indexation, the change in tax rates, and exclusion of judges, for example.
Well, we were able to understand earlier from Dr Johnson that about $2 billion was attributed to the delay. So why can't, if we can break that down, why can't we break down other components?
We can break it down, and the Treasurer referenced the impact of the year. We just probably haven't got it at hand. And so
Dr Johnson, you don't have it available?
We have to take it on notice, I think.
And I also didn't mention the size. I just mentioned that the largest proportion. We know that because we know how much was in the original costing versus the new one. So.
Thank you. But over time, it will be a greater amount, won't it? Because of the lack of the indexation in this compared to the lack of indexation in the first policy. The revenue difference over time will be greater due to that factor.
That's true. The indexation will mean that the measure only applies to a smaller group.
And therefore, there'll be much less revenue collected.
That's right.
Okay. Thank you.
Well,
Less revenue collected.
Not much less?
Well, how about the officials have taken it on notice, Senator Patterson. I don't think, so you'll get your answer. I don't know that it's useful to put words into people's mouths.
Well, I'm giving them an opportunity to contradict me if they disagree, but I can't put words in anyone's mouth.
They've said less.
Yeah, and that's why I'm
and then you
seeking
said
to understand
much less,
Yeah.
and I'm saying they've taken it on notice so they can give you an accurate answer, which I think is reasonable.
Okay. Thank you, Minister. Thank you, Chair.
Thank you. Senator McKim?
Thanks, Chair. Good morning, folks, and good morning, Minister.
Morning. T-shirt, Senator McKim.
Indeed.
Nice.
Well spotted.
Yeah. Sort of like casual Friday estimates.
Anyway, on to perhaps more germane topics. And I wanted to ask some questions around the same issue Senator Patterson has been raising. I just want to get some common understanding about the foregone revenue from the changes to the super tax, to the government's super tax policy. So can I just ask about the impacts over the forward estimates in the budget? I'm going to put to you that the original policy position was going to raise $6.6 billion over the forward estimates, and that the revised package is going to raise just under $1 billion over the forward estimates, $987 million. Do you have a quarrel with those figures?
Mr. McKenna.
Brendan McKenna, Acting First Assistant Secretary, Retained Income and Super Division. So our estimate is that the new package will raise $2 billion over forward estimates. So it's a larger sum than
as opposed to and the original package 6.6.
6.2.
So 6.2 and $2 billion. And just to be clear,
And a year delay in that.
I'm sorry.
Sorry,
There's
it's
a
a year
delay.
delay.
I
Yeah.
understand that, Minister. Thanks. And that's accounting for the listo changes as well, Mr. McKenna, or is that without the listo changes?
That's with
With the listo.
with the listo.
It's with listo.
Oh, sorry.
Yeah. Both changes with the listo is $2 million.
Yep, that's correct. That's
$2 billion, sorry.
So the entirety of the changes, including listo, are going to cost the budget $4.2 billion over the forward estimates. Is that your evidence?
correct.
Yeah. All right. Thanks. So obviously, the 1% wealthiest people in this country are kind of jumping for joy with the changes that the Prime Minister insisted on to the Treasurer's original proposal. How would you characterise... So where are you going to find these savings, Minister? So what you've foregone a little over $4 billion. That's pretty close to the $5.6 billion you're cutting out of the public service.
We're not cutting out of the public service, but
You're
anyway,
not?
no.
You're not cutting money out of the public service? No.
Well, we've got a saving that we took to the election that we will be applying, but the figure you just raised then is attached to an article, I think, that was written about the 5% exercise that we've asked departments to undertake, which is not about cutting. But anyway, I digress from your questions.
Well, how are you going to find the savings? Like, what's...
Look, these this amended... the amendment to the budget, the adjustment to the budget will be done in my EFO. There's a lot of movements across my EFO, across government, and so it'll be dealt with in the normal way.
So you won't be able to, you won't be prepared to attribute any particular savings measure to this revenue shortfall?
Well, we will update the costings based on the government's decision, as you would expect and as we were required to. It will form one of many decisions in my EFO.
All right. There was a little bit of discussion earlier around the amount of property held by super funds. Do you disaggregate self-managed super funds from super funds more broadly when you're looking at these things?
We have got data on super funds. I can see whether that does, Senator. Just bear with me, either myself or Mr McKenna. We'll see whether that is in our notes. It's not in our data sheet. We've got it by, actually we've got the industry allocation by entity to more than 6 members.
Okay, could I ask, could you take on notice, please, whether you disaggregate that data and whether, when you're talking about property, do you disaggregate, for example, housing from other real property? I think Mr McKenna's shown
I can answer that one. We do not.
You
we
do
have
not?
real property.
You only have real property?
And whatever is in that, so that's going to be a range of things, including housing, but, you know, farms will be in there, business property could be in there as well, for example.
I mean, I guess my proposition is, and I'll be interested in your response to this, Minister, I mean, superannuation was designed actually by a Labor Treasurer, Mr Keating, to be a vehicle to provide for a dignified retirement for working Australians, and it's become far more, thanks mostly, I should add, to changes made by Liberal governments and Liberal Treasurers, become far more about estate planning and a vehicle for wealth accumulation. Would you accept that proposition?
Well, I certainly accept that Labor was the party that built superannuation, and it is about a dignified retirement, and ensuring people are able to have a dignified retirement but after decades of working. And I think this change that we are making responds, I think, you know, to what we've been seeing in terms of high balance accounts. It's still concessional. We accept that putting money away for your retirement is good, but if you have balances over 3 million or 10 million, then the concessionality will be lower.
But in fact, the changes that were made to Dr Chalmers' original proposition have been a change that has benefited super wealthy people who are using their self-managed super funds as a vehicle for estate planning and wealth accumulation, haven't they?
Well, we think it's the objective that we sought, which was to certainly raise some revenue to assist with budget repair, but also to have a less concessionality at balances over 3 million is still being achieved. We've responded to some feedback we've had through the process, including around indexation, and you know this government takes those matters into account. We think this is this approach delivers the outcome that we were seeking, which deals with some of the issues you raised, but still allows for concessionality in the super system.
All right. I guess the reason I'm raising these issues and the reason I've mentioned self-managed super funds is their capacity to access limited recourse borrowing, where there's a general prohibition on super funds from being able to borrow to fund investments, Minister, but that prohibition doesn't apply to self-managed super funds. What's the policy justification for that exemption? I mean, this is a genuine question because I have no idea why self-managed super funds are allowed to borrow to fund speculative investment.
I'll see whether Mr McKenna knows that. I know it has been considered from a policy perspective, usually in the context of financial stability, which is a matter for markets group, but it does relate to super funds. But you might might need to take it on notice.
Yeah, I mean, I believe the kind of general philosophy around that is that, you know, super is obviously there to fund retirements, and so we want kind of stable investments that and reliable investments in there, and that's why generally borrowing is quite limited. I guess where you've got a asset that you can borrow against, then the risk of I guess kind of losing and eating into the other assets of the fund are kind of taken away because it's secured by that asset. But we can take it on notice. And
Ms Brown, did you indicate these questions would be better asked to the Markets Group?
In the context of financial stability, that's Markets Group, and that was the context in which I've heard this discussion raised. But I think if we take it on notice, that's probably going to give you a better answer.
You're at 9 minutes, Senator McKim.
All right, thanks. Well, just maybe if I could ask one more on this, and I may well raise this again when Markets Group is in. But there's been a strong and consistent rise in self-managed super funds borrowing money to buy investment properties, and in particular investment housing. Is that something that you think could be contributing to the sort of hot and frothing housing market at the moment?
I think I'd agree there's been a rise in self-managed super funds. I would need to look at where the self-managed super funds are investing. There are, like other funds, contributions and caps on super funds, so I'd want to check the rest of the question that you've asked before I made a statement.
So will you take that on notice?
I'll take that on notice.
Great, thank you.
Thank you. We'll go back to Senator Patterson.
Thank you, Chair. So just to be clear, we don't have a medium-term or long-term estimate of the difference between the revenue collected between these two different versions of the tax.
Medium-term numbers are not normally disclosed by government.
Why not?
It's the Charter of Budget Honesty indicates what costing information needs to be disclosed, and that relates to the disclosure of costs over the forward estimates only.
Okay. Obviously, though, it's going to collect less revenue. What provision has the government made for making up for the difference in the revenue collected?
Well, I just answered this from Senator McKim. So it'll be updated in my EFO, and it'll be one of many transactions on and off that you'll see through my EFO.
So can you tell me, Minister, if it'll be offset in my EFO?
Well, you'll have to wait for my EFO.
When will that be?
Before Christmas.
I think it's a legitimate public interest because the government took this policy to the election. It underpinned your election costings, and you made certain claims about the state of the budget based on revenue that you're now not going to collect. So I think having revised the policy, I think it's incumbent on the government to explain where you're going to make up for that lost revenue if you do indeed plan to.
Well, it'll be updated in the normal way as required, which is that, at the first update following a change or a decision made by government, it'd be updated, and that's what will happen.
Right.
Are you guys supporting this one? This version of it?
Well, let's see. Are you going to stick with it like the previous one?
It's a decision of government, and we will be introducing legislation to that effect.
Okay. I'll move on to another topic. I have some questions about the cash flow tax. To what extent was Treasury involved with the Productivity Commission in the development of the cash flow tax? Did you provide any data or expertise or material to the PC?
So maybe if I can indicate first that the Productivity Commission is an independent body.
Yes, I understand.
Yeah, great. We have had some conversations with them, though, because of the reasons you've said. We have access to data, expertise that they may not have or might be useful to them. Looking to see whether Mr. Robinson wants to outline some of the the degree of the conversations we've had with the Productivity Commission.
Senator Marty Robinson, First Assistant Secretary, Corporate and International Tax Division. So we've met with the Productivity Commission a number of times over the course of their work on the first pillar project. We've had a number of general conversations, as Ms Brown mentioned, just around general corporate tax concepts and some discussion around different approaches to corporate taxation.
Did you provide them any data?
I'm not sure, Senator. I'm not sure I'd need to take that on notice.
Well, I mean, I'm not sure that PC would have that in-house if they didn't get it from you. I mean, I guess they could have got it from the ATO or someone else, but I mean, is anyone at the table familiar with whether data was provided to the PC to develop this?
Senator, what I could say is the PC has tended to use a range of macroeconomic modelling approaches to the modelling that they produced in the interim report. And there was a lot of modelling detailed in the appendices to that report.
Well, the ATO does release their data, a set of their data publicly. Mr Johnson might know more about what's released publicly by the ATO. It might have been that they use that data.
These questions probably best referred to the Productivity Commission, but they did commission modelling from Chris Murphy in their original, and it was in their interim report. I think they've also been using other consultants to support their work. The ATO also publishes a range of information on tax collected through their taxation statistics publication that normally comes out in the first few months of the year.
So Treasury didn't provide any data?
I'm not aware of any data that Treasury's provided, but we can take that on notice.
Okay, thank you. Mr Robinson, you said you met with them a couple of times. How many times?
I'd need to take that on notice, Senator, but, 4 or 5 times perhaps.
Okay. And you said you gave them advice on different options?
Well, I don't know I'd call it advice, Senator. We certainly had some general discussions around approaches to corporate taxation.
Well, can you give me a bit more detail than that?
Well, Senator, yes, just different approaches to corporate taxation, such as changes to rates, changes to thresholds, different approaches around treatment of expensing of capital items, and different approaches which are pretty well documented in economic and tax literature around approaches to corporate taxation.
Did you make any observations about, share with them any observations about the effect of introducing a cash flow tax like this on, say, attracting international investment?
I don't know that we got into those levels of specifics around, around those different options and impacts that they might have. That was obviously work that the Productivity Commission was looking at through the course of its review.
Well, what specifics did you get into?
Well, Senator, as I mentioned, they were pretty general conversations.
If you'd met with them 4 or 5 times, it's not just a general spitballing about corporate tax. It sounds like it's a bit more involved than that.
A lot of it, some of the conversations were actually procedural.
Right.
Around tabling time, is it running on schedule? The PC consulted quite widely, so I don't think it's surprising that they talked to Treasury on a tax matter. Given
No, I'm not trying to suggest it's surprising. I'm just trying to understand what exactly your involvement was.
It was merely another consulted party.
Right. Have you provided anything in writing to the PC?
We didn't make a submission.
No, but that's not the same as my question.
I haven't provided anything in writing.
Mr Robinson?
Well, we've certainly had email correspondence.
And what was the nature of the email correspondence?
I'd need to take that on notice, Senator. We've exchanged some emails on issues that sort of following up from our conversations.
Provide on notice any emails that you've had with the Productivity Commission about the proposal?
I can take that on notice, Senator.
Thank you. Has Treasury done any analysis of the proposal?
So Treasury has taken an interest in it, obviously, not surprisingly. The interim report came out and it was discussed. We looked at it, we were always looking at the operation tax system of different ways the tax system could operate, new ideas. So I must admit, I was actually away at the time when the interim report came out, but we've had discussions within the department about, obviously, about the idea of a cash flow tax.
Sure.
Which shouldn't be surprising.
But that doesn't answer my question. Have you done any analysis on the PC's proposal?
On their interim report?
Yes.
Well,
Senator, I'm not aware of any analysis having been done on the cash flow tax proposal.
Right. Have you provided any advice to the Treasurer about the draft proposal?
Well, Senator, we provided advice to the Treasurer, as we do in the ordinary course of events before, when in the context of release of public reports. So we did provide advice to the Treasurer on the basis of an embargoed copy of the Productivity Commission's interim report.
Okay, and what was that advice?
Well, Senator, that's typically advice that's reserved for the Minister.
But not unusual.
Minister.
Senator Patterson, you would expect the Treasury to advise the Treasurer
of course.
On an interim report from the Productivity
Indeed.
Commission. So,
and I'd like to know what that advice was.
Well, you know, you can seek that information.
I just have.
We can, you know, and happy to take on notice what can be provided, but advice to government, you know, usually it's not common for advice to government to be provided.
Minister, you have been on this side of the table many times.
Yeah, and I've been told that many times, Senator Patterson.
You know that advice to government is not an accepted grounds for the Senate for not answering the question.
I think it's fair to take it on notice and see what can be provided.
Well, I'm concerned, though, that Mr Robinson's initial answer was that we can't provide it because it's advice to the Treasurer.
We've taken it on notice.
What you have now.
Yeah.
Okay. Thank you, Chair.
Okay, now we are going to Senator McDonald.
Thank you very much, Chair. Good morning. My questions are with regard to Budget Paper 43, Table 2.2, titled Domestic Economy, Detailed Forecasts. In that, commodity prices are assumed to decline from elevated levels over 4 quarters to the end of the March quarter of 26. Iron ore spot prices assumed to decline, metallurgical coal spot price declines, thermal coal spot price declines, and LNG spot price converges. The chart shows Australia's terms of trade are forecast to decline for 4 consecutive years. I wondered if you had updates to these overall projection percentages.
Senator, that question is probably better directed to our macroeconomic group. There has been a slight switch in the timetable this estimates. So they ordinarily do appear first, but we had that pleasure this time. They are appearing tomorrow at 9 o'clock.
Thank you. I do understand
the way
that.
the bank needed to appear this morning, so it has required a bit of shuffling. Senator McDonald.
Thank you. I do understand that. Given its impacts on forecast revenue, I'll just ask you a few more questions because I think it is still relevant to this section. I'm wondering what Treasury forecasts show for beyond these forward estimates, or what assumptions Treasury is making.
I might see if Dr Johnson wants to answer the question about how we... maybe we can talk about... We don't forecast commodity prices, we forecast revenue.
Yes.
The commodity price would feed through into the forecast of company tax.
So we take our colleagues' estimates on commodity prices and they feed into our revenue forecast. So in particular, they'll feed through into corporate taxation, PWRT and other things. So they certainly feed through. So our forecast build on their projections for the economy.
So you're just noting what the impact will be?
Yeah.
In the footnote to this, it indicates that Treasury can isolate the impact of coal and gas separately to measure its impacts on the terms of trade. Can I assume that you measure the impacts of coal and gas separately to other commodity sectors?
So again, their economic forecast and the economic forecast probably best reserved for a macroeconomic group. We don't typically forecast down to that level of detail in terms of revenue.
Right, so you wouldn't split it between commodity
a coal and a
sections.
Yep.
Would you measure the impact of renewable energy exports into future revenue flows?
To the extent that they're picked up into the macroeconomic forecast, they will feed through to revenue projections.
Okay. So the forecasts, I'm interested when Treasury forecasts that the exports of renewables will overtake the exports of coal and gas. as a net positive. Would you have views on that, or you'll leave that to markets group?
I think that's best to macroeconomic group. In there, there was also our climate change team who would also maybe be able to assist.
Okay. I'd like to ask, with Australia's recent signing of the Blenheim Declaration, was the Treasurer or Treasury consulted prior to Australia signing up?
Apologies, I'm not familiar with the convention that you raised, whether that's a question again.
Revenue group.
Yeah. Okay.
You can answer whether it was raised. Was it? This was an agreement to shut down the second and third largest exports of Australia, and they are massive contributors to the revenue of the Commonwealth through corporate tax. Were you consulted? The simple answer is the question is very simple. Were you consulted about the signing of that agreement before the Energy and Climate Minister signed it?
I think you'll find that's the relevant area of Treasury would appear tomorrow in relation to that.
No. I'm just asking, it's a yes or no question. Was officials from the Revenue Group asked for their advice on the signing of that agreement?
I can take it on notice, Senator.
Okay, you weren't.
It's not the relevant group. So
we can determine whether it's relevant or not. I think it's pretty relevant, Minister. I think it's pretty relevant to our country if you want to shut down the second and third largest exports of our country. I think it's pretty relevant to the revenue of the Commonwealth, and this is Revenue Group. So the fact you don't think it's relevant really does concern me, that you're not considering the impacts of shutting down our second and third exports and what that means for our ability to fund things.
Senator Canavan, all I'm saying is this is not the relevant part of Treasury to ask that question. I didn't say your question wasn't relevant, so don't verbal me.
No, but
there may
the reason why I asked
the question...
conversations
at an officer level. Macroeconomic group, or the climate division in particular, may have reached out at an officer level in Revenue Group, and that's what I was going to check by taking it on notice. But the lead group is macroeconomic group.
I do, though. The reason why I was asking is it does seem extraordinary that Australia's biggest export commodities, we've just signed an agreement to reduce or phase those out, and that Revenue Group was not interested or not consulted or not even aware that that was happening.
I'm not aware, but as I said, I checked to see whether officers worked with macroeconomic group to provide the department position.
All right. I also wanted to ask you whether or not you were consulted with regard to the EPBC reforms that will impact the pipeline of new resource projects, again, particularly coal and gas.
So the department would have been consulted. I think maybe if I can give a general comment around revenue implications here, some of these would be what we would consider second round effects. I think with the government changing the rules around EBPA Act to improve the timing and the approval process will support investment, and you're right, that could have a flow-on into investment. That is then a second round effect, which we wouldn't ordinarily cost. Again, I think the relevant area is probably macroeconomic group.
Thanks, Chair.
Thank you, Senator. Senator Hume.
Thank you, Chair. I want to alert you to page 73 of BP1, which contains some charts that I just wanted to understand a little bit better. Treasury's budget projections over the 10-year medium term. I have a question first and foremost about on what basis the medium-term projections are produced. Do they reflect current government policy? I know that they were from the last budget, which was prior to the election. There's been some changes since then, but we haven't quite got to MyEFO. So do these charts reflect current government policy?
So these charts are produced in Revenue Group and produced within the Tax Analysis Division as far as it relates to receipts. So I might see if Dr Johnston wants to explain how the medium-term forecasts are made.
So yes, these charts would reflect government policy at the time the budget is prepared.
Right. So is that current government policy?
Well, it wouldn't pick up if there was any changes between the budget and now. Then they wouldn't pick them up.
Right. So, for instance, the changes that Senator Patterson was referring to around superannuation policy.
So they wouldn't be included.
Okay. In chart 3.5, over the next decade, it says that the deficit closes from around 1.5% of GDP today, and that happens due to rising receipts. Is that right? And spending payments remain consistent, reasonably consistent.
That seems like a yep.
For the sake of the Hansard transcript, Mr Johnson has just said yes.
Yes, it looks like that's what's happening in chart 3.5, yes.
And if you look at chart 3.6, you see that the receipts are projected to rise very strongly over the next 10 years, and that is entirely driven by tax receipts. Is it projected to increase by any tax in particular?
I mean, it'll reflect a range of factors that are going into receipts. So
yes.
Yeah. We don't actually disaggregate.
You don't disaggregate?
We don't disaggregate the medium term, no.
Okay. So, as you said, these charts reflect government policy currently. That's true then to say that the government's current policy is to then raise taxes over the next decade.
I mean, bracket creep is a long-standing feature in the system, and these charts will reflect changes, any changes that the government has agreed to or has announced. But historically, we've seen bracket creep being returned at periodic periods over time. So it reflects the policy at this point in time.
Okay.
It reflects the decisions of government that we've made would be reflected in those charts at that point in time.
So the decision of government is to allow for bracket creep to be the only significant contribution to bringing the budget back into balance.
Well, no, I don't think that's a fair assumption.
Well, payments have stayed the same, and taxes go up, so that would be a logical assumption.
Well, that includes the revenue forecasts, which is not necessarily the same as tax increases as you outline, and I would like, this is from the budget in May, or in March it was, wasn't it? The only party of government since March that was talking about raising taxes was yours.
Well, that's not entirely true, Minister, because quite clearly,
because this actually has tax cuts as part of the budget.
So if the government did not raise income taxes by 1.5% of GDP over the next decade, can we say, Mr Johnson, that the budget wouldn't be returned to balance in that time?
Well, this budget also includes tax cuts, remember, that you opposed. I
know, but I'm asking about the
that
medium
was dealing with
term,
some of the things
Minister,
that you're now criticising.
I'm asking about the medium term.
The hypocrisy.
Minister.
Those tax cuts are factored into the medium term.
Yes, I absolutely assume that they would be, but the question
that you opposed,
even with them, taxes still.
The question I am asking is if the government did not raise taxes by at least 1.5% of GDP over the next decade, well, then the budget wouldn't be returning to balance. Is that correct?
Well, that's a hypothetical.
It's not, it's a chart.
Well, this, as I just said, reflects decisions of government and the information Treasury have to update the revenue forecasts. What you are trying to suggest is if nothing else changes, if no other decision is taken ever, that is the outcome.
It looks to me...
And I'm saying that is hypothetical in terms of...
Minister, it's not hypothetical, it's your budget books.
Yes, at a point in time, that reflects the decisions of government. But you're trying to suggest that nothing else will happen between now and 2035.
Well, actually, your budget books are suggesting that. They're saying that expenditure remains static, payments remain the same, which is not necessarily... if future performance is based on past performance, we can question that. But your budget books say that if payments stay the same, that the budget will come back into balance in a decade's time, but only due to rising revenue which is increasing 1.5% of GDP over the next 10 years.
Well, the fun fact is if it was updated for you, the decision you took at budget, it would look
But I'm not
different to
asking
that.
about anything that we took to the election because we are in opposition and not in government. I'm asking about what the government is doing. And this is an opportunity for the government to answer questions about its decisions, not the opposition's policy, either past,
we
present,
can continue to
or
play
emerging.
this game, Senator Hume, but I am merely pointing out. Well, I have answered the question. You're asking officials to say in 2025 or 2035, if nothing else changes, is that an accurate picture? And based in March of 2025, yes, that is. But there will be a number of...
That's all I needed.
There will be a number of decisions taken between now and 2035 is the point I'm making.
So a hope and a prayer.
No. That's not accurate.
Policy.
And again, don't put words into my mouth, Senator Hume.
Okay.
That's your
So
language.
let me be very clear then. In producing the medium-term projections, does Treasury model the impact that the rising income tax burden that is implicit in those numbers has on economic incentives?
So that's probably a better question for our macroeconomic group colleagues.
So it's not something that Revenue Group would deal with.
So we would take their parameters. So if there was a change in the parameters because of any event that expected in the future, we would incorporate those into our revenue projections and forecasts.
Right. So I can ask Macro Group about what the economic impacts would be on work incentives, on productivity, of a significant increase in the tax burden over the next decade. And they would be able to tell me what it is, the information that they feed into you to make those revenue forecasts.
They would be able
You can ask your questions to Macro Group, Senator.
Yeah, I just want to be very clear that if I ask that of a Macro Group, then they will be able to tell me that that's what they have fed into you to make your revenue
You
forecast.
can ask that of Macro Group. Revenue Group are not going to answer what Macro Group are prepared to answer.
Well, surely they understand what it is that they're feeding into. A Revenue Group understand what they're feeding into their own
Dr.
forecasts.
Johnson said, the medium term are based on parameters provided by MEG. Outside of the estimates period, so into the medium term, there are some assumptions that are made that are simplifying assumptions, in some respects technical assumptions. A lot can change between 2024 and 2035. I think you can look at IGRs over the time and you can see that what was forecast in 2002 IGR for what would be the outcome now is vastly different. This provides information as to where it could go, but there could be a lot of decisions made, particularly around the medium term, that mean that in 35, 36, the numbers don't look anything like this.
Thank you. Thanks, Chair.
Thank you. Senator Sharma.
Thank you. I have some questions about First Guardian and Shield collapse, and particularly the operation of Superannuation Industry Supervision Act.
So it's split across two groups. So we won't try and duck the question. We deal with the super aspects that relate from the losses, Third and First Shield and First Guardian, so more the platform operators.
Okay.
Issues around misses, issues around lead generators is probably more sitting in Markets Group as part of the financial system division.
Okay. No, well, I'm keen to pursue the first element, though. Okay. So I understand Netwealth has written to the Assistant Treasurer seeking compensation under Part 23 of the Superannuation Industry Supervision Act. Is that correct?
That's correct.
When was that letter received?
Oh, Ms. Ruth.
24th of October.
24th of October. And what's the quantum of investors or loss under Netwealth's banner, if you like, that would potentially be eligible under the scheme? How many people, investors, and what size loss did they identify in that letter?
I don't have a letter with me, Senator. Apologies. I don't know whether Ms. Moore has more details, but...
I've seen a figure quoted publicly of, I think, 1,088 victims, $101 million in loss. Is that Bob, is that correct? That's just in public reporting, I'm not...
We do just need to be careful because the consideration of the application is confidential, but we'll just see if Ms Moore has any information that is public that she's able to share.
Yes, Ruth Orr, Assistant Secretary, Member Outcomes and Governance Branch. Yes, the figure is around $100 million that has been...
Okay.
Yeah.
And are there other APRA-regulated super funds that are potentially eligible under this scheme? So funds in an analogous position to Netwealth, and have you received any correspondence, or has the Assistant Treasurer received any correspondence from them?
So I'm not aware of any additional correspondence being received, but any APRA-regulated fund is able to apply for consideration under Part 23 of the SIS Act, but in order for an application to be determined in favour of the applicant, a number of conditions need to be met.
Okay. Would you mind just... I'm sort of broadly familiar with the provision of the Act, but would you mind just outlining in broad terms those conditions that would need to be met?
Certainly. So in order for the Minister to make a determination, he needs to be satisfied that fraud has occurred that has resulted in a loss to the entity, and that as a result of that fraud, the entity is unable to meet redemptions for members. The Minister also needs to consider that it is in the public interest to make a determination in favour of the applicant.
And when you say the entity is unable to meet the redemption of its members, is the entity here Netwealth, or is it the managed investment scheme?
The SIS Act applies to superannuation entities such as Netwealth.
Such as Netwealth, okay, so that's the question. And you also mentioned the public interest test. Do you mind just repeating that?
Yes, so as well as the two limbs needing to be met around fraud and inability to redeem members' interests, the Minister also needs to satisfy himself that it's in the public interest to grant funding to an entity.
Okay. And so that letter you said was received on the 24th of October from Netwealth. Where is the Treasury up to with providing advice to the Minister on a response to that letter?
So, Senator,
sit back because I can't see.
Yep.
It's a bit rude.
Senator, the Act requires the Minister to seek advice from APRA, and Treasury has been engaging with APRA in order to provide advice to the Minister on the application.
Okay. Sorry, I'm going to have to sit here because for Hansard purposes. Has any advice been provided to the Assistant Treasurer yet on a response from Treasury and APRA?
Yes, we have provided advice.
And so is there a draft letter with the Assistant Treasurer waiting for his signature?
Senator, as Ms Moore said, there's a number of conditions that need to be satisfied first. I think the first thing is establishing the process and establishing have the conditions been met. When this happened previously, which was the Trio Capital, it took a number of years.
Okay, so the advice that's currently with the Assistant Treasurer, I'm just trying to understand, is that finalised advice from Treasury and APRA about about the options for responding to this?
The advice that's with the Assistant Treasurer is around how to move through the process of considering all those factors that Ms Moore has outlined, and the steps that kind of should be taken to do that. It's not advice about whether or not the claim should be approved or not. That is, as Ms Brown has mentioned, that's some way down the track.
Okay. And when was that advice provided to the Assistant Treasurer?
I don't have the date with me.
Could you take that on notice, please? Yeah, thank you. And I understand under the Part 23, the Assistant Treasurer can seek any further information they need from the applicant. Has that power been used, formally or informally? Has Treasury or APRA or the Assistant Treasurer's Office sought further detail from the applicant Netwealth here?
I think there's probably still a lot of the facts of this case to be established. ASIC and APRA or ASIC in particular, taking regulatory action. And so there's a number of facts that still need to be established and found to be able to determine whether those conditions have been met.
And Ms Brown, you mentioned the Trio collapse as a precedent before. So payments were made under Part 23?
They were.
For the Trio collapse. How long did that process take?
Ms Moore might have a better memory than me. It was sometime.
So it took around 2 years. The payments were made in 2012, I understand, and there was a collapse in 2009, 2010.
And do you think that's a analogous time frame here? Should that be was that quicker than usual, slower than usual? Do you think it would take something in the order of 2 to 3 years this time from the collapse to a decision there?
I think given the infrequency of the applications, which is a good thing, but they're infrequent, probably haven't got a benchmark. Each case will need to be determined on a case-by-case basis. But there's regulatory action being taken right now which will help establish matters better.
And with that Trio collapse, was that funded by a levy on super funds?
There was a levy issued, yes.
Okay. Would you expect to do that on this occasion, or it's too early to offer it?
You need to make a determination first before you then determine how it's funded.
Have any superannuation funds been in touch with you or the Assistant Treasurer's Office or the Treasurer's Office to make representations on their views regarding a special levy?
They haven't been in touch with me.
Not that I recall.
Are you aware of no communications? No. Would you mind just taking that on notice and see if you do have any?
I'm happy to take it on notice for the Assistant Treasurer.
All right. Thank you, Minister. And what's the... is there a cap under Part 23?
There's no legislated cap under Part 23.
Okay. But the other potential schemes,
there is a
compensation scheme of last resort, and what's the other one? There's an AFCA cap as well, is that right? There are caps on both of those schemes.
There's a cap in the last resort of compensation scheme, and I believe there's a cap in AFCA, but both of those are more relevant for Markets Group. They would be able to give you better answers.
Okay. And so we've got the CLSR, we've got AFCA, we've got Part 23. Are there any other avenues for potential compensation for victims, and has Treasury provided any advice to the Assistant Treasurer on those potential avenues?
The regulators can take action, and you might be aware that the regulators did take action against Macquarie Bank, and that led to a compensation agreement being reached with investors. Liquidators will be taking action, and that will lead to compensation for investors or return of funds to investors.
What about the scheme for compensation for detriment caused by defective administration?
That is managed actually by the Department of Finance, I believe. But that relates to defective public administration. Here this is more about private sector actions.
Okay. Thank you. That was all I had on that issue.
Can I ask one on the back of that?
Yeah, please.
I mean, you know, it's all well and good if you're kind of caught up in the Macquarie thing. But if you're using one of the other providers, I mean, what do you say to all these people who've been fleeced by all these crooks? And ASIC has been completely hopeless. You've sat on a report from the Senate which has recommended that you fix it. I mean, what do you say to all these people who've been fleeced? Minister.
Well, I don't accept your proposition and your criticism of ASIC.
You're doing a great job.
And I do certainly feel very much for the people that have been involved in this. But, you know, there are regulatory responses and work that has to be done before, you know, the government's in a position to make some of those decisions, or the Assistant Treasurer. But the regulatory response is underway.
Well, when are you going to respond to the ASIC report, which made recommendations which even your own senators agreed with, which outlined that ASIC is a hopeless regulator, incapable of enforcing the laws that we put in place?
Well, I'm sure we can deal with that later in the day. Got ASIC coming, I think.
I'm asking about your government's response.
Well, there will be a response to that report.
We've been waiting for over a year. When do you think it might be?
Well, I'll see if I can provide anything else on to you through the course of the day.
Thank you. We'll go to Senator Pocock now. Thanks.
Thank you very much, Chair. Thank you for your time here this morning. In 2023, Treasury was able to clearly state in budget papers that not a single LNG project had ever paid petroleum resource rent tax. And I asked you to provide information that this remains the case in a Quan last estimates, that was SQ25 000811. And the response was that you can't because there's only entity level data, not project level. So I'm interested, what has changed? Why could Treasury answer this question in 2023 but not in 2025?
Might see whether Mr. Robinson wants to answer that question, but it might relate to taxations on an entity. And projects might have multiple entities. When they weren't paying any PRRT, we could say it about both, but there are now some entities paying PRRT. Mr. Robertson? Might have that last bit wrong. If you want to correct me, that's fine.
That's right, Senator. So information is collected on an entity level, and so it's not possible to gather from that exactly precisely what's attributed to LNG. Entities can be producing receipts across a range of petroleum products, which may include LNG, but may include other products as well.
But
you were able sure. Ms. Bultitude wants to add anything.
But you were able to tell me in 2023, and now in 2025 you can't tell me. So what's changed? And as one of the biggest gas exporters in the world, like how LNG exports not important enough for you to have good data on?
Sorry, Senator, I'm not familiar with the precise response we gave you in 2023.
The response was that not a single offshore LNG facility has paid a cent of petroleum resource rent tax.
I think that was on the basis of knowledge at that stage that LNG projects that had been commissioned and constructed through the 2010s still had significant deductions that they were yet to be able to claim, and that they weren't in a position to pay tax at that time. I think once they start producing, they may be producing a range of petroleum products.
Sure. And so how much have we collected in PRRT from offshore LNG to date?
Senator, I'd need to take that on notice. Unless,
sorry, Senator,
Dr.
we used to previously sit with the ATO, and the ATO would be able to answer that answer for you. I mean, we work closely with the ATO, but because they've normally managed that data, they would have the answer. But they can probably give you that answer tonight.
So offshore LNG is not a sort of big enough revenue source to actually be able to track and be able to provide updates on?
Well, Senator, the budget papers do track PRRT payments in total.
I also asked why revenue from PRRT was revised down in the last budget when compared with the previous budget, and you responded that it has been revised up since my EFO. But when a comparison of budget paper 1 from the two previous budgets shows a reduction in projected revenue of 250 million over 25, 26, 26, 27 and then 27, 28, this is despite changes that were passed through the Senate by Labor and the Greens, explicitly intended to increase revenue. Is it true that revenue is actually projected to fall by some 500 million over the forward estimates?
I might see if Dr. Johnson wants to answer that.
So in the 25-26 budget, we revised up petroleum resource rent tax receipts. I think it was we raised them up around $100 million in 25-26, and around 750 million over the 5 years from 24, 25 to 28, 29. And that largely just reflected a higher oil price. So that's the change that we did in the 25-26 budget.
How much of that is offshore LNG?
So we don't have a breakdown by the types of product.
Why not? We're one of the biggest gas exporters in the world.
It's just so one of the challenges with PRRT and disaggregation is that we don't get things at a project level. So you need it at a project level to be able to know what's feeding it through, so where it's coming from. We get things at a company level, and because companies are paying on a number of different products, so we just don't have that disaggregation. That's my understanding. Yeah.
But you just talked about making projections based on oil prices. You must have some sort of breakdown somewhere where you're factoring in the split between oil and gas exports and what we're going to...
So we would largely look at the oil price, the assumption that's coming through, because that's the predominant driver, and the exchange rate. They're the two predominant drivers of changes in PRRT revenue. That way, economic drivers of PRRT revenue.
Just further to that, Senator, one thing I would say, for example, is that LNG offshore projects will provide gas that's then converted into LNG for export. But they also provide gas that feeds into the domestic market.
Sure. How much? What percentage of offshore LNG projects provide gas to the domestic market?
I'm not sure what the proportions are, Senator.
Well, maybe on notice you could back up that claim, because there are a number of offshore LNG projects that provide no domestic gas, export all of it, and then pay zero PRRT. Huh?
It's not covered by the PRRT.
That's onshore.
Yeah.
Yeah, I'm talking about offshore.
So it'd be only ICFIS that would fit your category.
I guess I'm finding it concerning that you don't seem to know a lot about gas revenue in the PRRT. Like, how has this not been a bigger focus since these changes passed a couple of years ago? Have you provided the government with options to actually make sure that we're getting some revenue from our offshore gas?
So the ATO each year issues a what's called a corporate transparency report, and that does provide information on who's paying PRRT. And the most recent one was issued in about October, I think. Ms Boltitude might know more. It did confirm that a number of entities paying PRRT went from 11 to 16, and that was due to the fact that with the new laws, the ability to deduct as much has been reduced, and so some people are paying PRRT earlier than that.
I understand that, but are they oil or gas?
They're gas.
16 gas projects?
Maybe I'll take that on notice.
11 to 16 entities paying PRRT.
No, I heard that.
And that was gas, yeah.
Gas? Okay.
Well,
maybe take that on
which
notice.
is when I say, Senator, so we talk about gas generally, and gas can be in the gas form such as that used in domestic consumption, or it can be gas that's converted into LNG.
Okay, I think you should take that on notice. Sure. In the transparency report, there's no breakdown of which projects are paying tax, which I think is information that the Treasury should probably know. So maybe you can take that on notice. And then on notice also, if you could explain how you're measuring the success of changes to the PRRT when it comes to offshore LNG. And then maybe, Minister, just to finish up, are you concerned with this? We're one of the biggest gas exporters in the world. I've just been over in aged care, and your government is not fully funding supported home packages because of budget constraints. We're putting a 5% squeeze on the public service at the same time that we're just shipping off our gas for free. Is your government concerned about this? Should we actually be getting a fair return on our natural resources for Australians?
Well, I think the changes to PRRT were about that. As you know, there's a lot of work going on under the Future Gas Strategy. This has been and remains a priority for the government, and as does repairing the budget and making sure we do have room for all of those areas that Well, you've identified one of them in aged care, but the pressures that are facing the budget continue to grow. I mean, it's not just in aged care, it's in a whole range of areas.
So why don't we get a return for our gas?
Well, we have the tax settings in place and the changes that we've put in place, which mean we are bringing more revenue into the forward estimates. That will help. That will help. But there is more work to do to repair the budget in general, but it's, across the board.
So
it's part of my work every day, Senator Pocock. It's not something that I just visit at estimates.
Sure.
It's something that consumes me and other ministers every single day.
And I guess on that, just finally, why is the government happy to give away 50% of our gas exports royalty-free, PRT-free?
Well, we have the tax settings we have in place there. They reflect decisions of government. But the work that other ministers are doing on the future gas strategy, on rebuilding the energy system, making sure that we have that available and raising revenue to support priorities is, it's an all-consuming part of mine and the Treasurer's job.
Seems like a pretty easy win here if we actually said that these natural resources belong to all Australians. You can export it and make a profit, but you actually have to pay for them. And there is overwhelming support, both in the Parliament and in the public. And yet the government went for the weakest option that was proposed by Treasury to reform PRT. So what's going on here? Why are you putting multinational gas companies' interests and profit ahead of Australians' revenue?
I don't accept that. That's your view, Senator Pocock. I don't accept it.
We're going to have to rotate the call.
Thank you, Chair.
Senator Payman.
Thank you, Shane. Good afternoon. My question's around illicit tobacco. The 2025-26 federal budget allocated an additional $156 million over the next 2 years to combat illicit tobacco. Will the MyEFO reflect an increase or decrease in revenue from the tobacco excise compared to projections in 2025-26 budget?
I think that will be disclosed in MyEFO when it's released.
So you can't?
We will disclose those numbers in MyEFO.
Does the government expect revenue from the tobacco excise to continue to decline?
I think we'll say more on that in MyEFO.
Okay.
Yeah. I mean, we've updated this in the budget, and then the next official update will be in MyEFO.
Yeah, I'm just curious why it took a halving of the revenue from the tobacco excise, an $8 billion decline in the budget over the last 5 years for the government to take any action in this area.
Well, I don't accept that. We have invested more money into border force and law enforcement in the 24-25 budget.
But we haven't frozen or reduced the tobacco excise.
Well, we're not going to reduce the tobacco excise. Is that what you're arguing for?
So I'm just asking, will the government do that?
Well, that hasn't been a decision of the government, no.
Given the additional $188 million was allocated for compliance in 24-25 budget and was unable to arrest the decline in tobacco excise revenue that we're seeing, at what point will the government review the strategy and look at other policy options?
Well, I think if you look at some recent data released by ABF, it shows that the investments are having an impact. 586 million cigarettes and over 3 million vapes have been seized at the Australian border in the first quarter of this financial year. That follows 2.5 billion cigarettes and 435 tonnes of loose-leaf tobacco seized at the border last financial year, and more than 23 tonnes of illicit tobacco, more than 6.7 million cigarettes seized by the ATO last financial year. So I think you are seeing an impact from those investments, and obviously this is something that we can keep under review, both from the Minister for Home Affairs, but of course as we look at some of the impacts of excise on the budget.
Can the department help explain what real-world effect this investment in compliance had on tax take from the tobacco excise?
tax forecasts look at a range of factors. Obviously, the collections. We do talk to others, ATO Home Affairs, to understand what they're seeing. We can have on occasion talk to the industry to see what they're seeing. We do take into account then in thinking about forecasts what the effect of that compliance action may be. I think you did see in the last forecast, a potential slowing of the decline in excise, but we keep that under review each round. And as the Minister said, we update the forecasts every economic update with the available information at that time.
So the research you've been doing, has that shown any examples of real-world effects, or just...
So we are doing work looking at the elasticity of demand, but that's usually very much a long-term exercise. But we are very aware to it, and we do keep an eye out for any recent literature or other research that may help us make more accurate forecasts.
I'm curious to understand, why does Treasury think smoking rates rose for the first time in 30 years, in WA in particular?
I think that's probably a matter for health. They do all of the work in terms of looking at the public health measures associated with tobacco use.
How is an excise that pushes people towards the black market, which allows them to more easily access the carcinogen that's killing them, beneficial to public health? And I think Treasury would have something to comment on that.
Well, I think the excise rate is an important part of addressing that health response. But beyond that, it's probably matters for health, as the Minister said.
In August, 2 Perth tobacconists were firebombed in what WA Police said were incidents straight out of the playbook of organised crime. What support is the government offering to small businesses in WA like these that are being targeted because of faulty policy settings that we're seeing?
I'm not sure what you're arguing for, Senator Payman. Are you saying that we should lower the tax on tobacco? Is that the point you're making? That
I'm saying that this policy needs to be reviewed because there's clearly
the policy that we tax tobacco because we certainly want to discourage the uptake of smoking.
But this is about small business support.
That hasn't changed.
I think Chris Minter suggested that. The Finance Minister.
In terms of the... Okay, well, it seems like everybody's arguing for that. The Minister for Home Affairs has stood up the Illicit Tobacco National Disruption Group. We have funded law enforcement to the order of $156.7 million in the budget to disrupt trade in illicit tobacco and target criminal gangs, detect more illicit tobacco at the border and support compliance in partnership with states and territories. So that's what we are doing in relation to...
But what about for small businesses and the support you'd offer for them?
Well, that is the work that would directly assist small businesses if you are disrupting trade in illicit tobacco and targeting criminal gangs.
Not directly assisting them because, I mean, they've been firebombed, they've been attacked, they're out of business, and the government's essentially saying, well, we can't do anything about it.
Well, that's not what the government's saying. The government is investing hundreds of millions of dollars in order to have stop the importation of illicit tobacco and the compliance activities around that, and also over $150 million to assist law enforcement, which would work with states and territories and the work that they do, those jurisdictions do, to protect businesses within state borders.
But nothing for small business owners in WA.
Well,
Thank you, Minister. Thank you, Chair. That's all from me.
Okay, we will go to Senator.
Thank you, Chair. Just I've got questions on this topic as well. Did I hear you say to the questions to Senator Payman that you believe the decline in tobacco excise is slowing?
I think we'll update our forecast in MyUFO and be able to answer that.
I'm just trying to clarify what you said. I'm pretty sure you said that, but
I think we did show. If you look at the forecast from the last economic update, we did show a slowing.
Okay. Well, I just wonder if you might not have caught up yet, but the national accounts have just been released, as I'm sure you're aware. And for the September quarter, the measure, the consumption, household consumption on tobacco has fallen by a record amount of 10.7% quarter on quarter. Record, never had a double-digit decline, although decline's been increasing for a while. So just wondering how you could say you think that the decline in tobacco excise would be slowing when the decline in consumption of tobacco, at least this is obviously, and just to be clear, what the ABS is measuring is supermarket data, and this is legal tobacco sales, is falling at a record rate.
I unfortunately haven't been able to see the national accounts this morning.
Even if we presume you had seen, or your people have seen, the June national accounts, and that was a previous record fall of 8.2%. It's just been exceeded this morning, but again, and so I might go back a bit further. So if we take the last year, we've had a quarter-on-quarter decline of 5.7%, quarter-on-quarter decline in December quarter last year, quarter-on-quarter decline of 6.4% in March this year, quarter-on-quarter decline of 8.2% in June. All of those figures would have been available to you before this morning, some months ago. So I'm just wondering how you could say that the excise declines would be slowing when clearly consumption of legal tobacco is falling at accelerating and increasing rates.
So each of the economic updates, the last few, have had substantial downgrades in excise revenue. I was referring to the future years, but we have recognised that revenue has fallen in a number of updates, and we've revised our forecast down in a number of those.
The year-on-year fall just reported, the national accounts, is now 29%. We've had a 30% decline in legal tobacco sales. Now, of course, if this was indicative of people smoking 30% less, it would be a cause for celebration. We all know, of course, that's not the case. I mean, Minister, you've been just defending the excise policy vociferously. A 30% decline in the legal market surely is a cause for a degree of reflection on whether the settings are correct here, is it not?
I've answered in relation to some of those areas where we have responded and put in extra resources to deal with it, including standing up the Illicit Tobacco National Disruption Group. But we do see the excise, in which the big increases, I should say, in tobacco excise were by the coalition government, 12.5% every year for 4 years in the 2016 budget. That's when the actual very substantial increases happened. And this is something that obviously we are looking closely at. That's why we've made additional investments. But we do believe the excise is an important part of the harm reduction efforts to reduce people from taking up smoking in the first place.
Well, you may want to play politics with this, but as Senator Payman just said, we have small businesses having their
I'm not playing politics.
Oh, hang on, I didn't interrupt you, Minister. Didn't interrupt you.
Well, don't say things like that.
I will interrupt you. I'm only responding to what you said. I'm only just you said.
If you
decided,
Chair,
I did not interrupt the Minister. She's interrupted me, Chair. Point of order.
And I will continue to do so.
Maybe the Minister could just not interrupt because you said. You tried to blame this on the coalition.
No,
you introduced politics into this.
I didn't blame it.
You did, and I've got the call, please. You did that.
I didn't blame it.
And you are playing politics with small businesses being five-bombed, with farmers being threatened. Farmers are being threatened to have to grow tobacco, or else things will be done with them. Yeah, and I'm not averse to criticising my own government, my own side, unlike you, Senator Gallagher. Unlike you. So you can play the partisan politics and lose your credibility by doing so, but I will not repeat that mistake. Now, you may have seen, I don't know if you've seen this, and I hope you've probably been consulted on this, in the national accounts today, the Australian
I've been sitting here.
Bureau of Statistics. No, well, this is not a data update. If you just wait for my question, jeez. In the national accounts today, the ABS has announced that it will be developing a new method to measure the amount of consumption from illicit nicotine products. Have you been consulted by the ABS on the development of this new estimate?
I don't know if Treasury official. I can certainly answer for myself. No.
Okay, well, I'm also asking Markets Group.
ABS falls under macroeconomic
Revenue Group, sorry.
So they might have been the party that was consulted on the development
I think there's a nod. Dr Johnson, have you been?
I was going to just agree that the ABS normally consults with macroeconomic group, so you best direct the question to macro group.
You don't know yet if okay, right, other parts of Treasury might be. I'm just wondering here, this is quite a remarkable development. Effectively, the ABS now are introducing measures of the black economy in the data collection for our country. Do you know of another example of Australian national accounts having to measure the black economy to understand the size of economic activity in Australia?
Let's take that on notice. There was a study into the black economy done by the Board of Tax, and there was one more.
But I'm asking particularly to integrate into the national accounts.
Yeah, I'll have to.
I mean, this is Soviet Russia sort of stuff, right? This is the failure here is Soviet Russia sort of size, where we're having to now measure the black economy. Because we don't know how big the economy is now, because we've allowed the public policy failure. And yes, I accept this is all governments, all sides of politics have allowed this. But the difference between myself and you, Senator Gallagher, is I think something should be done about it. You are putting your head in the sand here and say, oh, we're considering it and all this bureaucratic rubbish. People want action and your government's not taking action on this.
Monologue?
Sure, go for it.
Well, firstly, you have verbaled me, and I have said we are responding, and I have said that this is something that we keep under
active consideration. Yes, Minister. Active consideration.
Under active consideration. Well, under active consideration does not equal doing nothing or having your head in the sand, Senator Canavan. And in addition to that, which is something that didn't happen under the former government, investments in extra investments in border force and law enforcement, and having up an illicit tobacco national disruption group.
It's not helping.
They are the actions that we have taken. So I'm not going to sit here and be told that we have our head in the sand and aren't doing anything.
Can I just ask, what are the actual receipts from tobacco excise for this financial year to date?
I don't think we do.
Or to whatever date you have.
I haven't been updated in the budget.
We haven't updated in the budget.
But I'm asking for something that's...
and the next update
we do have monthly updates to figures.
We have monthly tax collections.
Yeah.
But,
so what are the latest? What's the latest data for this financial year, tobacco excise today?
Those tax collections are the revenue collected by that ATO.
I think Dr Johnson might be able to help me.
So we certainly have the final budget outcomes. That was for 24-25. I think from memory they were slightly higher than projected. But I was going to see.
I'm asking for this financial year.
I'm just trying to dig it up for you now. Sorry, So I don't have those because we only get them as a group in excise duty or customs duty. So I don't have a separation.
How much is the excise? How much is that group for the
So I think from memory that most of them come through customs duty. But I'll give you them both. So excise duty year to date to October 25-26, the actual was 10.2 billion.
Sorry, I just
excise.
missed that. There was some noise here.
10.2 billion in excise duty in year to date to October.
Right.
And customs duty was just a bit over 3 billion.
So
around 13.2 billion in total combined excise and customs duty.
Tobacco excise could be collected through both streams.
So they potentially can. But I think most of it comes through customs duty.
Right. Okay. How much is that customs duty again? Sorry, I missed it.
Around $3 billion, just a little over $3 billion year to date to October.
Just over $3 billion. Okay. Okay. All right. I think. Yep. Well, that might do me. Thank you very much,
Thank
Chair.
you, Senator
Thank you.
Canavan.
Thanks very much.
So we have Senator McKim and then Senator Roberts. Then we can move on. So if we can be as tight as possible, just noting we're 25 minutes behind. Thank you. Senator McKim.
Thanks, Chair. Won't surprise you to know I've got some questions on the capital gains tax discount. And they're about cost and distributional analysis and the impacts of the CGT discount. Look, firstly, when Dr Kennedy and I were discussing this at the equivalent estimates last year, he confirmed that Treasury was doing some modelling on potential changes to the CGT discount. Did Treasury complete that modelling, and who was that provided to?
I'd have to look at the... Sorry, I have a vague recollection of the words. In terms of modelling, it might be that we're always looking at the operation of the tax system. We always are looking at how much GGD is collected, and as part of the TEAS we do break that down into distribution analysis. We're in the current process of updating the TEAS. I expect the TEAS will be released around the same time as MAEFO again this year, and that will have updated distributional analysis of the distributions. I wonder whether that was what Dr Kennedy was referring to.
Well, look, I'll come to the work you're currently doing on the distributional impacts of the CGT discount shortly. But could you take on notice whether the modelling that Dr Kennedy confirmed in last year's equivalent Senate estimates was underway? Who was that provided to, and was that provided specifically was that provided to the Treasurer or anyone else, or to the Finance Minister or anyone else in government, and who commissioned that modelling, if in fact it was commissioned by government, or whether it was simply a part of Treasury's regular work program?
Yeah, I think...
just take that on notice.
Maybe if I can just not scare the cats here. There was discussions last year around a CGT where we were looking at distributional impacts. We did provide advice to the government, and that was discussed at an estimates last round. We continue to look at the analysis of capital gains as we do in the ordinary course of looking at the operation of tax market. I don't think you would say we're doing any modelling per se beyond the nature of the type that I described.
No, thank you.
And we're watching your committee.
I beg your pardon?
I mean, you've got your committee now into it.
Well, it's the Senate's committee. It's the Senate's committee.
With the help of the opposition.
Minister. It's the Senate's committee, and it's a very important topic
supportive
to be.
A range of different views.
Who would have thought the Greens and the coalition together on tax policy?
Minister, if you can...
There you go.
Minister, honestly, if you can find me one economist in the country who thinks your government has got the current policy settings on the capital gains tax discount right, please stump them up to the committee. I'd be very happy to hear from them. But all the economists I read right across the political spectrum have got a view that the capital gains tax discount is highly inequitable. It favours overwhelmingly the super wealthy people in this country, and it overwhelmingly favours the older people in this country. 50% of the benefit goes to the top 1% of income earners, and over 70% of the benefit goes to people over 50. Minister, how is this a fair tax concession?
Well, we will no doubt read your report of the Select Committee that you have looking into it. We report tax expenditure, and the government's tax settings are reflected in the budget.
All right, so Ms Brown, sorry, I distracted myself there from the questions I've asked. I'd probably blame the Minister for that, but or at least I'll take my share as well. But just to be clear, Ms Brown, I was asking you not so much about the modelling that was confirmed, the work that was confirmed that Treasury were doing on things like the distributional impact. It was specifically modelling to changes to the capital gains tax discount that I had the discussion with Dr Kennedy about last year. So could I please ask you to take on notice those questions I asked you earlier about the commissioning, whether that was completed, who that was provided to, if anyone in government, and whether Treasury is in a position to share that modelling with this committee?
Sure. We obviously have an interest in the housing market as you do, so I'm happy to take those questions on notice.
All right, thanks. Is it still Treasury's view, when we had the discussion, when Dr Kennedy and I had the discussion last year, Dr Kennedy said that his view was that curbing the capital gains tax discount for property investors would improve housing affordability in Australia. Is that still Treasury's view?
I might see if Ms Berger-Thompson wants to add anything, but I think Treasury normally sees supply as the more important factor here on housing affordability, and the reference to the impact of CG on housing is probably only of a minor nature based on the academic studies that we look at.
Sure.
But Ms Berger-Thompson can say more.
Just before Ms Berger-Thompson responds, and I would like to hear from you, Ms Berger-Thompson, but can I just indicate the debate on housing, the political debate on housing at the moment in this country is significantly focused on the supply side, and there's no argument from me or anyone else with any credibility that supply plays a significant role in the crisis that we're in at the moment in regards to housing, but I'm specifically asking about the demand side and the role that the capital gains tax discount plays on the demand side of the supply and demand equation. So, Ms Berger-Thompson, thank you.
Laura Berger-Thompson, First Assistant Secretary, Personal and Indirect Tax and Charities Division. So there's actually a range of different studies that look at the impact of tax settings, or try and estimate the impact of tax settings on the housing market, and in particular they look at the impact on housing prices and rents. Most of the studies do a combination of something along the lines of halving the capital gains tax discount and removing the ability to negatively gear properties. So it's a combination of effects rather than just the CGT per se. I can certainly take on notice if there are any that just look at the CGT. But in terms of the price impacts, it's kind of small in the context of the significant price increases that we've seen over the past, many years. But it's the range of the estimate of changing the settings in the way I just described is on housing prices is 0.5 to 4.5% reduction in housing prices as a result of those changes.
Okay, so fair to say it would still be Treasury's view that curbing the capital gains tax discount, or perhaps if you want to phrase it more broadly, curbing tax concessions for property investors would improve housing affordability in Australia?
Senator, I think I've been reminded by a colleague, Dr Kennedy said it was a complex area.
Oh, it is. He did.
He did.
And
I think maybe he didn't paraphrase it the way you've paraphrased it. And so I would just want to refer you back to the previous Secretary's comments, and the view hasn't changed since what he said at that time.
The view hasn't changed since what Dr Kennedy said, is that?
But it's a complex area.
Yeah. I don't think anyone's arguing this is not a complex area. I mean, I wouldn't have thought it was possible for a federal government to turbocharge house prices yet again in this country, but here we find ourselves with Labor's terrible 5% deposit policy, which has caused a stampede of property speculators back into the market to the extent that $40 billion in credit was afforded to property speculators in just 3 months, in the last quarter, the September quarter, the last quarter for which we have data. Most of an entire generation of young people is being priced out of the Australian dream of owning their own home at the moment. It's impossible for millions of Australians to get a foothold in the property market. Labor's just made the problem significantly worse. What I'm asking is whether it remains Treasury's view that all other complicated and complex matters being equal, would curbing tax concessions for property investors improve housing affordability in Australia?
I think our view is you can't just assume all those other factors are a constant.
But Ms Brown, I mean, all other things being equal is something economists say all the time, when they're making an assessment of what pulling one particular lever would do in a complex system. Like this is not a term that I'm inventing here. Is it still Treasury's view that all other things being equal, or is it Treasury's view that all other things being equal, curbing tax concessions for property speculators would improve housing affordability in Australia?
I think you're asking for an opinion, which
Or is it your view,
well,
then, Minister?
Well, just for the record, that it's not fair to ask, or right to ask public servants' opinions. They're here to answer
I'll rephrase the
questions
question.
on government policy.
Well, I'll rephrase the question. Have you got any research that would support that contention? Are you aware, Ms Brown, of any research that would support that contention?
Well,
because I thought Ms Berger-Thompson just took us through some of the research that exists that does support that contention.
There are, loads of research on all matters relating to the tax system, like written by, academics, written by organisations, all the rest of it. Obviously, we look at all of those and consider them. The approach we've taken to housing is multifaceted.
Making the problem worse, Minister.
We're looking at supply, looking at the Commonwealth's role, working with states and territories, looking at how we deal with supported accommodation and areas including all the way from homelessness to home ownership. And you will not find a government that has done as much as this government has federally, because for the largest extent possible, it's been left to state and territories to deal with this, and it hasn't worked. And so the Commonwealth has intervened, and intervened considerably to deal with it from a range of different points.
How do you think that's
and
going?
we will continue to do so. And we have, obviously, we'll have a longer discussion on housing through the course of the day.
My word, we will. And
I look forward to it.
Questions in a
yeah, all right. So in terms of the work that Treasury's done on the distributional impact or the distributional benefit of the capital gains tax discount, I'm aware of some of the breakdowns by income cohort. Does Treasury break it down in such a way that you could answer how much of the benefit goes to the top 1% of income earners, and if not, why not? And if you do, could you please inform the committee of how much of the benefit does go to the top 1% of income earners?
So, Senator, I've got the tax expenditure insight statements, and it is a recent, it's only been the last 2 years or so that statement has included distributional information to provide the type of transparency that you're interested in.
Yeah, that's the top 10%, I think you'll find, Ms Brown.
It's by decile, yeah. We probably could break it down, I imagine.
We'd need to take that on notice.
Could I ask you to do that on notice, please? Thanks.
Thank you. Senator Roberts.
Thank you, Chair. I'll try to be brief. My questions are actually brief, but I've got to untangle the acronyms. So I have to give you some background first to set up my questions. Equality Australia applied for Public Benevolent Institution status in 2020 and was rejected by the Australian Charities and Not-for-Profit Commission because its primary purpose was advocacy and law reform, not direct benevolent relief. The Australian Charities and Not-for-Profit Commission found its activities were too indirect, quote, to qualify as benevolent relief. Next point, the Administrative Appeals Tribunal upheld the Australian Charities and Not-for-Profit Commission's decision, and the full Federal Court dismissed Equality Australia's appeal in September 2024, confirming that advocacy and campaigning for law reform did not meet the statutory definition of a public benevolent institution. After losing in court, Equality Australia wrote to Assistant Minister Andrew Lee in November 2024, seeking a specific listing for deductible gift recipient status under the Income Tax Act 1997. Cabinet approved the listing in early 2025, and the March federal budget included Equality Australia as a named deductible gift recipient entity for 5 years. Media commentary highlights concerns that this decision effectively overrode determinations by 3 accountability bodies: the Australian Charities and Not-for-Profit Commission, the Administrative Appeals Tribunal and the Federal Court. So my questions are, why did Treasury support a specific deductible gift recipient status listing for Equality Australia after the Australian Charities and Not-for-Profit Commission refused public benevolent institution status, and the Administrative Appeal Tribunal affirmed, and the full Federal Court dismissed the appeal on 5th of September 2024, all on the basis that Equality Australia's activities are advocacy, not direct benevolent relief. What principles justifies overriding 3 independent determinations?
Ms Berger-Thompson, answer that question for you, Senator.
Senator, decisions made on DGR specific listings are decisions of Cabinet.
So, Minister, what principle justifies overriding 3 independent determinations?
I don't have anything further to add to that, Senator Roberts. I'm not aware of it.
Could you take it on notice?
I'm happy to take it on notice.
Thank you, Minister. Did Treasury advise Cabinet that a specific listing bypasses the ordinary deductible gift recipient pathway for a single organisation?
So, typically specific listings, we do provide advice on specific listings. Specific listings are only for those organisations that do not qualify for any of the other 52 DGR categories that are administered by the ATO.
So you did give advice?
We don't talk about, sorry, it's not appropriate to talk about Cabinet material in Senate estimates.
What about Treasury advice?
That's Treasury advice for a Cabinet process.
So you can't provide it on notice?
No, not in relation to things that relate to Cabinet process.
That's pretty handy. Two final questions. What legal basis did Treasury rely on to proceed where the courts found the activities did not meet the public benevolent institution test? And secondly, how does Treasury ensure consistency with the statutory meaning of benevolent relief used by the Australian Charities and Not-for-Profit Commission, the Administrative Appeals Tribunal and the Federal Court when recommending by name deductible gift recipient? So what legal basis did Treasury rely on?
So, Senator Roberts, I can say that the specific listings, and there are, I think, a few every budget, and that the ERC or the government considers, and we consider them when other avenues have been exhausted. But that is, it reflects a decision of government.
So I want to know what legal advice Treasury got.
Well,
or what legal basis did
Treasury provide advice on the listings that come before us, and other departments may, if ministers get briefed appropriately, but ultimately it's a decision for government.
So, Minister, why did the government bypass 3 institutions with experience in this area and responsibility for this area? Federal Court, Administrative Appeals Tribunal and Australian Charities and Not-for-Profit Commission.
I've taken that on notice. I was just more generally saying how the decisions are taken.
Could you provide an answer then that?
I will. I've undertaken it to take.
No, I mean
to
also the basis for the decision.
Yep, I've taken that on notice.
Okay. Last question. Was legal advice sought about the risk that a specific listing undermines the public benevolent institution, the deductible gift recipient framework? And will you table it or provide it on notice, Minister, with the redactions of names?
I think that goes to advice to Cabinet, Senator.
We will take your set of questions on notice and see what we can provide.
Great. Thank you, Minister. Thank you, Chair.
Thank you very much. So we are now concluding Department of Treasury Revenue Group officials, and if we could welcome to the desks representatives from the Department of Treasury Markets Group, please. Golly, how are we 45 minutes behind?
See you, Diane.
Okay.
About 12:45. Yeah, exactly.
I think Jane. You go to. Okay. I'm not feeling hopeful right about now, so I'm 45 minutes behind, but we'll see how we go. True.
G'day, how are you?
Good.
Hi there. What time does this show finish for lunch?
1 o'clock, I think so.
Oh.
Sure.
We good to kick off?
Do you have a program? Sorry.
All right. All right, we might kick off. The committee welcomes representatives from the Department of Treasury Markets Group, and I'm going to throw to the Coalition. Senator Patterson first.
Thank you, Chair. Was anyone at Markets Group involved in identifying or remediating Treasury's unlawful $2.3 billion worth of payments?
James Kelly, Deputy Secretary Markets Group. That's not a Markets Group issue, essentially.
I know, but I'm just being comprehensive for comfort. No one was involved in any way in identifying or remediating this issue in Markets Group?
No.
Okay. Thank you, Chair. Senator Sharma, I think.
Thank you. I wanted to ask about First Guardian and Shell. I understand some responsibility that sits with Markets Group. I think we asked in a question on notice, which is SB 195, how many pieces of advice Treasury had provided to the government since 2022 on the problems with the regulation of managed investment schemes, and I believe it was 7 times. I just want to confirm that's correct, and you're familiar with the response to the question on notice?
Yeah, Andre Moore, Assistant Secretary, Advice, Insurance and Capital Markets Branch. Yes, that's correct.
Okay. We also asked for the dates of that advice, and the dates were not provided in your response. Is there a reason for that?
I don't have the dates with me, so I have to take that on notice.
Do you recall removing the dates from the answer to the question on notice? It's just a strange omission because we asked for the number of times advice had been provided and the dates for any advice, and no dates were provided in response to that.
No, that was our response to that question on notice.
So I'm asking, was the omission intended or accidental?
Senator, the department will draft an answer to your question on notice. Ultimately, it is the government's answer to the question on notice that comes to you. If you want us to come back on the kind of exactly what happened with that question, we can take that on notice.
Was it a draft copy of the response that would normally be provided to the Treasurer's office?
As a matter of routine, when we draft the answers to questions and notice, they will all go through the relevant officers and the Treasurer's office before being provided to the Senate.
Okay. I'm just wondering, were the dates removed at that stage of the process then?
We'd have to check that. I'll take that on notice.
Okay. If you could take it on notice, and as I said, we...
Can I just clarify, if they were specifically requested but not provided, then the first draft that went to the Minister's office would have included the dates.
I have to check that and look at the sequence of the drafting of that response.
Okay. Sorry, Senator Sharma.
No, that's quite all right. Beyond those 7 written briefs that were provided that you advised us of in response to that question on notice, were there any other additional meetings, calls or informal discussions with the Treasurer, Assistant Treasurer or their officers regarding problems with the managed investment schemes?
Are you talking about managed investment schemes?
With the regulation, rather, of managed investment schemes, yeah.
It's an issue that we do obviously have regular discussions with the Minister and his office about these matters. A lot of that's happened in the context of the Shield First Guardian matter, but also more broadly as well. And yes, matters concerning the regulation of managed investment schemes does come up in those discussions.
Okay, so you've provided advice at least 7 times and had discussions as well about the regulation and managed investment schemes and highlighting some of those risks. Have there been any reforms or steps initiated since 2022 to address some of the problems Treasury identified?
In respect of managed investment schemes, I'm not clear what you're talking about in terms of issues that Treasury has identified.
Well, I believe in response to the question or notice, you'd confirmed you provided 7 pieces of written advice to government on problems with the regulation of managed investment schemes.
Yeah, so much of that advice would have occurred in the context of either establishing or through the course of and after the managed investment scheme review that Treasury commenced in 2023 and concluded in 2024.
And has any action been undertaken since that review? Legislative reform, other changes, regulatory reform?
Not specifically in relation to managed investment schemes.
Okay, so the same vulnerabilities or challenges that you've identified in those at least 7 written pieces of advice still exist today when it comes to the regulation of managed investment schemes?
So the purpose of the review was to examine whether the regulatory framework for managed investment schemes was fit for purpose. The terms of reference of that are publicly available, so you can see those, and the work that we did in the report that was produced attended to those issues.
But there has been no legislative or regulatory changes since?
No, the report sits with the government.
The report sits with the government, okay. We also asked in a question or notice about the Treasurer's statement of expectations for ASIC. It's normal to do a statement of expectations for regulators. We didn't get a response by the deadline on that. Is there a draft statement of expectations with the Treasurer or his office currently?
Senator.
Just a second.
So following the Economic Reform Roundtable, there were statements made by the government about updating statements of expectations to make sure the kind of right balance between the objectives of the regulators and red tape. We are now going through a process to update statements of expectations in the portfolio. We have just very recently provided an updated draft statement of expectations to the government.
You say an updated draft, but as I understand it, there wasn't a statement of expectations for ASIC in place.
There's been the last version. So there is an existing statement of expectations for ASIC. It was last updated in 2021.
I was going to say, it dates to the previous government though, right?
Yeah, that's right.
So the last statement of expectations...
It stands. You'll find it on the ASIC website as the current statement of expectations.
Okay, so there have been no changes to the statement of expectations since 2021. And the draft that's currently with the Treasurer, is that the first draft that has been provided to the Treasurer?
I understand in 2024 there was a draft provided then, Senator.
In 2024?
Yeah.
But that draft was never approved?
It was never finalised, Senator. No.
Never finalised. Was there any reason given for that?
We just have to take that on notice whether we received this record of why it didn't progress.
Okay, it seems like quite an oversight. I just wanted to also ask as well about anti-hawking.
Can I just intercede on the ASIC
Yeah,
thing?
of course, sorry. Go ahead, Senator Brad.
Do you mind, just with the ASIC thing? So, there is no, just to be clear, so the Treasurer Chalmers has not made a statement of expectations for ASIC.
The Treasurer has not released a new statement of expectations. There is a standing statement of expectations for ASIC that's still current.
Sure, but when you say new one, you mean new statement, thereby perhaps you are inferring that he had one before, but he hasn't ever had one, has he?
So there is an existing statement of expectations for ASIC. In some ways, that belongs to the government. The government hasn't changed it, hasn't updated it since coming to power. So there is a statement of expectations. That's the basis on which ASIC's operating. What I did say was we have previously provided a draft of an updated version of that, or a kind of revised version of that. And we've more recently provided a further one following the Economic Reform Roundtable, specifically focusing on those aspects coming out of the roundtable.
And does it deal with these law enforcement issues? Does it encourage them to do a better job and to actually put people in jail?
Senator, that issue of that aspect of their functions, that's already covered by the existing statements of expectations.
We're at 10 minutes for this block. Can I just clarify that though? That last statement of expectation to ASIC, that was provided to this chairman of ASIC or the previous chairman of ASIC? It was clearly provided by the previous treasurer, but was it to this chair or the previous chair?
It was the current statement of expectations with ASIC was finalised shortly after the current chair became chair.
Right, so it was for Chairman Longo.
Yes.
But it was from Minister Frydenberg.
That's right, Senator.
Thank you.
And Mr. The current chair actually had a chance to comment on that statement before it was finalised.
Okay, thank you. I'll rotate the call now and we'll come back. Senator Pocock.
Thank you. I have questions in relation to the External Reporting Australia agency, which is to be established. And that combines three financial bodies, the Financial Reporting Council, the Australian Accounting Standards Board and the Auditing and Assurance Standards Board, all into one. Am I in the right spot? Thank you, that's good to know. The new body, called External Reporting Australia, will be responsible for, quote, the settings of accounting, auditing and assurance and sustainability standards. I understand that this was announced in 2023 and recently Treasury has consulted on draft legislation with submissions closing last week. Is it still the government's intention for this body to be operational by the 1st of July 2026?
Michael Quinlan, Assistant Secretary, Corporations Branch. It's still the government's intention, subject to legislation passage, for it to start on 1 July.
Thank you. I've got some concerns about some of the design features of the new body outlined in the consultation paper. Will External Reporting Australia have mandatory information gathering powers with respect to the professional accounting bodies?
Sorry, Senator, I'll probably have to take that on notice, sorry.
You're not sure whether it will or it won't?
I'm not sure, sorry.
Okay. Did the department consider requiring the new... So thank you, you'll take that on notice. I look forward to hearing exactly how that's going to go. Did the department consider requiring the new body to act in the public interest, not just in the interests of economic benefits?
Perhaps Senator Tony McDonald, First Assistant Secretary, Digital Policy and Corporations Division. The focus of the reform of these bodies is to effectively consolidate the existing arrangements. We've got three bodies that oversee very similar elements, and so bringing them together is designed to introduce greater level of coherence with a single governing body. The draft legislation has taken into account feedback that has been raised on the previous consultation paper. But we will, of course, the team has been going through and engaging with a wide range of stakeholders. A number of issues would have been raised in that process and they'll currently be under consideration.
And which consumer bodies, as opposed to industry representation bodies of, for example, accounting and assurance organisations, how does the average Australian, how are they represented in your processes of a consultation?
Well, I mean, it's a broad. It is a good broader point, Senator, that we have with consumer bodies across the board, that the resources that they have to engage in consultation processes, not just in this area but across the board, is challenging. We seek to engage with that in a number of ways, but including through having a public process of consultation. The other element, though, is one of the things that we stress to our staff is to consider all elements of and all perspectives, even those that are not able to sort of articulate views as clearly. But that is a challenge, but it's one that sort of we seek to engage with in providing comprehensive advice to government.
Can you provide on notice, as a matter of interest, who you did consult with in relation, who provided perspectives? I'm curious to see the range of industry bodies and the way in which the citizens' voice reaches this process.
Very happy to take that on notice, Senator.
Thank you. Thanks, Mr McDonald. I'd like to turn to the criteria for appointments to the Governing Council of this new body. A major contributor to the many, many challenges that have risen in reviews of the Big Four consulting firms has been the general question of regulatory capture. There was no rule to prevent former partners of the Big Four, for example, with financial ties to them, including long trailing sources of income, sitting on the Tax Practitioners Board, which is why we moved an amendment to fix that loophole that allowed big consultants to regulate themselves. Now we're in the precipice of establishing a new standard-setting institution for consulting, auditing and accounting. How will eligibility work for appointments to the Government Council and technical standard-setting boards under the draft legislation?
Well, I think the connection that we have here, Senator, is that in technical bodies like this, it is often is very important to have detailed expertise and experience in how these standards are applying. But there are mechanisms that are there to identify and address conflicts of interest, to both ensure that the relevant minister has awareness of those before any appointments, but also the capacity to terminate appointments in appropriate circumstances. But I don't know if Ms Quinlivan has anything to add to that.
That doesn't sound like an exclusion of someone who has a current financial interest in a body regulated by this body.
No, but I think that goes to the sort of point that if you, the more you have a blanket exclusion in the legislation, then sort of, then you'd be limiting the sort of the scope of the number of potential sort of participants in the role.
Yes, we certainly are limiting it.
So the question is, in that circumstance, are you better off leaving that open, but sort of being aware of the risks that come up and consider whether or not those risks are able to be appropriately mitigated, or having a more blanket ban that then sort of constrains the number of individuals that are available on that group?
I find this incredibly unconvincing as an argument, I must say, from the government. There are thousands of people who would be eligible with expertise. Some of them will be retired, recently retired last week, not receiving income, who would be eligible. I think this putting foxes into this hen house is entirely inappropriate. Minister, I would be interested to hear your view on this. I just remind you, on the TPB, we had appointments made by Minister Sukar of current partners of PwC, for example, who did not excuse themselves, as of course any principled and ethical person would, when matters related to their company are before the discussion of the meeting. They did not take themselves out of the room. This is not an appropriate measure. We need to have a clean wall around conflicts of interest in an important new body like this. Minister, what's your view?
Well, I don't disagree with those principles that you outline. I think you know, and I'm sure that the Assistant Treasurer will be taking that into consideration, and I'm happy to send your comments to him.
Thank you.
Senator Pope, can I just ask one clarifying question?
Sure.
Mr McDonald, you would be aware, I'm sure, that there is one accounting body at PwC that has a very different model of retention payments for its former partners. Can you assure me that that will be considered or has been considered?
I think this goes to the point of in providing advice to ministers of appropriate people and risks and considerations in making appointments, and I would consider that to be highly relevant information that a minister would take into account. Indeed, many of the points that Senator Pocock would be making, sort of not disagreeing with those points. The question is, they would be factors that sort of a minister would take into account in making the appointments. The question is just sort of where you put all of those, how much you put clear restrictions into the law that limit you to appointing someone who you may wish to, and to what extent sort of you rely on sort of the process of ministerial appointment to deal with the myriad of considerations that could come up to make sure that you have appropriate people in those roles.
Thank you.
It seems to me that requiring a minister to have full knowledge of all of the behaviour and interests of individuals that are appointed without a clear firewall around a financial interest in a body that is going to be regulated by this organisation. The only safe way to do that is to have a cut between financial interests and membership of a body. If you are regulating an organisation that you are drawing a financial income, it doesn't matter how good a person you are, there's a perception of conflict of interest and the real possibility of an actual conflict of interest. And, you know, Australia has an internationally significant case study in how not to do this. If we don't learn the lessons of our own experience, what are we here for? Why are we putting years of our lives into trying to fix this stuff? I hope, Minister, that this will really, you know, that there will be serious attention paid to this. Have you, in the process of constructing this new body, considered requiring that it include experts who have particular history and expertise in the field of ethics?
I would have to take that question on notice, Senator.
Thank you. Thanks, Chair.
Thank you, Senator Pocock. Senator Sharma.
Thank you. I just wanted to return briefly to the statement of expectations issue, because I understand when the Treasurer spoke to the ASIC annual summit in Melbourne on 2023, he announced that we will soon be releasing a new statement of expectations for ASIC. So that was in 2023. I understand a draft was provided to the Treasurer in 2024, Mr Kelly. That's what you said earlier?
That's right, Senator.
Okay. But that draft was never approved?
That's right, Senator.
Okay. And there is now, in 2025, a new draft post the Productivity Summit that's with the Treasurer's office?
Yeah, advice has been provided to the Treasurer, Senator, yes.
So when do we expect that to be approved? In 2026?
Our current expectation and what we're working to is to finalise it by the end of this year.
By the end of?
Of this year.
This year, okay. So it'll be 2 years at least since it's promised a new statement of expectations, and 4.5 years since the last one was issued by the previous government under a former Treasurer.
Senator Sharma, the Treasurer has been considering a new statement of expectations in light of some of the commitments made at the Economic Reform Roundtable with a particular focus on productivity. As Mr Kelly said, the expectation is to have that finalised by the end of this year.
All right, thank you, Minister. Just returning to First Guardian and Shield, some of the issues have been the failure to adhere to the anti-hawking provisions. In a previous answer to a question I noticed, Treasury advised that they didn't provide formal advice where the substantive topic was anti-hawking issues, but did raise it in other aspects of your work. So I just wanted to understand, with these multiple pieces of advice Treasury has provided to the government on problems with the regulation of managed investment schemes, the 7 pieces of advice, undated, were the issues of cold calling or loopholes in our anti-hawking laws canvassed or covered at all?
So those issues around anti-hawking were canvassed in the context of broader issues around the way that financial service providers might engage with clients or consumers. So really in the context of the broader sort of practice of what might be termed lead generation, which encompasses activities that are in some ways outside the scope of the anti-hawking provisions themselves.
Sorry, I couldn't hear what you said, Dr. Moore.
So they encompass activities. Senator Sharma asked about the context in which...
I just didn't hear the last 2 sentences.
Oh, the last 2 sentences. So
activities outside.
Outside of... so it encompasses activities that might sit strictly outside of the anti-hawking provisions. So there's practices around lead generation that happen that are technically not caught by that. An example of that would be a situation where a consumer, and this has happened, there's evidence that this happened in the Shield and First Guardian case, where a consumer might be approached and click on a link, and by the mere fact of clicking on the link, they provide effectively consent and then are able to be approached outside of the anti-hawking provisions. So it's in the context of those broader behaviours around lead generation that have been fairly clear and obvious in the context of Shield and First Guardian that kind of advice would have been touched on.
So it's fair to say that Treasury was aware of concerns about cold calling, loopholes in the anti-hawking provisions, and it had provided advice on those issues in the context of this broader consideration of the regulation of managed investment schemes?
That's correct, yes.
All right, thank you. The ASIC chair, Joe Longo, he who's awaiting the statement of expectations, has publicly raised concerns about ASIC's resourcing, including most recently at the Parliamentary Joint Committee on Corporations and Financial Services, where he said underinvestment in ASIC poses a risk to our regulatory work. How many requests or how many times has ASIC made requests to the government for additional resourcing in the past 3 years?
Senator, I might have a first go at answering that question, then go to Ms Kelly or others if they want to add to it. I don't think there's a simple answer to that question when you think about the budget process. So like a budget process has multiple entry points as to what gets considered by government in terms of funding for an agency. An agency may have ideas of its own. It may talk to Treasury about them. We'll work through some of them. Some of them may get discarded just at that point of it doesn't make sense. Others may progress as kind of recommended by the agency, or the agency kind of formally puts them for consideration, and then we will kind of reflect that advice to our ministers in terms of what they want it being through forward in the budget. Ministers themselves also have to make decisions on that. Typically, when like a really obvious cases where we think about resourcing is when a new function or additional clear extension of an existing function is given to an agency. That always raises a resourcing question. So largely as a matter of course for those that we would bring that to the government's attention, and we would work with the regulator about, well, what is the resourcing implication of that? So that's like fairly standard, but resourcing can turn up as a discussion or a point of reference at many points over a year, and so it's very hard for us to go back and say it was X number. I just don't. I don't even if we tried, I don't think we can actually honestly give you a specific number.
Okay, no, I appreciate that. But is it fair to characterise it as there is active discussions with ASIC and have been for some time about their resourcing requirements? From Treasurer's
I've been in this group for 10 years, and there's always been active discussions every year with ASIC about funding issues. I would generally, as a characterisation, Treasury itself has had concerns at points about ASIC's resourcing and has been quite supportive of additional funding being provided to them. I think, in effect, there was an uplift in funding provided to them following the Royal Commission. And in recent years, ASIC has been funded for a number of things. Some of them are very discrete, relating to the business registers program that they're going through to update. But Treasury has been, I think from our point of view, we've played a constructive and supportive role for ASIC, and the government has been willing to give ASIC funding requests proper consideration.
Okay, thank you. Have I got 2 minutes left?
2 minutes.
All right, thank you. I'll be very brief. ASIC recently accepted a court enforceable undertaking with Macquarie regarding the First Guardian Shield collapse. I think particularly the Shield Master Fund in particular, with reference to Macquarie, in which ASIC didn't choose to seek a civil penalty, citing exceptional circumstances and cooperation by Macquarie, and only required Macquarie to repay the contributed capital, not the full loss value or the opportunity cost, despite Macquarie admitting it had breached the Corporations Act. Was Treasury Markets Group briefed by ASIC before ASIC agreed to that outcome?
Lynn Kelly, First Assistant Secretary, Financial System Division. As a matter of course, immediately prior to ASIC having any significant enforcement action or settlement, we will be briefed immediately before. But because of the nature of their different agreements and enforcement undertakings, there are requirements to protect the independence and the confidentiality of these arrangements. So it is typical that we are only briefed immediately before.
So, and you were briefed on the nature of this enforceable undertaking, in particular that no civil penalty would be sought. Macquarie would only be required to repay contributed capital.
At a high level, we were briefed immediately before.
Okay, and did Treasury express any concerns about that approach? Just bearing in mind the potential moral hazard that's being established here.
We did discuss with ASIC the novelty of this arrangement. I believe it's the first time they've done something. From what we understood, the focus for ASIC was in relation to achieving compensation for consumers as quickly as possible, and they discussed that with us.
Okay, but doesn't this mean that members are worse off because ASIC didn't seek full compensation or a penalty to deter future mistakes?
Not necessarily. To the extent that consumers have other losses, there are still other avenues for compensation for them. This is just in relation to the capital that they invested through Macquarie's platform.
Okay. Last question. You mentioned, Ms Kelly, the novelty of this arrangement. Does Treasury have any concerns about the precedent this might set, or whether this is consistent with the post-Hayne regulatory settings for trustee misconduct?
These matters are incredibly complex, and each one needs to be considered on its own merits and its own facts and circumstances. I know that ASIC have significant other enforcement actions against a multitude of parties in relation to Shield and First Guardian, and they need to be considered individually. I know they've had over 50 court appearances, for instance, so in our discussions with ASIC, they have been very clear on an approach that's appropriate to each particular case rather than one size fits all.
Okay. Thank you, Ms Kelly. Thank you, Chair.
Senator Whitten.
Thank you, Chair. I've got some questions in relation to cash mandate and access to banking. Were all of the major banks consulted on the proposed cash mandate legislation?
We have consulted very broadly on the cash mandate. We have done a number of consultations.
I'm quite deaf, if you wouldn't mind just talking up a little, thank you.
Sorry, I'm having flashbacks. I think we had the same conversation last time, so am I. We consulted very broadly on the cash mandate. We consulted with consumers in a range of towns and cities across the country, Mildura, Darwin, Adelaide, Townsville. We also consulted with industry, so we consulted with the banks, we consulted with major retailers, we consulted very broadly, both on the policy settings, but also more recently on the exposure draft.
Okay. And did you receive submissions from all the banks?
We received a lot of submissions. I think on the cash acceptance mandate, we received over 3,500 individual submissions. We also had 50 organisational submissions. I believe one was from the Australian Banking Association.
Yep. How many were published of the submissions?
So we haven't published the 3,500 individual submissions, just given the volume of that. I believe the organisational submissions have been published.
Okay. So in the exposure draft, there's a provision for the ACCC to provide an exemption to a business in exceptional circumstances where the costs associated with complying with the mandate would be too high. How will exceptional circumstances be defined?
So we've given that the exposure draft gives that discretion to the ACCC, so it can nuance based on the particular circumstance, but what we had in mind in that was natural hazard events. So there's a major flood and you can't, all the roads are closed and you can't actually get cash in. That would be something to take into account.
Is there an actual definition, or is it just case by case?
It will be case by case. In some cases, for instance, when we've had those natural hazard events, we've had to helicopter ATMs in. So you have to look at the actual event to see what's appropriate.
Yep. So if the location in which a supermarket or a fuel outlet is situated does not have a bank branch or reliable financial institution to obtain cash floats or deposit business takings, will this be considered an exceptional circumstance?
It could be. However, there is another piece of work that the Council of Financial Regulators has been undertaking around a cash regulatory framework, and a big underlying driver for that piece of work is to ensure affordable access to cash around Australia. So the two need to fit together.
Okay. So an example is in Queenstown in Tasmania. A local petrol station began refusing to take cash payment about 2 years ago. The town recently lost its last bank and the post office has been unable to keep up with the demand for cash, frequently having to put out calls on social media begging for change. The town running out of cash made national news a couple of weeks ago. Would a major brand service station or supermarket in town experiencing issues such as this be granted an exemption from the legislation under exceptional circumstances?
Again, that would be something for the regulator to consider. However, the cash regulatory framework that the Council of Financial Regulators has been working on is looking around how to ensure there is affordable access to cash, and some of the features that have been consulted on are service level standards for regional Australia.
Okay. If there's no mandate for banks to provide cash services out of the regions, how could the cash mandate be effective for regional communities?
So we have been working very actively with the banks in relation to regional banking services and how to shore them up. So there was obviously the announcements in February around the moratorium and the extension of the bank at post. But we've also been actively working with banks around how they will lean back into regional banking services. An example I would highlight is Westpac's announcement last week around trialling community banking hubs with local council in partnership and looking at graduate programs in the region. So there's a range of activities that we've been working with the banks around how they will lean back in and shore up regional banking services.
Okay. I'm not sure if you remember the last time I was here, I asked if the Treasury had provided government with advice in relation to the RRAT report that recommended an expert panel be commissioned in relation to establishing a government bank. I was told that the summary had been provided to government on recommendations of that report. Are you able to make available the summary or any further advice since then?
I can take on notice if we can make available the summary. We haven't provided any further advice in relation to setting up such a body.
Okay. Has there been any discussion around securing a regional bank closure moratorium, in particular from Bendigo Bank?
So the moratorium that's currently in place, and I know one of the majors has actually extended theirs out to 2030 now, has been focused on the major banks, mainly because the major banks have been the main drivers of regional bank closures. I note that Bendigo has closed a number of branches and agencies. The agencies actually predated the bank at post arrangements. They've been in bank at post for a long time. A number of the branches they've closed have other branches within a 5 kilometre radius. So conscious that for them, it's been, in some cases, it's been consolidation. Also conscious that Bendigo has the third largest branch network in the country. One of the things that became very clear when we did the review of the small and medium banks, the Council of Financial Regulators did, was around the importance of small and medium banks in terms of competition in banking. And so one of the things that we're conscious of is not introducing new barriers to competition for small and medium banks, which is why the moratorium is very focused on the major banks.
When was the last time a small or medium bank opened in Australia?
APRA can give you that data. They're here later today. I know that APRA have, I think it's roughly 50 banks that are considered very small in Australia, but they'd give you the data in terms of when they've approved a new licence.
And is the Treasury aware of the growing trend in the banking sector towards cashless sites that focus on lending referrals and advice rather than providing traditional banking services?
So we are aware and have been talking to the banks around different trends. Some of the cashless sites are not strictly cashless. It's just a definitional thing where, say, the APRA points of presence, to be considered not cashless, you actually have to have a teller, cash over the counter, where in many of these locations, they actually have a smart ATM, someone concierge to assist. So there is cash still being provided. So we're just conscious of the stories within the data. Likewise, some of the cashless sites are actually focused on small and medium banks and small and medium businesses and their customer needs. So we are talking to them about the access to cash, but we also recognise different customers have different needs, and so they have to adjust their business models for a retail customer versus a business customer who's looking at loans, for instance.
Okay. Given the government is going to introduce mandates around the use of cash, should it not also require banks to provide cash services to the regions?
We are actively working with the banks in relation to the cash access framework and the role that they play in relation to the provision of cash around the country.
You're at 10 minutes.
One more. Yep. Given our cash states on it that is legal tender throughout Australia, and up until now businesses didn't have to accept cash, but come the 1st of January some businesses will and some won't. Do you think it might be confusing to some people around the rules?
So This is why we went out and consulted, and the original consultation looked at having the cash mandate around essential goods and services. There was no consensus what that meant, and it also, because there needs to be appropriate exemptions for small businesses, that was confusing. So the approach that the government now is taking is around groceries and fuel, because they were the key things that came out that everyday Australians consider everyday needs, and there are 1.4 million Australians that use cash for 80% of their daily needs, and they got kind of all coalesces around groceries and fuel. These are also industries where there are existing codes, so there's all the existing frameworks to implement it in a way that provides certainty.
Thank you. Thank you, Chair.
We will now suspend for lunch and resume at 2:15. I had hoped to let Markets Group grow, but there are still a few senators who have questions for you, so you'll have to come back after lunch too. So 2:15. Thank you, everyone. We'll kick off again, continuing with Markets Group. So I'm going to go to Senator Hume.
Thank you, Chair. I first want to follow on for some questions around this First Guardian and Shield issue that Senator Sharma was raising earlier, and specifically about some of the response from industry that seems to be proposing measures that would either restrict or discourage or slow consumer switching between funds, which I find incredibly frustrating. I mean, the idea that there's been a fraudulent market actor, there's potentially been inadequate oversight of that, but somehow the responsibility falls onto the consumer to have their experience slowed down. So can I ask whether industry has approached Treasury around measures that would restrict or discourage or slow consumer switching between funds?
A lot of, as you would expect, a lot of people have reached out with different ideas, and some have raised concerns. I think it's on the back of ASIC had put out some warnings back in, I think it was 2024, around high pressure sales tactics. And so there was concern that some consumers are suffering from high pressure sales tactics, and so different people have different ideas around what you could do to address that. And some stakeholders have suggested slowing things down. There is a range of options, as you can imagine, have been raised with us.
So has Treasury considered those options that would add steps or delays or additional requirements to the switching or the rollover process?
So obviously we listen to everyone's ideas and we take them on board, and that, as you would imagine, that's a natural process. But we're not at this stage advocating for anything. We're still, ASIC have got a lot of enforcement action underway, and so we are looking at how that's progressing and taking it on board a lot of the different ideas that different stakeholders have raised, both in industry, both in consumer groups.
Okay. So you are not yet at a stage where you have provided advice to the Assistant Treasurer on changing or moderating or slowing the superannuation switching process?
So we have certainly been providing advice to the Assistant Treasurer, and in our advice we do absolutely acknowledge the different views stakeholders have raised, different ideas stakeholders have raised, so that he's aware what industry, what consumer advocates are raising with us.
But there hasn't been a Treasury recommendation one way or the other?
That would go to our advice to government.
Okay, so the advice to government has been provided, but it has essentially expressed the views of the broad views of industry as opposed to recommending a particular course of action.
We have provided advice to government, and we have, but obviously I'm not going to go into the nature of the advice we have provided to government. We have also advised government of the different views of stakeholders across the industry.
Okay. Can I ask about the review into the performance review? And I know that the performance tests. And I know that this is something that we have discussed before.
Sorry, Senator, the performance test is now within Revenue Group.
It's now in Revenue Group. When did that happen?
About a year and a bit ago. The team that were just here previously cover superannuation policy now.
I am absolutely certain I asked you guys these questions last time.
You probably asked me this about 2 years ago, but it is about 15 months ago it moved across to Revenue Group.
Okay, all right. I will put those questions on notice to Revenue Group. Had I have known that, I would have asked them at the time. Thank you, Chair.
Thank you. Senator Payman.
Thank you, Chair. Good afternoon. My questions are around the unfair trading practice reforms. In November, it was announced that agreement had been reached with the state and territory consumer affairs ministers on unfair trading practice reforms. Just curious to understand what the status of the development of legislation in that area is.
Thank you for Thank you for your question. Megan Trudgeon, Acting Assistant Secretary of the Competition and Consumer Branch. As you may be aware, on the 21st of November, Consumer Ministers agreed to the proposal to amend the Australian Consumer Law to introduce unfair trading protections. The new laws will have 3 key elements: a general prohibition on practices that manipulate consumer decision-making and consumer harm, address unfair subscription practices, which I know you're very interested in, by requiring businesses to disclose key information before signing consumers up for a subscription, notify consumers before a free trial ends, and remove unfair barriers to cancellation. And the third element is to strengthen protections on drip pricing by requiring businesses to show mandatory transaction fees prominently and upfront during that transaction. That progressing the nationwide reforms to protect consumers from unfair trading practices is an agreed priority of the Commonwealth, State and Consumer Affairs Ministers, and progression of the draft legislation has been prioritised by government as above the other consumer reforms. We do expect to be commencing the legislative process shortly, or actually immediately, and we expect to be going out for consultation in early 2026.
Early 2026, okay, that's great. Just in terms of the features of the legislation, will the legislation confer a particular sort of click-to-cancel responsibility on the subscription services?
In relation to subscriptions, the details of the legislation have yet to be settled, but in particular, we want to make sure that businesses are providing material information and make informed decisions. It will be based on a principles-based approach, so we won't necessarily be using that particular terminology. But in essence, it's aiming to achieve that the same amount of clicks and processes that you can use to sign up to a subscription should be able to be used to be cancelling that. So no unreasonable barriers to be able to cancel a subscription for consumers.
Great. And will the legislation require clear and timely auto-renewal reminders for the subscription services?
Yes. So as part of the reforms, we want to make sure that customers are required to be contacted at key points throughout the subscription, and that will include when particularly a free trial may end, just to make sure the consumers are informed about the elements of that subscription.
And will the legislation prevent forced account creation for one-time purposes, or purchases rather, so customers are not forced to create or store an account, which often results in future charges, data harvesting and unsolicited marketing?
Yeah, so that was an element that was consulted on as part of the unfair trading prohibition work. In looking at submissions and consulting with stakeholders, the primary concerns in that space were about the request of information and about the privacy of those customers. So there was a lack of stakeholders that actually supported that reform in this Australian consumer law to address that serious issue. Stakeholders primarily viewed that as a privacy-related issue and saw that the best avenue for that to be progressed is through more privacy-related reforms rather than through the consumer law.
Okay. And you mentioned drip pricing. Will the legislation address dynamic pricing based on demand levels, browsing history, the type of device used, to outlaw businesses using algorithms to increase prices for certain individual consumers based on how often they've searched for an item or what device they're using or the current demand?
So the reforms do include an element for drip pricing, which is making sure that the prices throughout a transaction are known at the start of that transaction. In relation to dynamic pricing, where pricing increases during the purchase process based on things, as you mentioned, like search history or demand during that process, consultations revealed that there was no real evidence that this was occurring to a substantial degree, and where it was occurring, that it was already adequately addressed by provisions in the consumer law, such as misleading, deceptive trading. So we understand that that is a concern, but at this point, the government has decided to progress with the general prohibition, which also should assist with some of those practices, and then utilise existing provisions in the legislation, such as misleading and deceptive conduct.
And so that current provision, what are the consequences of, in the instances where businesses are using dynamic pricing?
Dynamic pricing, the current provisions in the consumer law?
Yes.
So misleading and deceptive conduct is one of those key provisions which may be at play for regulators to have a look at, that if consumers are not receiving information and the pricing is not based on a fair and transparent way, that regulators would look at that on a case-by-case basis. But certainly in this space, we do expect the general unfair trading prohibition to go really a long way in improving the fairness of those transactions.
And then there's also the element of manipulative urgency or scarcity tactics. Will the legislation prohibit the use of those tactics and similar pressure-based design techniques that distort purchasing decisions and create the artificial time pressure for consumers?
In relation to the specific reforms that have been progressed through legislation, the general prohibition should go a long way to addressing some of those behaviours that may be described as dark patterns, so manipulative behaviours by online platforms primarily, noting though that these provisions will apply to both online and in-person transactions. But we would expect that the general prohibition on unfair trading will capture a lot of those behaviours, as well as behaviours we've not yet seen in the market. That's the strength of a principles-based prohibition, so it can be dynamic and respond to how businesses are changing their trading practices. The detail, though, will be worked through in a legislative process as well, and a general course of business is that we would consult on that as well.
Wonderful, thank you. Just on price gouging in supermarkets, I know that the submissions to the consultation closed on 3rd of November. Just curious to understand the status of the task force advising on the excessive pricing regime.
Yeah, thank you. That one is from me as well. Yes. So as you're aware, the consultation's closed on the 3rd of November, and the government is considering the outcomes of that consultation at the moment. So the task force met with a range of stakeholders, including supermarkets, consumer advocacy groups and industry experts as part of that consultation.
Yeah, cool. And during the last estimates hearings, I had a similar line of questions, and the Minister said the government's commitment in response to substantial community concern was to develop legislation by the end of this year. Is this still on track to occur?
Treasury is on track to support the government to deliver on that election commitment. The exact timing is a decision for government.
Minister, do you have any indication?
No, I'm sorry, but I can see if there's anything further I can provide.
I can certainly assure you, though, that we are on track to deliver on the government's commitment in that regard.
The ACCC's investigation into price gouging in supermarkets was inconclusive. Just curious to understand why is the government taking action to address a problem that may not even be a substantial cause of the cost of living crisis? That's what sort of speculations are out there, and I'm just curious to understand what rationale or reasoning there is.
The government made an election commitment to introduce certain measures, particularly excessive pricing measure in relation to supermarkets. So Treasury has been working and focusing on that. The ACCC did make a number of wide-ranging recommendations, and we're also progressing reforms on unit pricing and shrinkflation, and a number of other the ACCC recommendations later on next year. Sorry.
Has Treasury done any modelling, or does Treasury believe there's price gouging occurring in our supermarkets?
I would have to take that in question or notice in terms of whether we've done any particular modelling. We've certainly spoken extensively to a number of stakeholders, both consumer groups and industry groups as well, about what price, whether you want to call it price gouging or pricing behaviours of the large supermarkets and those types of things. In terms of modelling, I'm not sure that would be something that we would have access to, that type of data, because that requires information on what actual supermarkets are purchasing and what they're purchasing products for, their costs associated with providing that supermarket service, and then the profit margins on top of that. That's the type of information that the ACCC would be seeking to obtain with the information gathering powers that would come along with the excessive pricing regime. At the moment, we don't have access to that data, but with the proposed amendments to the Food and Grocery Code to implement that, it would provide the regulator with the ability to actually have a look and probably get, whether you want to call it modelling or just be able to conduct the analysis to really see if there is excessive pricing in that space.
Yeah, okay. And yeah, I can wrap up. So just on the previous estimates, or round of estimates, when the Minister was asked whether the government would support other sectors being subject to price gouging bans, he said, we're not going to complicate it and have a delay, we're going to get on with it. Would the government consider expanding the laws in the future?
I think whether the government wants to make a decision on expanding the laws is a matter for government. In relation to the mandate that Treasury was given in relation to supermarkets was to focus on the supermarket sector. We're certainly always speaking to stakeholders about market concerns in other sectors as well, but whether the government chooses to proceed with that would be a matter for government.
Minister, would you like to comment on that?
No, we've got the commitments that we've made already, and we're on track to deliver those as per the election commitment, but that's been the focus to date.
Thank you. Thanks, Chair. Senator Canavan.
Thank you, Chair. I just want to clarify first, I suppose, the Markets Group does still sort of have an energy team or focus on electricity at all? No, not at all?
Senator, that's in macroeconomic group.
Oh, right.
In the,
okay.
They've got a climate, energy and
okay. I've got a
division.
question about the rule, like national electricity rules.
That would be for macroeconomic group.
Oh, did that used to be in markets?
Markets did some work in it at one point, but...
sort of a microeconomic issue, though. So why would macro...
There is a climate, energy and trade division within macroeconomic group.
Okay.
And so they're very much on top of those issues.
All right, we'll wait for them. Thank you.
Thank you for saving some time. Is it Senator Hume?
I have a very, very short line of questioning, some of which I'll put on notice, about the consumer data right, which does sit with you guys, yes? I just want to know how many FTE currently work on the CDR compared to 2022.
Sorry, what's the question? How many?
How many FTE work on CDR?
Sure. So within Treasury, we have two broad teams looking after CDR. There's sort of CDR proper team as well as the Garda Standards body, which is within my division as well. We would have at the moment around 20 in the first team. The second team, we're in the Garda Standards body, we're in the process of shifting the balance of that workforce from contractors to APS staff, so that's a work in progress. By the end of this financial year, that would be, I think, so it's in the process of increasing. By the end of the financial year, it would be about 28 FTE in the Data Standards body by the end of 25-26.
So the Data Standards body used to be people from industry that would feed back information through. They weren't necessarily...
well, not quite. It's always been a sort of public service entity. It's a question of the balance of the workforce between contractors and APS.
But it's not a full-time role, the Data Standards body, or has it always been?
So there's a difference between the Data Standards chair and the Data Standards body, which is the team that supports the chair in the role.
Right.
And there's quite a body of work that's underneath that. So I'm not talking about the chair, I'm talking about the Data Standards body. That's part of my division as well.
Right.
And so... Sorry, James.
There is also the Data Standards Advisory Committee.
That's it. It's the advisory committee that I'm thinking of.
And so that is still there. The current chair has kind of re-established that with the expanded membership.
That's what I'm thinking of.
Yeah.
Okay, thank you for that. All right, and can I ask, in August last year, the former Assistant Treasurer announced a reset of the CDR. When will that be finalised, and what does it involve?
Well, it's an ongoing work in progress. What it involves is broadly seeking to reduce the costs of CDR, costs broadly defined, so not just the costs of government, but importantly the compliance costs of business, but also increasing the benefits of CDR by unlocking use cases and trying to realise the vision of the CDR process. So, as you said, this former Assistant Treasurer had outlined in his speech a number of elements that reset would involve. We have been engaging with a range of stakeholders on those issues, including on some draft proposals in targeted consultation, and we would expect to be providing advice to government on those early in the new year.
Okay. So the stuff that you had consulted on, that was like a de minimis proposal, and it was framed as a measure to improve uptake and reduce costs. But part of it was decommissioning 55 banks from the CDR. So how does that achieve the government's objective to improve the uptake?
So in the minister's speech, talking about the challenges of the CDR, he said, and I'm quoting, that the costs massively exceed the original estimates. And he also said that there is an acute burden for small customer-owned banks, particularly the ongoing investment required into compliance costs for standards and rules changes. So there it's about the cost-benefit equation.
Yep.
And the point that we've been consulting with stakeholders on is how we might better get that balance right in the proportionality. Another thing that was talked about and we've been consulted on as well is around the Minister talked about restrictions on using and holding CDR data as a barrier to uptake. And there, for example, alternative ways of sharing data, such as screen scraping, don't have the same limitations on them of how that data is used and shared, which creates an unlevel playing field. So one of the other points that we've been consulting with stakeholders on is how you seek to regress the balance. So some of the elements that we're looking at, both of those elements are about how we shift the cost-benefit equation of the CDR system across the board.
So on that issue of screen scraping, the Minister, the now Assistant Treasurer, just recently said that delivering these benefits in the past required screen scraping and data sharing. This exposes consumers to unnecessary risk. And the CDR delivers those same benefits with security and trust built in. So again, he clearly thinks that consumers should be switching away from screen scraping to use CDR because it's more secure. So how does decommissioning 55 banks, how is that consistent with the position on screen scraping? Surely the customers of the banks will now need to use screen scraping on some other non-CDR version of sharing.
So, well, I guess I make 2 points, Senator. First of all, this is a question of how we balance competing considerations. So if you're looking at the issue in relation to small banks, is to what extent are we imposing significant costs on them that where the level of usage and uptake is relatively small, which could be seen as a perverse outcome for a measure that's intended to promote competition in the financial sector. But the second point I would make is these are understanding the trade-offs, understanding sort of the balance between how much of an imposition it is to individual banks and what the benefit is on the other side. That's why we're engaging in the targeted consultation that we have been, so that we can provide advice to government ahead of any rules being made.
I understand that, Mr McDonald, but the whole point of the CDR, and you've just said it yourself, is that it's a matter of balancing the costs and the benefits. All the costs have been put on very few organisations because the benefits come from it being an economy-wide program. The problem is the rollout to the economy-wide seems to have slowed down into nothing. We're not doing telecommunications anymore, or at least the can's been kicked down the road. Open finance has turned into simply non-bank lenders rather than superannuation and insurance as well. Unless we broaden out the consumer data right, there is no benefit for those early adopters. Now, we pushed them into starting this ball rolling, and now they're still carrying the can of something that the reason why no one's taking it up is because there isn't enough good use cases because it's not economy-wide. When will the government take on rolling the consumer data out more broadly rather than deeply?
I think those are matters that the Assistant Treasurer did cover in his speech more broadly. I think the analysis that was outlined in that speech was talking about the challenges that we have had in realising the vision of CDR within the sectors that it currently applies to. And the policy question for government is to what extent do you seek to continue to require more and more parts of the economy to be part of the CDR ecosystem, or to what extent you first of all try and address the issues that have been identified in those sectors to date so that you can move forward with a sounder foundation. And I think a fair summary of the Assistant Treasurer's speech from last year in setting out the reset is that the government is very much focused on trying to get the current rollout right before expanding further.
Minister, is the government still standing behind its commitment to the consumer data right and its broader rollout to the whole economy rather than just financial services?
Well, I think as you've heard in the evidence, it's turned, and I this isn't my area, but I know whenever I engage with the financial services sector, this is usually raised, as particularly around the costs and the fact it hasn't delivered what was originally people thought it would. But yes, we've maintained funding for it. It has required us to consider the feedback that has been provided through it, and I can think of one trying to show kind of real benefits from the CDR has been something that I know people have thought about. Like we've got a pilot underway using digital ID and the CDR around rental applications. So I think that's, coming at it from a few different ways is important. But yes, we do, but we've had to deal with some of those implementation issues as they've become known.
Have you spoken to the financial services sector about what other sectors they would like to see included in the consumer data rights so that they start receiving more benefits rather than just cost?
Look, I mean, this isn't my area of portfolio responsibility, but I think those issues have been raised with me over time, but they've also been raised by other parts of the economy as well who don't want to be, who don't want to become part of it.
I can understand why they wouldn't want to. The whole point of the consumer data right is that the consumer owns data about themselves rather than these big corporates owning the data and then monetising it.
And that's why we remain committed to it, but in the implementation of it, as you know from having... Did you have carriage of this in government? Yeah. The costs and benefits of it haven't been what was originally understood to be.
So I agree with that, and the reason for that is because the vision for CDR is no longer what it used to be.
Well,
and because the vision isn't there, well, then there is no... It seems like that the financial services sector, particularly the banks, are just sort of, kicking along, paying for the upkeep of a system that isn't delivering on the original promise.
Yeah, I mean, we can argue about that. I don't believe that... I think the problems were identified before the government considered the reset.
Okay. All right. Thanks, Chair.
Senator Sharma.
Thank you, Chair. Just had some questions about the new mergers regime, which comes into effect on 1 January. So I understand the Assistant Minister, Minister Lee, announced on the 15th of October that certain changes to the implementing instrument for the regime would be required. When will those, firstly, are those proposed amendments to the determination being made officially?
Owen Freestone, First Assistant Secretary, Acting Competition and Consumer Policy Division. So yeah, they're on track. So we're expecting to finalise advice to provide to Assistant Minister Lee in coming days.
Okay, on track for when?
To be issued ahead of 1st of January.
Okay, and does that include, or does it accord with the undertaking to the Senate Scrutiny of Delegated Legislation Committee that Part 6 would be remade as a separate instrument?
That's being handled by Law Division colleagues, but I understand, yes, that's on track as well. Yep.
Okay, so has that advice gone to Minister Lee yet?
So as I said, in coming days we expect to provide that final advice, and that will include the revised ministerial determination, as you said, Andrew Lee flagged in his 15th of October media release. So it'll essentially action those items, as well as a number of other issues that we always plan to include in the final determination.
What are the other issues that were always planned to be?
So one aspect was the waiver form. So the waiver process is an important way for the ACCC to efficiently deal with low-risk mergers. So we consulted on that process and the waiver form in previous months. And so that final determination will include the final waiver form and the process around the waiver process. And there's also a number of other elements, more kind of technical, that will also be included in that update. Again, just reflecting the fact that we've now been through that period of the voluntary system that kicked off on 1st of July, and we've had the benefit of that experience. So we'll look to make, I guess, minor refinements as part of that determination.
Okay, have you had any concerns expressed from business or industry groups about the uncertainty that's now has been created for a new regime that begins in a little under about 4 weeks, I think, to the day?
We're certainly aware. I guess one point I would note is that the core part of the thresholds that the government announced in October last year haven't changed. So they were laid down in the October 2024 statement. So that core part of the system has essentially remained fixed and won't be changed. So this is the key thresholds that determine who needs to notify. Mm-hmm. The things that are getting changed are exemptions. So again, as you're aware, we did receive stakeholder feedback that some of the exemptions could be broadened. And again, that determination that's looking to get issued in the coming week or so will include those broader exemptions. So the other aspect that has been raised is some additional elements around what we call control carve-ins or additional thresholds. And again, we're aware of stakeholder feedback that, given we consulted on those aspects, I think in October, that stakeholders would welcome, I guess, a longer lead time to adjust. But again, they're not a core part of the system that was laid down in October 2024. These are elements that have been, I guess, consulted on more recently. And that's something, we've actively considered. And I think there was a point we've included on our website just noting that those less important elements will be essentially delayed till 1st of April. Again, that was something that stakeholders were pushing for. But with the major core part of the system continuing to kick off on 1st of January. So
I'm not familiar with those less important elements. What are the elements that will be delayed until 1st of April? So
there's, apart from including the standard business acquisitions that the merger system includes, and I mentioned the key thresholds that haven't changed, it also covers asset acquisitions. So this is where you purchase an asset that wouldn't be part of a business, so separately from a business acquisition. So that has its own thresholds attached to it. And because, as Andrew Lee flagged in his 15th of October media release, that was an area that we looked to simplify. And so that part, given it is, as you said, being issued quite late, won't kick off until 1st of April.
Is consideration being given to pausing or delaying implementation of other elements of the regime beyond 1 January?
No, I wouldn't say so. Again, given the core part has been, essentially flagged and announced since October 2024. And I mentioned in passing that the voluntary system commenced on 1st of July. And again, those thresholds have remained the same since that point. So stakeholders have been very aware of that core set of thresholds. So I don't think there is any.
Okay. Just regarding the voiding provisions in the Act, so we heard from the ACCC when they last appeared at estimates that they recognised that those provisions were unworkable or not fit for purpose or would have unintended consequences, and they did flag that advice would be provided to the Minister for a change in legislation. Has that advice been provided?
No, Senator. So again, it was something that was flagged in the media release, and as you're probably aware, or you probably guess, that would require primary law changes. So we very much focused on getting the determination revised and issued before 1st of January 2026. In relation to any primary law amendments, that would be the 2026 matter. We are actively looking at what we could do, including in relation to the automatic voiding provisions, but we haven't provided advice yet.
Okay, but as it stands, the Act will come into effect, or the full regime will come into effect on the 1st of January, and these automatic voiding provisions will be law.
Correct.
How will you avoid the unintended consequences of an acquisition or a merger that potentially falls foul of these, or is not notified and is consequently voided?
So I guess it goes back to a little bit the previous answer. So again, the key objective of this system is to be targeted, and the exemptions we've been working on in recent months to widen those exemptions is to ensure that it remains targeted as intended. So, of course, the first objective would be to not include those mergers that don't need to be brought into the system, and that's again the first, I guess, primary way of doing that. The other approach has been to make these, I guess, thresholds very clear. The monetary thresholds are quite direct, and they're what are considered to be, I guess, bright line thresholds. So that is something that helps parties determine whether they would be above or below the thresholds. But in relation to the voiding provisions, that was something that was included in the primary law when it passed in November 2024. And again, it's only really been clear that it's a major problem in, I guess, the last 4 or 5 months. And so again, we're looking to progress that, but it just can't happen on a timetable for 1st of January.
Has draft legislation been provided yet, or has amending legislation rather, has that begun to be drafted?
We're still in the process of developing the drafting instructions. That would be the first phase, and then that would go to the drafters.
So what's the timeframe for an amending bill to be introduced into the Parliament to?
That's a matter for government. I think in the media release it was flagged as 2026, but in terms of being more specific than that, we'd have to, that'd be a matter for government and the prioritisation process.
Would amendments to these voiding provisions, will they be retrospective? So they'll be said to have taken effect from the 1st of January when the regime comes into effect?
We would give consideration to how to deal with that. Whether it can be made retrospective might be a legal matter, but certainly we would give regard to trying to ensure that it had a maximum benefit once implemented.
So it's Treasury's view that the existing voiding provisions as they stand are not fit for purpose, not appropriate,
so
not tenable?
In terms of why it was included there in the first place, because I think it's important to think about why it was included, the objective was to ensure that parties were incentivised to come forward to notify. There was a concern that if there wasn't a strict requirement, that parties may strategically decide not to notify and just bear the consequences.
But there would be other consequences and sanctions available.
There might be in the form of fines, but again, that's a different level because, again, from the point of view of the party, it then becomes a cost-benefit analysis of whether the fine would be smaller than the benefit of just proceeding with the merger. And so in an effort to try and give the HLC a chance to scrutinise these transactions, the decision was made to include that automatic voiding provision.
But a decision has now been made that casting such a wide net with such serious unintended consequences is no longer desirable?
I think, again, with the benefit of the voluntary system that kicked off on 1st of July, that we've, I guess, come to the, acceptance that that provision could be improved. So that's certainly the case.
What options are available to the government to defer the commencement of the mandatory scheme on the 1st of January? How would that be done?
So, I mean, it's always a matter for the government, but from a purely legal point of view, the thresholds are set via the determination, and so it determines entirely what needs to be notified. But again, given this system's been announced and on track for more than a year now, and as I say, the core aspects haven't really changed, I doubt that's going to be a consideration.
But it is legally possible for the Minister to amend the determination such that the scheme does not...
The way the law is designed in the primary law, it gives essentially all of the power to the Minister to set the thresholds. So without those thresholds, you don't need to notify anything, basically. So in theory, yes, but again, given the whole purpose of this system was to strengthen competition and try and, in the interests of consumers, that wouldn't really be consistent with the government's plan.
I'm just wondering why we're letting the mandatory scheme commence on the 1st of January when there are known issues in the Principal Act and known provisions which the government has already indicated it wishes to remove, why would you allow the scheme to commence? Has Treasury provided any advice to the Minister to consider deferring commencement of the scheme?
With the exception of those two less important provisions that I mentioned, no, there's been no consideration. Again, I would describe the automatic voiding provision as a rigidity in the system. I don't think it's an issue that can't be worked through. It's just not ideal. And I think as part of that potential legislative amendment in 2026, as is usually the way, we would aim to do minor and technical amendments. There's been a number of minor issues that have been discovered about the laws, which is often the case, that would need to be tidied up at the same time. So again, while it's a rigidity, I wouldn't say that it's a really fundamental problem at this point. And again, we've worked hard to ensure that it's targeted and that mergers that don't need to come into the system are actually exempted. So in that context, I think we wouldn't be providing that advice.
Thanks, Chair. Thank you, Mr. President.
Thank you. Senator McKenzie.
Thank you, Chair. Thank you. I've got some questions about parts and service for new electric vehicles. So if there's something, thank you. In consultation with car dealers, they're raising concerns about adequate after-sales service and repair, particularly with the government's new vehicle efficiency standards going to see 6 million new electric vehicles over the next 10 years and potentially up to another 80 or 90 new car brands in our market, not through our established dealership network, and therefore there are concerns both from the insurance industry, the repair sector and those that service the cars out in communities about the consumer protections that are available. So my question, I guess, is Treasury confident that adequate consumer protections are in place to assist Australian car buyers and assure them that then when they do spend 40 to 65 grand on an electric vehicle from a new manufacturer, that there will be acceptable service and supply arrangements in place?
Thank you for your question. Megan Trudgeon, Acting Assistant Secretary of the Competition and Consumer Law Branch. Under the consumer guarantee provisions in the Australian consumer law, when a consumer buys a product, that applies to any product of, as long as it's below the consumer law threshold of $100,000, the manufacturer or importer must provide spare parts and repair facilities for a reasonable time after purchase. This applies even if the consumer did not buy the goods directly from the manufacturer or importer, which I think is very important in this context, particularly with vehicles. The guarantee, however, does not apply if the consumer is told at the time of purchase that repair facilities and spare parts will not be available after a certain period of time. So one of the key elements of the consumer guarantee provisions is ensuring that if consumers are buying products, whether it's a car or a washing machine, and that their manufacturer doesn't have a presence in the country to be able to provide spare parts or repair facilities, that the consumer must be informed of that when they're making that purchasing decision. And that is a really critical element so that consumers can make a decision when they're weighing up their purchase of whether they want to purchase that particular brand. We've spoken to stakeholders, consumer and industry stakeholders, that some of those are factors what consumers weigh up about the availability of service and repair.
So when we look at the vehicle market, has Treasury provided advice around the risks for consumer protections when it comes to the import of electric vehicles in particular that don't have those sort of guarantees?
The recent consumer guarantee consultations that we undertook, we closed consultations quite recently.
I'm not talking about washing machines.
No, but they did actually include specific consultations on the motor vehicle industry in particular, because there was that concern that in the motor vehicle industry it does face different dynamics, and as we see, that's one of those products that does require a much longer service and repair life than like a washing machine. So specific questions were asked both in relation to penalties and other provisions provisions about whether some of the provisions should be introduced just for the motor vehicle industry or just for economy-wide. The decision was made that the protections will be there economy-wide, and I think that's one of the important elements, that there will be significant penalties coming into place. Whether we provide advice specifically in relation to the new types of vehicles that are coming in, particularly in relation to e-vehicles, I'm not aware that we conducted specific analysis on that particular segment of the market.
So I'm getting a lot of feedback, particularly from the repair sector, that they don't have appropriate parts with which to repair that are compliant under our standards regime, etc. And that a lot of the, as quickly as some of these brands are popping up, they're also disappearing. And so the opportunity for recourse from consumers into the future is diminished.
Yep.
Is that something you've heard about?
We're certainly aware of that. We speak to the motor vehicle repair sector both from the consumer point of view as well as the recent review of the motor vehicle information sharing scheme that's been undertaken by Treasury as well, talking with dealers, with importers, as well as with the aftermarket service providers, both repairers and those that provide spare parts. What we've typically seen in the motor sector is that if manufacturers...
This only passed recently, so this is something that is occurring like in the last 6 months and is projected to, not something that's occurring a decade ago.
Do you mean the uptick?
So just when you say
e-vehicles?
we've had these consultations, how recently?
The consumer law consultations were this last year and this year, so the reforms have only
before or after the
government.
NVES legislation was in place?
After the NVES legislation.
Great. So that was part of that consultation.
Yeah, and the NVES legislation is now under review by Treasury and is looking at some of these issues as well. That importantly is looking at the issue about access to service and repair information for repairers so they can actually understand.
They can't get the manuals.
Yeah, so that's if they provide it at the moment, if you provide, a manufacturer provides information to any service and repair provider in Australia, they are mandated to make that available to any other repairer or registered training organisation at a fair market price. And that's under review at the moment, and there's been Treasury consultations on that.
Have you consulted the insurance industry on this as well? Because there are concerns that, particularly in regional areas where you don't have a lot of choice, but increasingly in the suburbs, that you can't just take your damaged vehicle to a service provider. Manual is one problem, but then insurance and who's going to pay is the other.
I might not be best placed to answer the questions on the MIS visit.
I'm happy for you to take that on notice.
In particular with insurance, but I certainly know in the consumer sector we speak to a wide range of stakeholders because insurance can play a really key role. They're also a really key source of information about where problems might be occurring and failures with different products. But I'm not sure if you had...
Nothing to add. As Ms Trudgeon said, we are undertaking the review of the NVES scheme at the moment, which is close to being finalised, but I'd have to take it on notice in terms of how much we've spoken to insurers in that context.
Then on notice, I'd like to know in detail which sectors of the vehicle industry you've spoken to, whether and on what dates, and what type of fora. Was it a desktop consultation? Was it a round table? Was it a phone call to James Vortman? Given the brands are foreign-owned and domiciled, what ability do Australian regulators have to chase compliance when it comes to service and repair obligations on behalf of Australian consumers?
Extraterritorial reach is always a challenge, particularly in the consumer space.
So, sorry, is that a cute way of saying we don't have any ability to...
Oh, certainly not. It's a well-known challenge, though, particularly across the consumer space, as we see not only with large brands, but consumers are also engaging with very small traders internationally. The ACCC might be able to provide more advice as to
coming back to them
regulators
as well,
would
but
say.
I guess a lot of these are going to be direct sales rather than through the traditional dealer network that has traditionally existed in this country. So is Treasury aware of any modifications that have to occur to the consumer protections in order to address that?
Adequately address enforcement of the laws. Our understanding of how the ACCC operates in that space is develops relationships with regulators for key trading partners. So the ACCC has been successful on a variety of consumer matters by working with the regulators in those particular jurisdictions to be able to firstly engage with traders that are outside of our borders and successfully seek prosecution or cooperation of those businesses to ensure they comply with the consumer law.
Thank you. Dr Freestone, when is the review of NVES due?
So we've, as Ms Trudgeon said, we've undertaken consultations and that's all closed. So we're really just in the final point of tidying up the report to provide to government. So that should be done very soon.
When you say very soon, is that weeks or months?
Weeks.
Weeks. And Minister, when do you hope to make that public?
I'll see if there's anything further I can provide to you on that.
Thank you. And would there be an opportunity for a briefing on the review once it's completed?
That would be a matter for the Treasurer, but I'm happy to take that on notice.
Thank you.
Very helpful.
Thank you, Chair.
Thank you.
Chair, can I just, earlier today we had a discussion about the Statement of Expectations for ASIC.
Yep.
And I just want to update the committee. A decision's been made to update the Statement of Expectations when the new chair is appointed, to allow the new chair to have, out of respect for that position, to have some, knowledge of that and input into that. So just wanted to, because that's different to what the answer I previously provided.
Thank you. Noted. Okay, Senator Bragg.
Thanks very much. So thank you for that. We had an earlier exchange, Minister, about the report the Senate completed with Senator Walsh, who was representing the government at the time. You indicated that there would be a government response. Do you have any further information?
Look, I don't, unfortunately. I did seek that information. I haven't got that to hand. I think it was a little bit different to how you had presented that report, in that there were dissenting comments from government senators, which I don't think you did indicate when you made those comments. But if there's anything further, I will update the committee through the course of the day.
So what is the government's position on responding to Senate inquiries? Do you still respond? Do you still intend to respond to Senate reports?
Yes.
You do? Okay. So this particular report into ASIC was tabled in July 2024.
Yep.
So it's a year and a half ago.
Yes, and I have sought information for an update on that, Senator Bragg. It's not in my portfolio responsibilities, and if I'm able to provide an answer, I will.
So I know how much you like orders for production of documents. I know this is one of your favourite.
Well, I like reasonable. I like them being used as they have been used in the past, not as they're being used now. I think they're being abused.
Okay. But, well, let me ask you this. Would it be reasonable for the Senate to request the government response to the ASIC report? Would that be a reasonable OPD?
Well, it shouldn't need to be provided through an OPD.
Well, it wouldn't need to be OPD.
It should be provided, and I'm trying to find an answer about when that will be, Senator Bragg.
Okay, well, there was an OPD on this issue in September, which you provided information to the President of the Senate about. Do you remember that one?
There's been hundreds of them, Senator Bragg, and I can't recall each specific one.
You don't recall? That's fair enough. I didn't think you would. So that OPD contained a letter from the Treasurer, which I should probably table for the purposes of this hearing. Who do I give it to? It's a letter from the Treasurer to you, Minister, which, before it disappears, I'll just try and remember what it says. But it basically says that the government hasn't prepared a draft response to the ASIC report. So that was in September this year. So that's some 13 or 14 months after the report was tabled. So there wasn't a draft in September, October. Has any work been done since that date?
I can't provide you with an update, Senator Bragg. I am seeking that information.
Okay, because I mean the reason that these questions are being asked is because there has been a failure of regulation here. I mean, people I know today have asked questions about whether, in fact, there should be more laws, but I think the average person will look at the many hundreds of corporations laws in the books here and say, well, why wasn't the corporate cop able to enforce the law in relation to conflicted payments? Why wasn't the corporate cop able to enforce the law in relation to directors' duties and the proper functioning of these regulated entities in relation to managed funds and the like? I don't think they're unreasonable questions. So, I mean, has the government put any emphasis or has had any interest in whether or not we can get better law enforcement?
Well, I think both the current minister and former minister did a lot of work on modernising and strengthening ASIC to ensure that it is an effective and efficient regulator. We've, I think, had to clean up the mess in the business registers, which turned into something that cost 5 times the original estimate. There's further work going on about cyber uplifting data and cyber security capabilities and combating illegal phoenixing. So I think it is fair to say there has been a lot of work done to ensure we're modernising and strengthening the regulator. And as you say, it is an important regulator. But on the issues that you raise about your report, if I can get further information around responding to those specific things, I would note that the government senators in relation to that report did provide additional comments on that report and didn't agree with your recommendation or the chair's recommendation around breaking ASIC up.
So how do you think ASIC's going? Is it going well?
This isn't my portfolio area, but I believe it's an efficient and effective regulator, and I also accept that regulators, opinions on regulators will differ across the board, and I accept that you have a pretty strong view of your own around ASIC.
Well, I don't really, other than we did do a body of work in this parliament which chewed up a lot of resources, which ran for over a year, which heard from hundreds of different people, and which made recommendations that ASIC was not effective at enforcing the existing laws on the books. Subsequent to that, we had first...
Senator Bragg. That was not the view of the dissenting members of the committee, of which I was one, and you could have efficiently done that through the Corporations of Financial Services, which oversees that entity. It's your choice.
Thank you for that. Thank you for that. It's great. Thanks for the update. So the point is that the Senate has tabled a report outlining that there were clear deficiencies with the enforcement record of the corporate cop, and I note that subsequent to that, First Guardian, Shield and Lion all saw billions of dollars of losses, a huge loss of people's mental health and financial resources for frankly quite simple provisions like around, is ASIC going to be able to enforce conflicted payments laws? Is ASIC going to be able to ensure that there aren't fraudulent actions taken by directors? Because in some of these cases, some of these people shouldn't have been running these type of schemes. So I guess it's pretty cold comfort to hear you say that you think it's efficient and effective, because the last year has seen a lot of Australians in hell because of the failure of ASIC to respond in an adequate timeline. I mean, in all these cases, they had a lot of warning. So I guess I ask you again, do you think ASIC is doing a good job?
Well, I've answered that, and I don't think, the reason we have a regulator is unfortunately because, we need, protection for consumers from bad actors. I don't think you can blame ASIC for the fact that there are bad actors, which is seemingly what you're trying to do here. I accept there'll always be views around regulators and how they're performing their job, But from my point of view, I think they are an efficient and effective regulator. I think there are ways that we can continue to work with them and strengthen and modernise them, and that is work that's underway. And I think the opportunity for an incoming chair, along with a renewed statement of expectations, will provide that clear guidance and continued leadership. But I would also say there were a lot of, the government senators, and I note Senator O'Neill's comments here, did make additional comments in that report criticising your report for oversimplification of complex issues, failing to take a balanced approach to considering evidence on ASIC's remit, and failing to provide any detail on how a breakup of ASIC should occur. So, it's not fair to say that your view is the view of the Senate.
I didn't say that.
Well, I think
my point was that even the government senators raised issues in their report about the way that ASIC was conducting its affairs. I didn't, just for the record, I wasn't proposing in any way that the government senators agreed with me. I'm saying that they outlined their own concerns. And my point here is not to be difficult, but just to make the point that there was a report done, irrespective of its content. Surely the government should respond to it.
I agree with that, Senator Bragg.
Okay.
And as I said, if I have something more to provide, I will.
So when will that be?
When will what be?
Well, according to the letters we've exchanged, you didn't have a draft report to respond to ASIC back in September. So
any further information on this, I will update the committee.
So will that be today?
Well, if I get that information, yes.
Okay.
Senator Bragg, you're at 10 minutes.
I just have one more line of questions and I'm done, which is separate to this.
Okay.
Do you want to knock them off?
Yes, if you can be as efficient as possible.
I could probably do it in 5 minutes.
That would be fantastic.
Okay, I'm not even sure this is the right area. So, regulation of the economy generally, who does that? Is that you, markets?
So, in some ways, regulation kind of sits across many groups. If we can talk about some aspects of that.
Well, in relation to deregulation and stuff done for the roundtable, and is that you or somewhere else?
So deregulation sits within the Department of Finance.
I understand that.
Yeah. Okay. Well.
But there's got to be some Treasury resourcing, given the Treasurer was leading the roundtable.
Yeah, so, Senator, there are parts of Markets Group that are working on issues to go to better regulation that come out of roundtable.
Yeah, so can I ask you?
Yes, Senator.
Okay, great, thank you. So the roundtable was about 100 days ago, right?
A bit over, yes.
Not a trick question?
Yes.
About 100 days ago, okay. You're very precise, Mr. Kelly, very precise. You'll go a long way. So, as part of that, the Treasurer wrote to the regulators, is that right?
That's right.
Before or after?
Before, I think, from memory.
So there are a number of letters. And
Yeah.
I think, Senator, you might be referring to the fact that post the roundtable, the Senator wrote to the...
38 letters? 38 letters, is that right? Before?
So the two ministers' letters to the regulators before the roundtable, asking for them to identify actions they could take to, in some ways, deliver better regulation or better regulatory outcomes. Okay. They responded. There were 38 letters received in response to that, or 38 of the 38 captured by that. Okay. Subsequent to the roundtable, there's been a additional letter sent by the Treasurer to the Council of Financial Regulators commissioning further work from it in respect to better regulation.
Okay, so you wrote 38 letters, the Treasury wrote 38 letters. You got responses from all of them, I imagine? Yep?
Yep.
Okay, so you asked regulators what regulations they'd like to get rid of, is that right?
Well, we asked for their ideas about how to reduce the regulatory burden and support productivity, I think is I don't have the letter with me, but that would have been the content.
It's a bit like asking Dracula if he wants to run the blood bank, isn't it?
Well, I think it's fair enough to ask the regulators what their view is.
Have any good ideas?
You don't have to accept that. They came with 400 ideas.
So which ones are good?
We would have a look at them and work through those.
Which ones are good?
Well, I'm not sitting here and going through that with you, Senator Bragg. That's
Why not? This is Senate estimates.
Well, because it's ongoing work before government.
Geez, very secretive. Is anything good? 400, surely you're like one of them.
Well, I don't have them in front of me, and I imagine there are some very sensible ones as part of those 400 ideas.
This is a bit of a dry gully here. Okay, so 400 ideas to progress, potentially progress. So you're saying it's now in front of Cabinet, are you? And you won't provide any more
Well, it's work before government. So, you know, working through those forms part of the work plan that came out of the Economic Roundtable.
Was that publicly available?
Yeah, they were online from the 5th of September.
So
Sure.
the 400 ideas are listed?
Yeah.
So what's the process now? How many of them will we be able to get rid of?
Well, we are working through those now. I'm not here to give you a figure.
But this is Senate estimates. The whole idea is to give some idea about the inner workings of government.
Well, it's work
So
that is
taxpayers
ongoing. It is work that is ongoing and hasn't been finalised, Senator Bragg. So,
Okay. So have you done work to size the compliance burden across the economy?
I would have to take that on notice on behalf of the Treasurer. Separately, with my Minister for Finance hat on, we are, you know, I have work, you know, we've just passed the regulatory reform bill, which you voted against.
Well, you only got rid of 2 bills, 2 laws. One of them was the
part of it was
snapper thing.
part of it was improving the way people engage with government, which does have a regulatory burden. So it was actually pretty significant, and I think it amended about 73 different pieces of legislation. But interesting that you should sit here and ask about how we're going when you voted against the first thing we brought to the Parliament to deal with it.
We haven't brought forward anything significant yet.
Well, it was pretty significant, actually.
You said that there's 400 secret ideas.
You felt so strongly about it that you opposed the bill. So it was obviously significant enough, or wasn't it significant? I'm a bit confused.
Okay. So you've had a meeting in the Cabinet room 100 days ago. You asked the regulators what they thought. They've given you 400 ideas. We're not sure how many of those you might progress. You're not sure whether you have a target for... Do you have a target for red tape reduction?
Well, again, interesting, coming from the senator that sat in the chamber and voted against some of the work, our first tranche of work that deals with red tape reduction, you voted against.
That wasn't my question.
Well, but isn't it interesting?
Well, I like...
Well, you care about it today, but you didn't care about it last week.
I always care. Very caring.
Yeah, right. Would you like me to work through the areas?
I just want to know whether you have a target to cut red tape.
Well, we don't have a target.
Okay.
Because it's about better regulation. I mean, people throw around cutting red tape. One person's red tape is another person's sensible regulation.
I've heard that before.
Well, it is. I mean, let's not pretend that slogans actually deliver outcomes. It's about better, more effective regulation, and that is what we are focused on.
Okay, so just to wind up. So, do you know how many laws we have on the books in Australia?
No, I don't have that figure to hand. Do you?
It's about 1,200.
Okay, well, I'll check that.
Yeah, check that. And then...
I don't.
And then...
We have a brag fact-checking unit.
I'm sure you do, yeah. We check yours as well, it's okay.
Yeah.
It's reciprocal. So
I reckon I do better than you.
Do you reckon?
Yeah,
we should compare that one time.
I think I would.
We'll do a post together.
Head to head, I reckon I would.
I'm confident. Oh, I like to have a punt, so we'll open a book on it before that gets banned in the nanny state. So what about the agenda to reduce the size of the statute book? Is that part of your plan?
Yep.
Okay, but you're not sure what the target is at this stage?
Well, we're not setting a target. We're going to do the work, and we're going to look at, for example, areas of duplication where they exist across the statute book, and that should be an area of focus. And it's really around better regulation. And at the Economic Reform Roundtable, that was the discussion, was about better, more effective, streamlined, if you can, regulation. It was not so go and cut 200, pieces or elements of regulation so our lives are better. It was how do you deliver services better or protect the community in a better, more effective way. So that's the approach that we're taking.
Thank you, Senator Bragg. We can now let the Markets Group go. Thank you very much. And we will move to welcoming representatives from the Department of Treasury Fiscal Group. And while they are joining us, I will let the committee know that we are 1 hour and 20 minutes behind the program, and any assistance that can be provided to help us make up the time would be very much appreciated.
Can you announce that this is okay to table?
Yes, and we're just tabling a copy of the letter that Senator Bragg referred to earlier. So.
Very interesting letter.
Very fascinating.
Yeah.
We're going to corporate now?
No, we're going
Fiscal.
Fiscal.
If only, Andrew. If only.
Come on, guys,
Yeah.
let's get out for dinner. I think you'll have some questions for fiscal.
I do.
Yeah, yeah.
I sure do.
Yeah, I thought you might.
Well, we
You don't even have to put a bow on it.
Yeah.
Yeah, I know.
Set the bar very high
Looking
there.
forward to this. We know. I think it's going to be very Section 83. I think so. Come on, we can do it.
Okay. So welcome to the representatives from Department of Treasury Fiscal Group. I'm going to hand over to Senator Patterson for the first lot of questions.
Is anyone in Fiscal Group involved in identifying or remediating the unlawful payment of $2.3 billion?
Damien White, Deputy Secretary Fiscal Group. Yes, Senator.
Great. What can you tell me about when this issue was first identified?
So, Senator, as we disclosed in our annual report, we have potential breaches of Section 83 of the Constitution.
Sorry, which breach? Sorry,
so in our 2024 annual report, we disclosed potential breaches of Section 83 of the Constitution.
Did you say potential?
Potential, yes, Senator.
Are they still potential?
Potential is the technical wording used for this. Like, we are not pretending that they're not breaches of that, but all the legal advice and things that we get about reporting these says we should use those words.
The ANO was pretty clear that it wasn't a theoretical or potential or technical breach.
So the legal advice we get when we look at these things tells us to use those words, and we have used those words. We are not pretending that we don't think they're a breach of Section 83.
Good to know.
That would be consistent with all of the other ones that have been reported in the past.
Yeah.
Okay.
So we reported those in our annual report, Senator. It was 8 payments made in 2024-25 for the Energy Bill Relief Extension Program. There are 2 aspects of how these work. So when we're thinking about making payments to the states, we think about, one, we think about getting the policy part right, so the right payment, the right amount for the right reasons. That all worked well. We did that perfectly. The administrative parts of the process were the bits that were not done correctly, and that happened when we changed from the original program, so the original Energy Bill Relief Program, and we changed over to the extension program. And it was when that happened that we managed not to do the administrative parts of the program correctly, and that's what we've reported in the annual report.
Okay. Please keep going. Yep.
And then, yes, then we identified. So after we made the mistakes, we then identified them as part of our process. So we have processes in place to try and make sure we do these things correctly. We take seriously our role in making the payments properly. For this particular program, Treasury has 2 roles. So one, it's a Treasury portfolio or Treasury administered payment. It's a payment for our department. But we also run the overall payments to the states function. So every payment to the state from any agency in the Commonwealth comes through us. So we have both those roles. So we picked up that error after we had made them, and then we identified them. We took corrective action. Now, I think you had a different question, Senator, about which I haven't probably not gotten to yet.
You haven't, but that's okay. That was helpful. On what date was each of the 8 payments approved within Treasury systems?
So the payments were made, the first payments were made in October, and they were monthly payments, and they were made from October, and the last payment was in June. There was a gap in the middle around Christmas, Senator, where we wouldn't make payments.
So 8 payments between October and June. So that's literally once a month. Was there a particular date on the month? Date of month?
So I think were they 21st of So we make payments on the 7th and the 21st, Senator.
So there are fortnightly payments?
We'll have to check.
We might have to check, Senator, but there's a payment done on the 7th of each month and one on the 21st of each month, and these payments would be in one of those dates every month, either all 7ths or all 21sts.
I see, understood. Okay, yeah, if you provide that on notice, that would be good.
Yep.
And so is it the same date they're approved within Treasury system and actually paid? Are they the same
Senator.
date?
So there's a whole process. So there's a process of the area that's responsible for the program doing things like collecting data from the states, working out how much is supposed to be paid, ticking off their part of the process. They put them into our IT system. They then come to the central area who have a process for also doing some checking. Do we have to get ministerial approval to pay these? Well, I think there's for the payment as a whole. So each of these payment rounds has many payments in them from many organisations. We then have to get overall approval for that to be paid by a minister, by one of the Treasury ministers, and then eventually they're paid. So the process is probably at least a few weeks before it gets paid, Senator.
Okay, so perhaps on notice then, when the payments were approved within Treasury system and when they were actually paid. Yep. Thank you. Yep. Who ultimately has authority within Treasury in terms of their level of employment, SES, EL, Deputy Secretary, whatever, to make that approval?
So part of the reason that I said that the problem arose because we went from the original payment to the extension payment is that there are two pathways through the Federal Financial Relations Act you can make payments to the states, and we actually changed the pathway between the two payments. So in the first payment, it has an authorised, so all these payments have authorisations from the Treasurer down to people in Treasury to do the administration of authorised payments. So those first ones, under the original energy bill relief, went down to Band 2 SES. No, Band 1 SES, sorry. Band 1 SES. It covered all SES in Treasury. The second payments had an authorisation that was different and only went down to Band 2 SES, and effectively that is a main reason for our problem.
Explain that to me, I don't understand.
So the person who was authorising, or the position that was authorising original payments was a Band 1 SES.
Yep.
That delegation went all the way down to Band 1 SES. When we changed to the extension, effectively this is the only program that we know of where a program has changed the pathways through which it's gone. And so when we went to the second extension one, we had then a Band 1 SES approving the payments, and they were not one of the people authorised in that delegation because it only stopped at Band 2 SES, so one level above.
Right. Okay. So what is the approval that Band 1 and then Band 2, or Band 2 then Band 1, SES officer lacked?
So sorry, it's the same Band 1 officer who was approving all of them.
Right.
So in the original program, we had a delegation from the Treasurer that says everyone down to a Band 1 officer can approve it.
Yes.
A Band 1 officer was approving it, totally legally and properly.
I see.
When we moved to the second one, we moved to the other pathway. The delegation instrument did not go down to Band 1 anymore, it stopped at Band 2. And that's the thing we missed, right? So the same Band 1 person who is responsible for the program was still authorising it.
But they no longer had the authority.
But they no longer had the right delegation, Senator.
Right. So why did it change?
So it's just a decision for government. You can use either pathway. And after the original program ended on 30 June, I think, 2024, in the way the government did it, they did the other way. And unfortunately, that defeated our checking processes for a while.
Why would a government choose to do it in these two different pathways? What's the advantages or disadvantages of each one?
So one pathway, Senator, you pass legislation and the program comes into the Federal Financial Relations Act. That was the first way. That was so the first time it was done was passed by legislation. The second pathway does not require legislation. It relies on making an agreement with the states. And there are lots of agreements with the states that go through this pathway. It's possibly the more common pathway, but it was a decision for government about how they wanted to do it. I don't have any further information on why that was chosen.
When was the decision taken to do it this way?
Do you know the answer to that?
First Assistant Secretary Mark Thomas from the First Nations and Commonwealth State Division. I would have to find the precise date for you, Senator, but it was certainly in following the announcement to extend the scheme in the 24-25 budget. There was a decision to move to, as Mr White referred to change the way it was done so it could be more efficient. So it became a national partnership payment under Section 16, and so it was partly an issue of efficiency.
When you say efficiency, do you mean it didn't require legislation?
No, that's not correct. It's that it provided a mechanism to pay the states through this national partnership payments mechanisms, which was just a more efficient way of doing it than under the previous program.
But how is it more efficient? I mean, I understood from Mr White's answers before that one pathway required legislation and one did not. So is it the absence of legislation being required that is more efficient?
So the appropriation when the energy bill relief extension occurred was appropriated under Section 16, not under a different section prior to that. And it meant that could be expedited without reopening the legislation.
Correct. So it's more efficient because it didn't require legislation.
Yes, although there were a range of agreements.
No, that's okay, but that was my original question. It's more efficient because it doesn't require legislation. The answer is yes.
Yes.
Okay. So wasn't the Parliament sitting in this period? Was there a reason why there couldn't be legislation?
It's a choice of government, Senator, about how they choose to do payments to the states. As I said, there are two pathways. They are both used. In fact, the second one is probably used more often than the first one. Governments choose all the time about which pathway they want to go through.
But, I mean, as you say, the decision to make the extension was in the budget. Don't leave me hanging. Yes. The decision to extend the energy relief supplement, was it taken in the budget? Yes.
Yes.
Yeah.
The payments we made between October and June? Yes.
It was to take effect from the beginning of the financial year, Senator, yes. And, in the event payments couldn't be made till October in the first instance.
So payments were kind of backdated.
So I think for the first, I think we probably backdated for the first quarter of payments, that there was energy bill relief for the first quarter and we probably had to make a catch-up payment.
So it might have been the case then that between the budget and the next financial year, there wasn't much opportunity to pass legislation.
Yeah. We don't know the answer. I don't know the answer, Senator, about.
Well, that's true because of the election.
No,
that's 24.
It's just 2024.
So there would have been so after budget, there's a short amount of winter sittings and there's the recess. Maybe, Senator, is an answer to that question.
Right.
Yeah.
Okay, I'll just finish on this note then for now. So it really was kind of a rush to get this out that caused the error, which is $2.3 billion of money being paid without ministerial authorisation. In other words, unlawfully.
So I don't know that I'd characterise it as a rush, Senator, but I would, as I said before, I characterise it as, for the first time that we know of, a payment change method, and our processes did not stand up to that change, partly because our processes would focus a lot on when payments are first done. So when a payment is first instituted, we actually look at them very closely. I don't think we quite recognised well enough that when the payment changed, it was probably more like a first payment than a continuation of a program.
Okay. Thank you, Chair. I'll have some further questions on this when the call can return.
Thank you. Senator O'Sullivan.
Thank you very much, Chair. Now, there wouldn't be an estimates go by without a West Australian asking about GST. So I'll keep with that. So I'd like to turn to the Productivity Commission's upcoming review of the GST distribution arrangements. Can you tell me, since the last election, how many briefs or pieces of written advice has Treasury provided ministers regarding the 2026 Productivity Commission review of the GST distribution?
I doubt we're going to be able to answer that off the top of our head, Senator. We'll probably have to take that on notice.
Sure. When did Treasury last model the fiscal impact of the so-called no worse off guarantee?
We would have, the last place that the no worse off guarantee would be is in the budget, and we will be updating it for the MyEFO.
Okay, so that's in the process at the moment.
Yes, Senator.
What is the Treasury's latest estimate of the Commonwealth's fiscal exposure to the No Worse Off guarantee?
Be in the budget.
Do you have the numbers? Do you want to read them out?
Yes, Senator. So the 25-26 estimated GST-related payments to the states and territories is $100.1 billion.
And that's in this year's budget, is it? So you can't give me... I'd have to wait for my info to see
Not yet.
the latest, is that right?
Yes.
Yeah, that is the latest number, Senator, that's right.
Oh, that is the latest?
That's the latest. So that's the budget numbers are the latest numbers at the moment.
Sure.
But they'll be updated
Yep, they'll be
in the
updated.
next
Yeah.
month. Yep. Or
Okay.
this month.
Yeah, I understand that.
Yep.
Given the Productivity Commission has been directed to consider alternative GST distribution models, has Treasury costed any alternative models?
When you say directed to, I mean, there is a review that was required
By legislation.
by legislation,
Sure.
exactly.
No, Senator, I don't believe so.
Has Treasury modelled any alternative distribution model that resulted in a lower distribution at all for Western Australia?
I wouldn't characterise it as modelled, no.
Okay. Just one, thank you for providing me some answers, questions from last time in relation to the special purpose payments. It's really helpful to understand where the payments are going to the states there. So I'm referring to Quan SBE 104. Treasury tables show that Western Australia's infrastructure payments have fallen from 2.397 billion in 2025-26 to just 68 million in 28-29. That's a 71% reduction. Now, no other state has seen a decline of that scale. And if I go back and to look at the year before, on page 7, in fact, it was a 4.179 billion payment to Western Australia for infrastructure. So it's even greater. It looks like 81% thereabouts, I think. Drop in resources going to Western Australia for infrastructure. So no other state, if I look at those tables, shows any decline anywhere near that. Can Treasury explain why WA is singled out for the largest proportional reduction in the country?
Senator, this is a question for infrastructure, but I would suggest that infrastructure is one of those programs where it ebbs and flows between states over time, depending on the projects that are being built in those states. As I understand it, a significant amount of that money in the current year and recent years is for MetroNet, which has been a large program in like a very large program in WA, and it might well be the case that it's declining because we don't have a similar sized replacement project in the pipeline right at the moment. And I think if you go back over time, you will see that that's true for all states. I mean, almost every state I can remember has at some point complained about similar sorts of things, whether that's they're not getting their population share or somehow they're below someone else. It is one of those programs where by its nature the projects are lumpy and big and tend to come and go. But I can't add specifically as to why this particular pattern looks like that at the moment.
Because obviously there's a very significant reduction. So in order to keep that pipeline of investment in WA going, there needs to presumably be projects that are presented to infrastructure. And so
they are, believe me, very well represented by
but it's not represented
WA
in
state government.
Not represented in the budget. And so we're not seeing... There's letters of exchange between Minister King and Minister Saffioti, but there's nothing in the budget, as we can see, down to 600...
I think those questions are better placed to infrastructure. There's a pipeline
You know, the states are all involved in discussions around what they need and when they need it. And WA argue very strongly and get a lot of support from this government. We're very happy to do so. We work well with them.
Did the Commonwealth consider WA's population growth, its export role and road freight burden when allocating infrastructure investment?
It's a matter for infrastructure. Treasury, fiscal group can't answer those questions.
So, sure. Given that the forward estimates show a major contraction in WA's infrastructure payment while other states retain much higher levels, can Treasury confirm whether decisions on infrastructure special purpose payments were made independent of any GST distribution, and specifically whether WA's GST floor played any role at all, whether it directly or indirectly, in reducing WA's infrastructure allocations?
They're completely separate matters. Our engagement with states on health, on you know, any area really, on infrastructure, on all of the areas we engage with them are in addition to the GST, which, as you know, and we've got the Commonwealth Grants Commission, I think, appearing later tonight, Commonwealth Grants Commission, to talk through about how they reach their conclusions.
Okay.
The only other thing I'd add, Senator, is even with the reduction in infrastructure, there is growth in WA, overall state payments to WA across that period. So the other ones are all still growing as well and providing more money, including the GST-related payments.
Well, every other state got an even bigger growth, is, I guess, the other point to make there. Yep. Now, look, that's fine. I'll follow that up again. Infrastructure, by the way, did send me to you to ask these questions. So.
Right away. Did they?
Yeah, they always do. That is... They've sent me to Defence as well. to ask about roads around Henderson. Anyway, that's it. Thanks, Chair.
Thank you. Senator Patterson.
Thank you. So just returning to our conversation earlier, on what date did it first become clear to Treasury that written authorisation was missing?
So, there are two aspects to this, Senator. So one, there was a period just before Christmas, and I will find the right date. So it was in the first week of December. I found out on the 10th of December. I don't have the exact date of I might need to find the right bit of paper.
The processing team discovered the errors on the 27th of November.
Okay.
Yep. And so I'll go into a slightly more detail than my first answer to the question. So we actually had a problem with the instrument itself for the first two payments, which we found on the 27th of November.
Yep.
So as we said, when we changed from the first payment to the second payment, we went to a second instrument. In my answer before, when I was talking about the fact we had the wrong person, I also missed the fact that we actually had not the right program in the payment in the instrument the first time, right? So
explain that to me.
So I will get back to this. So when we actually went to the second program, we already had a delegation in place to make payments under that second stream of things I was talking about. The programs have to be named specifically in that instrument. So each of the national partnerships that it goes to. So we missed that. So when we found that in November, we put the name of the program in the instrument. It was then the payments afterwards that were made were the ones that actually had the wrong person authorising. So we had two problems in the thing. So I was explaining the first one, we had the wrong person who was the person who was signing off on the original program, continued to sign off. That was true for all these payments. They did not have authorisation, but for 2 months we also did not have the program named.
In that instrument, was it signed by the Treasurer?
So the instrument was signed by the Treasurer.
Yes.
So we had an instrument that was signed by the Treasurer that for those first 2 payments in October and November,
yep,
the instrument did not have the program named,
right,
and it did not have the right level of person.
Right.
We fixed the instrument problem, the naming of the program problem.
Yes.
So we got a new instrument.
But we didn't go to the correct.
But we still had. But so we hadn't quite. And part of the reason, we actually got a new instrument that said we are adding this program to an instrument over here. But we had a separate thing that did it. And part of the problem was that the checking of actually who the thing went to in the original one was where the failure came in.
Okay, so just in very simple terms,
yep,
2 problems.
Yes.
First problem, we didn't name the program. Second problem, the correct authorisation to the level of SES officer wasn't there.
Yeah.
You fixed problem 1 when it was identified, but not problem 2.
So we found problem 1 on the 27th of November.
Yeah.
And we fixed it in December.
When?
We got the instrument redone on the 11th of December.
Okay. Yep.
So then we recommenced after Christmas, making these monthly payments.
Mm-hmm.
And then it was in June. Do you have the date? On the 4th of June. We then worked out that actually this instrument had not gone down to the right level and we had a person below that.
Right. So basically the Treasurer has signed not 1 but 2 faulty instruments.
No. The Treasurer has not signed faulty instruments. The Treasurer had signed 2 instruments that we as Treasury had not complied with properly.
Well, that's one way of looking at it, but had the correct instruments been signed, like, naming the programs or having the correct SES officer, then no issue would have arisen.
No, but also the instrument, Senator, providing authority to Treasury officials to sign off on these programs.
Yep.
The default thing would be the Minister signs off on the program. So there was a default process by which we could have gotten the Treasurer to sign off on these programs.
Yes.
He's provided administrative instruments, which is the most common thing that's done for all of these programs, for officials to sign off every month, in our case, on these. And we did not pick up that we were not complying with the instruments that were in force, and we should have gone to the Treasurer and said, can you please fix these up for us to do this properly?
Okay. So problem 1 was identified on the 27th of November, and I think you said...
The 4th of June was the second.
I'll come into that.
Okay.
The first problem was fixed on the 11th of December?
Yes, that's right.
So that was the first retrospective instrument?
Yes.
And then an additional problem, the second problem was identified in June. On what date in June?
The 4th of June, Senator.
4th of June. And when was that rectified?
So we first rectified that by just getting a person who was authorised under the instrument to sign off on the programs.
Mm-hmm. But the money had already gone.
The money had already gone, that's right.
Yeah. So did a new instrument need
So
to be
then we
issued?
did have a new instrument signed by the Treasurer on the 18th of September.
So hang on, why did it take so long to get a new instrument? That's months later.
We could still that program ran out on the end of June, Senator.
Yeah.
And then this instrument is not only dealing with that, but it's also dealing with the second extension of...
But it's a retrospective instrument to cure the missed payment, right?
No, I don't think so, Senator. I don't think we can cure the payment problem.
Well, there was a retrospective instrument in December.
No, I don't think that's retrospective either. I don't think there's a way we can practically retrospectively fix the problem.
Okay, that's not what I understood from evidence given by the ANAO on Monday.
Yeah, I might take that on notice to make sure, but my understanding is we are basically what we're doing, these instruments are prospective,
right,
and we cannot fix the problem. But
so
I will take that I will take that on notice to make sure that's perfectly right.
Just to be clear, so we have the same understanding right now.
Yes.
The money's gone, it was paid unlawfully, there's nothing that can be done to retrospectively make that lawful.
Well, there was authorisation for it through
just the wrong authorisation.
Through an appropriation.
Yes.
I just don't want people, any suggestion that people were making, payments that hadn't been authorised through an appropriation, because they had.
But they were unlawful.
There was a problem with the processing. It was basically human error.
Sure, Minister, but you're not contesting that these were lawful payments, are you?
I think, as reported, they are being reported as potential breaches of Section 83, in line with, 30 others that were done under your government.
Sure, Minister, but not to this, as the ANO said, not to this quantum, not for $2.3 billion.
But I don't think
this is off the charts.
Well, I know you have a political point to make here.
No, I just think we should spend money according to the law.
When you look at the history of these, there are on occasion, more than you would like, more than any of us would like.
Yes, certainly more than I would like.
Seemingly pretty regular breaches of Section 83 over the years.
I don't think that's at the
I'm not
Defence
saying
Minister.
I'm not saying it is an excuse. I'm saying this is not an isolated incident.
Yeah,
where a problem is identified, as this has been, based on human error and systems in place, it needs to be declared and it needs to be fixed, and that's what's happened here. That's the important thing.
When was the Treasurer first informed on each of these errors?
So I think So on the first error, Senator, we sent up a brief to him on the 9th of December, which was the brief to basically tell him about the problem and seek his...
Please sign this.
Sign new instrument.
New one. Second error, when was he notified?
So I think that was sent up on the 28th of August, Senator.
Okay.
With the same thing about here's what's happened and can you sign a new instrument.
When was the Department of Finance or the Minister for Finance first informed in each instance?
Well, I think I've answered this already, and Finance answered it yesterday.
You weren't able to provide me with a date?
Well, I think we did. Well, roughly a date, and Finance gave you the date that they were notified through the financial statements process. They weren't notified ahead of that.
No. Yeah, but my memory of their evidence was they learned about it from the financial reviews reporting.
Sorry?
That they learned of it through the financial reviews reporting.
Yeah, so I can't remember what that was mid-November.
Okay, so let's just clarify for Mr White or Ms Thomas.
We sent our financial statements over to Finance on the 18th of September. I think they might have said the 17th of September yesterday, but it's basically one of those days.
Right. So they didn't notice it until it was in the AFR several weeks later. When was the Prime Minister or PMNC first informed?
I don't believe we've informed PMNC, Senator.
Right, okay.
This is an internal Treasury appropriation problem.
Indeed. Okay, when was the ANO first informed?
So the ANO were first informed, I think, on the 31st of March. 2005, so this year.
Right, so that was obviously only in relation to the first matter?
Yes, it was to the first one, Senator, that's right. And that was through a normal process. We have this thing called a Financial Statements and Annual Performance Subcommittee. The audit officer on that committee, it's a normal internal governance committee that we would report these sorts of things to.
Yeah. So at that meeting, someone from Treasury said, we've found this problem.
Yep.
Okay, and the second error?
The second error was on the 19th of June.
19th. That ANO was told on the 19th of June?
That's what I understand, Senator, yeah.
Yeah. And how were they told about the second error on the 19th of June?
I don't have that in front of me, Senator. Do you know, Mark? We might have to take that on notice, Senator. I don't know.
Okay. Do you have a clarity about whether this became obvious to the ANO as part of their normal auditing of Treasury, or whether it was self-reported by Treasury?
No. So we found these errors, Senator, in the process. It's almost so. To go to the how often this happens question, we almost certainly find some of these in the payments to the states function every year, not necessarily our own department's problems, but it's been other departments. We will normally find our team that does this centralised function of payments to states is normally the team that finds these. That's because you have to be right down in the detail to find them, and the sorts of things that audit office do, unless they do a specific audit, will not find them. Especially so if they're just doing financial statement audits like they normally do, they will not find them. So we found them, we self-declared them to the audit office and to our internal governance committees, etc., and told the Treasurer, obviously.
Okay. And the first time you publicly disclosed it was in your annual report?
Yes, Senator, in the same way that we've done the same thing for the last several years at least.
Okay, there's no other kind of reporting mechanism you're expected or required to do?
No, not outside of Treasury that I know of, Senator, no.
Did anybody tell the states, oh, sorry, that payment we made to you is not technically legit?
I don't believe so, Senator.
I mean, they're probably just happy to have the money, but you didn't think to give them a call and let them know?
Well, I don't believe so. If that's not right, we'll correct the record.
Okay. Oh, look, I could keep going and going and going, Chair, but...
Yeah, can I just let the community know, in 2019-20, there was a reported in the consolidated financial statements 14.6 billion in relation to a potential breach of Section 83 in relation to a program being run by the Department of Education, Skills and Employment. So I think my point you know, and I'm using this to support the point I've been making indeed yesterday, which is the value of the breach. I mean, of course you're going to look at it, but it's the fact that there was a potential breach that is the problem.
Okay. Just finally from me, Chair, on this, and then
yeah,
I
thought you might want to ignore that bit, because you're trying to make so much of something that's, you know, compared to some of the breaches that happen under your government.
Minister, you shouldn't be so defensive then, if that's the case.
I'm not defensive. I'm just trying to explain it was a human error that has been fixed.
Well, and I want to go to that. So, Mr White, as I understand it, the Treasury's described this in the annual report as a technical breach. What is a technical breach?
So, as I said at the beginning, Senator, when we think about payments to the states, we think about getting two things right. One is the substantial policy parts, right, which is about have we got the right amount of money going to the right state for the right reasons at the right time? Mm-hmm. The other part, as I said, is the administrative parts of that, which is normally this authorisation process. So we have used the word technical breaches for a number of years now to mean that getting the administrative part wrong. Mm. That basically we've complied with all the sorts of things, the substantive policy things are complied with, and where there is a breach of the administrative part, it's being technical. Now that language was also used in things like the consolidated financial statements back at the same time we started doing this. And then when there have been payments that we have reported in years where it's not been that, but it's been the wrong amount paid, we have not used the word technical. So that's what we've been trying to differentiate between. It's not being technical as it's like not important or somehow lesser than the other thing, but it's trying to differentiate between those two aspects of what we look at.
Because the ANAO said to me on Monday that they thought it was a serious breach. Do you agree?
Yes, Senator, it is a serious breach.
Yeah, and a breach of a fundamental principle of governance in Australia.
So as I said, we are not. That language is not meant to convey some lesser problem than not getting the policy parts right. It was to try and differentiate between the two. And I will say, so the words we used in there were in our financial statements, which are audited by the Audit Office.
Yeah.
And so they did not raise with us issues around using that language in there when they.
Sure, but Mr White, Treasury is not unfamiliar with making payments. If there's any department of the Commonwealth who would hope would be making payments lawfully and constitutionally, Treasury would be right up there.
I accept we should do a good job. As I said, we do have these two roles. One is to be the central area that makes all the Commonwealth's payments to the states. That is true, and we are the people who are most familiar with that part. We do not actually have that many individual payments as an agency that are our responsibility. Sure. We actually only have a small number of those, and in fact, in some of the changes that have happened recently with things like housing coming into Treasury, we're actually getting more, and part of our remediation process is making sure that actually that bit, when we're doing our own payments, is
that's my kind of final point, is how confident are you that this won't happen again?
So we went through, when we found the error, we went through all the payments we had been making and found no other errors. We have a system that tries to pick up all the errors, has checks and balances to make sure we do it. We think we minimise the chances of errors, but as you can see when we report against this in our annual report and the payments to the states thing, the CFS, it's actually almost impossible to prevent every single error in these. So I can't sit here and promise you that we won't make an error again. I can just say that we have put in place the processes we best think stops these things.
Sure, but don't tell me it's impossible to comply with the Constitution and make lawful payments. Surely that is not impossible.
That's not what I said.
Well, that's why I'm giving you an opportunity to respond.
Well, no, you're putting words together.
No. I'd say, please contradict me. Yeah. Please contradict me.
Senator, I cannot sit here and promise you that we will not make an error ever again, right? I can sit here and promise you that we will put in place processes that we think best meet all the things we need to do and minimise that entirely. We cannot stop every human error in this process. There are humans in these things.
Sure, but a good system means that a human error doesn't cause
should be picked up. Exactly. Agreed. No, I agree with that entirely. But it is also true that some things find their way through systems.
Sure.
Yes.
Okay.
I don't want to promise you we can't make an error and have to come back here next year.
No, that would be an unreasonable standard to hold you to.
Just on the use of language too, in that potential breach of Section 83 I mentioned before from 2019-20. Those in the Department of Education and Employment then described the payments in its financial statements as being technically in breach of Section 83, This is because the right amounts were paid to the right schools at the right time. The error related to the legislative authority around the payment rather than the substance of the payment. So that it's entirely consistent with how that was dealt with.
Sure, Minister, but let's not not try and minimise this. This is serious. I think compliance with the Constitution is a serious matter.
No, and
I know that's old-fashioned.
I agree with you, but I'm also... My point for the last 2 days has been, yes, you avoid a problem. You avoid a potential breach. Your system should avoid that. But where there is one, it's how you respond to that. You have to report it. You have to deal with it. You have to go back through your processes. That's what we expect of departments, and in this instance, that's what they've done.
Thank you, Chair. I understand. Yep.
We will go to a break now for 10 minutes. So we'll be back at 4:16 and we'll continue. You've got more questions for fiscal. So if the fiscal group could hang around, please. Thank you. we'll get back into it, and I will go back to Senator Patterson. Thank you.
Thank you very much, Chair. Mr White, you'll remember last round of estimates, we had a bit of discussion about spending and tallying up the effects of spending decisions over time, which you were helpful with. Thank you. So I want to return to some of that and examine some related issues. I'm going to put some propositions to you. If you think they're unreasonable or unfair, please tell me. But I understand that over the last 3 years, government spending has grown on average roughly twice as fast as the economy.
Good question, Senator. Can I just confirm one other thing before I do these questions?
Of course you can.
Cannot retrospectively fix the problem.
Okay, good to know. All right.
So your question is about payments growth over the last several years. Was that what you were?
Yeah, let's say last 3 years.
What sort of payments growth were you talking about, Senator, specifically?
Government spending total.
In nominal terms or in real growth terms?
What do you think would be most reasonable to measure how fast government spending has been growing compared to the economy?
So I do not have nominal terms with me, Senator. I only have the real growth terms in the budget. Go with that. I think budget paper 1 in statement 10, table 10.1 rather, has real payments growth over the last several years. It was negative for 2021 and 2021-22 and 22-23 after we came out of COVID. Since then it's grown by 2.96 and it's expected to be 3 in the current year, Senator.
Yep. And the economy's been growing somewhat less than that over that period of time. I think, you know, the most recent figures showed 2.1%, but it was about 1.5% before that, roughly.
I don't have the economic growth rates with me, Senator, but I could take your word for it.
Yeah, I think Mr White was getting to the numbers.
I do not have the economic growth rates with me, Senator.
Let's just take that as at read. If anyone violently disagrees with me, they're entitled to. As I discussed with the RBA Governor this morning, in that period, the economy has grown by about $300 billion and government spending has grown by about $150 billion. So government spending has been about half the rate of growth in the economy. Is that a fair observation in your view?
Well, again, I'm not sure this is fiscal group's area to compare and contrast in exercises.
I can't ask fiscal group about the growth in government spending as a proportion of the economy.
Well, then you're asking them other questions that around spending across the economy, which I don't.
Well, hang on. Really. Like, if fiscal group can't help me with the growth in government spending as a proportion of the economy, I'm not sure who can.
You've got a few pre-worked exercises there where you're asking things that you've set up. I'm like, they are here to help.
You're too cynical,
Senator,
Minister.
Patterson, but
I'm just
not
trying
to engage in what you're, you know.
I'm just trying to establish a shared set of facts, right? Because often these conversations end up being a dispute about, oh, no, I'm not sure about those facts. So if we can establish that up front, then the conversation is easier. We can have disagreements about policy, but once we have a shared set of facts, it's easier.
Table 10.1, Senator, has payments as a proportion of GDP.
Yep.
Over the last few years, Senator, that has increased to the current year and it's projected to decline slightly over the next few years.
Indeed, yes, we might come to that. Thank you. And I think it was last time in this setting that we discussed that the last financial year, government spending grew by about 4 times faster than the economy. From memory, it was about 5.5% for government spending growth and about 1.5%, give or take, for economic growth. That's right, isn't it?
Are you talking about the 24-5 year, Senator?
Yes.
So we have in 24-5 that there was 6% real growth in spending, and I recollect something of the other numbers that you mentioned.
Yeah. Okay. So I think all of those statistics, I think, point to the fact that government spending in recent years has been growing reasonably strongly.
government spending has been growing, yes, as we've outlined in the budget papers.
Yeah. Okay. So do you have your final budget outcome with you for
I do. Hang on.
24-25?
Yes, I do.
Okay, so directing you to pages 97 and 98, it's table B.1. It is...
Oh, yep.
You got it?
Yes, Senator.
Okay.
Oh, yep.
Now, at the end of that table, it shows the deterioration of the underlying cash balance from positive 16 billion, roughly, to negative 10 billion. As a percentage of GDP, that's about a 1% deterioration, isn't it?
Well, in both of those instances, there was improvements in the forecast UCB, both in the year that you talk about, I think from memory, where we had a deficit. The first year of the deficit was maybe a third of what we inherited.
Yeah, you mean the 2022 forecast?
There had been an improvement in what had been forecast, yes, from 2022.
The pessimistic COVID era forecast of which you base a lot of your claims about better management.
They're the set of numbers we inherited, and we've been working since then to get the budget in better shape.
We know. So I'm just actually interested in the real numbers, not just the imagined alternative.
Well, it's not imagined numbers.
Well, there they are, because they were never actually realised. They're just forecasts, and we're now getting quite far out, so not very reliable ones. But we've gone from, am I right, a $16 billion surplus to a $10 billion deficit between those two financial years, and that is it's a deterioration of about 1% as a share of the economy.
As you point out in that table, Senator, we went from a surplus of 15.8 billion, which is 0.6% of GDP, to a deficit of, it rounds to 10 billion, negative 0.4% of GDP, Senator.
Great, okay. And revenue that financial year, I think that's in the table as well. I'm just trying to... Yep.
In table B1,
receipts.
Senator, receipts.
Yep, so it's gone up by 0.1%, is that right?
Yep, from 25.8 to 25.9, Senator, if that's what you're reading.
Yep, and you have to go back to 2001 to find revenue as a proportional economy that high again, don't you?
I think that's right, Senator, at a quick look.
Thank you, and then prior to that, I think it's 86, 87.
That looks to be right, Senator, yes.
Yep. Now, spending as a proportion of the economy rather than raw terms, to compare apples with apples, that goes up by 1% of GDP between 23-24 and 24-25, doesn't it?
That's what the table says, Senator, yes.
Yep. So we can summarise those facts and say that the cause of the budget going into deficit between those two financial years is that spending increased by about 1% of GDP, but revenue increased by only 0.1% of GDP.
That's what the table shows, Senator, yes.
What were the drivers of that increase in spending primarily?
Have any clue, Luke, or are we going to take it on notice?
We'll probably take it on notice, I think.
I think I don't think we have the drivers of spending between those 2 years with us, Senator. We'll have to take it on notice.
Okay, but you probably do remember last estimates we did discuss the net impact of decisions taken.
Yes, Senator.
And just to summarise that, again, please argue with me if you think I'm not summarising it fairly or accurately. It was net decisions taken of about $22 billion. That is spending not offset in the 24-25 financial year.
I can tell you the biggest programs that, with the biggest nominal growth rates between those 2 years, if you're of interest. It's veterans payments, natural disaster, which is growing at 31%, natural disaster relief growing at 21%, hospital funding 12%, childcare 14%, aged care 11%, Medicare 8%, and aged pensions 5%.
Do you have the raw dollar terms there, Minister?
well, they're all pretty big programs. Like in the veterans payments, it's in the billions.
You can provide it on notice if you like.
But I'm just giving you, as you criticise spending, I'm explaining what those big areas of pressure are.
Well, Minister, actually, I want to be generous to you. I want to be generous to you. I don't hold you responsible for automatically indexing programs like the pension. That's set in legislation. That's not a decision. I'm actually interested in things you do have direct control over, like the decisions that you take and not take. That's why I'm
like investments in Medicare, for example. Investments in Medicare would form one of the ones you do have a problem with.
No, I'm not saying I have a problem with it. I'm just trying to understand what the cumulative effect of your decisions were. And as I remember from last... Sorry, Senator O'Neill, it's not really in order to interject like that.
Well, stop verballing people.
I'm not verballing anybody.
Well, I'm just explaining, as you're criticising the spending that's growing, you know, I'm outlining some of those big areas of pressure. I would add defence.
I haven't uttered a single word of criticism. I have not made
I would add defence in there.
Any normative or values-based judgments at all. I'm actually just trying to confirm factual information. So is it true, Mr White, that the net effect of decisions taken in the 24-25 year is $22 billion?
So I do not have that number with me, Senator. You mean over time since it was first in the forward estimates? That's what I recollect our discussion was about, wasn't it, last time?
Yes, correct. Accumulated decisions over time in that had an effect in that financial year.
Do you have that?
Senator, Luke Spear, Assistant Secretary, Budget Policy Division. I think this is covered in a quon.
Yeah, I think you might be right.
And we gave you a table, I think SBA 102.
Yep.
And we gave you a table of policy decisions that impacted 24-25 over. Do you have that?
Yeah, you did. You went back a bit further than I asked you to, but that's always good to have more information rather than less information. But I don't want to hold this government responsible for decisions that a previous government made. So if we go from 22 PFO onwards, is it $22 billion?
I haven't done the calc here, but I'll trust your maths.
Thereabouts, okay. So it's right to say then that the deficit of $10 billion last financial year was caused by decisions taken that otherwise, had those decisions been offset, for example, the surplus would have been about $12 billion.
Well, I mean, budgets are a whole range of decisions, hundreds of decisions really that interact with each other. But we're not going to apologise for investing in programs.
No apologies required, Minister. I'm not asking for apologies.
No, but it's implicit in the point you're trying to make here. Yes, it is. I mean, you can sit here and pretend it's not, Senator Patterson, but you and I have been, even though you're a very young, wise man, we all know what the point you're trying to make, and I've got plenty of your quotes hitting here, you know, criticising government spending since you took the portfolio responsibility. So I understand the point you're trying to make. But
Minister, we may well get to that, but actually I'm not trying to...
But we don't apologise for investments in Medicare, investments in urgent care clinics and the like that. They are good, sensible investments that are needed to ensure that we're helping people with the pressures that they're under, and in that instance build a health system that we need, and the same in areas like cheaper childcare. You
Minister,
know,
we can have a political debate. Very happy to have that another time, another place. But
I mean, it's a missing part of your criticism. Is
there's been not a word of criticism here.
You only read a few of your own transcripts, Senator Patterson. I read them all.
I'm glad.
And they are full of criticisms.
Oh, well.
They are full of criticism. And so I just say it's the missing bit of your argument is that whilst you're criticising, you're absolutely going nowhere near what you would indicate to be spending that you don't support.
I'll note that none of the factual propositions I've been put forward have been contested. If you subsequently
I haven't got all... I'm not signing up to all of the things
Minister,
that you're running through.
I'm just about to give you a nice off-ramp here, which is to say, if you
I don't
disagree...
need an off-ramp.
If you disagree, please come back on notice. Tell me where I'm wrong. I'll be very happy to be corrected. If I'm wrong, I want to be accurate.
No, I've got a lot of things on, so...
Like reading my transcripts, apparently.
Well, I do read your transcripts. It's part of my job. Like, I see it as an important part of
What
my
about
job.
a YouTube channel? You subscribe to that? That goes off.
Hey, I have seen a couple of your videos actually. I don't subscribe to. I don't have a subscription to YouTube, but I have seen a couple.
Good.
Starring James Patterson.
Yeah,
but yeah, it's an important part of my job.
Okay,
I don't
good.
know why people would find that funny.
No, why indeed? All right, let's go to budget papers now. 25-26 budget, page 335, table 10.
1, Senator.
Pardon?
Budget paper 1.
Yes, correct. Table 10.1, the Australian Government General Sector Receipts and Payments. So the budget estimates that payments will decline by 0.6% of GDP between now and 28-29. Is that right?
So with the caveat, the only caveat I'll put on that, Senator, that's what the table shows, but we have had the final budget outcome in the middle, as you just pointed out to us, which has a different number for 24-5, and our estimates are about to be updated for MyEFO, so there's a bit of apples and oranges with an outcome that we haven't quite got in the rest of the numbers, but with that caveat, yes.
Well, let's stick with the 25-26 budget numbers because they're at least consistent with each other rather than criss-crossing. So at least in the 25-26 budget, it shows that payments will decline as a percentage of GDP by 0.6% over the forwards, which in dollar terms is about $20 billion of reduction in spending. Is that right?
You're saying that 0.6% of GDP is about equivalent to $20 billion?
Yeah.
It's probably in the ballpark, I would think, Senator.
Okay.
I don't quite know what GDP is out there, but it's going to be something like that.
Okay. How is government going to achieve those savings?
So the numbers out through the forward estimates here are the combination of all of the numbers that agencies put into finance the system and get added up for all the programs that are going forward. Mostly programs grow, some shrink. It is the combination of those thousands, probably maybe even more than thousands of programs that are in the system at the moment.
Yes. So it's things like terminating measures.
There are some terminating measures in the numbers, yes.
It can be time-limited programs.
Yep.
It can also just be programs that are continuing that grow slower than the economy, Senator, as well.
Yeah, well, I'd like to see a bit of that. There hasn't been so much of that lately.
Me too.
Pardon me?
Me too.
Yeah. And it also includes a reduction in ASL, doesn't it?
Well, the ASL tables are published in BP4, I think. So they would give you the numbers that align with that.
Yep, and the PBO has calculated what that reduction in ASL would need to be in order to meet the projections of the budget, and they say there would need to be a reduction in the public service of 22,500. That's right, isn't it?
Well, I haven't seen the PBO's
Really?
numbers on that.
Haven't read the election costing report?
No.
You read my transcripts, but not the ECR?
Not in detail, no. I am aware of the report.
I think there's probably more value in that than my transcripts, to be really honest. Since
the
they
rest of things?
report on your election commitments and they say...
I saw that when it came out.
Okay.
But I don't have it in front of me.
Okay, so, but Mr White, is that right?
I'm vaguely aware of the PBO report,
But we're not here to verify PBO's work.
No, you're here to tell me how you're going to achieve these savings in the budget, and the PBO is one view, and they've said it require a 22,500 reduction in ASL. If that's not right, well, how does the government plan to achieve that reduction in spending?
Those numbers reflect decisions taken by the government at the point of the budget. I would tell you that we've found $100 billion in savings and reprioritisations across government since coming to government without cutting essential services and rebuilding the public services we've needed to. And we'll continue to make decisions like that. I mean, we've been spending a lot of time talking about the 5% issue this week.
Yeah, we could get to that too if we have time.
Yeah, I'm sure. You can't criticise spending and then criticise an exercise in fiscal discipline.
No, I just want to understand your own government's policies, Minister. So if not a reduction in ASL of 22,500, how will the government achieve the reduction in the budget?
Well, you'll see decisions the government makes reflected in the next update and in the budget.
But you've ruled out...
That's at the point where you will see those.
But I'm right in understanding you've ruled out those 22,500 reduction
Well,
in
I've said
ASL.
the public service, what I've said is, in my view, and it will move up and down around a bit, that it is around the right size now. I think we're resourcing it at about the right levels. Obviously, that's under continuous review. If you ask any agency, I think they would come running towards you saying they need more ASL.
I don't doubt that.
I think roughly the big increases that we've provided have rebuilt capability and have the public service at roughly the right size.
Sure, but if you're going to keep the public service at the current size and still achieve these savings, then you're going to have to find cuts elsewhere, aren't you?
Well, decisions the government takes will be updated in my EFO and through the budget process. We've found, and it's been reflected in the budget, $100 billion worth of savings and reprioritisations since we've come to government. And so that's the approach the Treasurer and I have brought to every update. And I would remind you, there was nothing in your last budget, in probably the last few budgets, of any savings or any reprioritisation. Ever since we came to government, the last budget there was zero, absolutely nothing. And every budget since an update, we have found savings and we've made investments where we have prioritised those.
Well, there was no net savings in your last budget.
And we will continue
anyway,
to do so.
So I also just want to ask, just finally then, Minister, are you actually going to allow all those terminating measures to expire? I mean, they include often, from my previous experience in my previous portfolio, things like cybersecurity funding, border protection funding. I mean, are you seriously going to allow those to expire?
So we're doing a lot of work in that regard. Where, there are, as you say, there are hundreds of terminating measures each, and it seems that each budget you deal with more as they come into the terminating frame. So they've often 3-year or 4-year programs that kind of suddenly end, and so we've been trying to triage those and deal with those. Like the legal one was a big one, almost $4 billion for community legal centres that just had a zero ongoing expenditure. So as we have been trying to deal with those and move them where we can, if they are ongoing programs, shift them into ongoing funding. But there are some terminating programs that should terminate and will terminate. But it's been a big part of my job in the last 12 months is to be trying to work through the hundreds of terminating programs, many of them in big departments like the Department of Health, which historically have had those arrangements in place. But we'll have to continue it. It won't all be solved in the next budget because it's a process, but we're going through it now.
Okay. I think I'm out of time. Thank you, Chair.
Thank you very much. Senator Canavan.
Oh, thank you, Chair. Sorry, just caught me unawares there. I just had some questions about some further questions on the GST redistribution. Particularly want to ask about Bruce Highway funding to start with. Has there been any decision made about whether the federal government's, I think, $7 billion commitment to fund new works on the Bruce Highway will be provided an exception from the GST redistribution calculations?
I don't know, Senator. I don't know if Ms Thomas has any further information.
If you could just give me one moment, Senator, we'll be able to get that information for you.
You're talking about as a current request, Senator, is that what you mean?
I don't know if it's a current request or not. I'm just wondering if it has been provided. As my understanding is that from time to time certain infrastructure and maybe other payments are provided exceptions to the, or carved out, if you like. Is that the right?
It is certainly the case that over time some payments to states have been given exceptions from being included in the GST distribution calculations.
And yes, I can confirm that the Treasurer has written and provided a 50% exemption.
A 50% exception? Okay, but not the whole amount?
No.
Okay, so if it's a 50% exception, the other 50% gets redistributed, is that right?
So the other 50% gets included in the calculation of GST distribution, Senator? Yes.
Right. Okay.
I would just add that that 50% is standard for land transport network arrangements.
How much would Queensland lose then of the other 3.6 billion?
So you can't just answer the question like that, Senator. It depends on, so it'll go into the calculation, and then along with a number, like many other things, and it will be part of that calculation to see how much Queensland and all the other states get. And it depends. It depends a bit on what is going on in all sorts of programs. Other states get exemptions for things as well. So it's not an easy answer to just.
Queensland's only about 20% of the population, so the default would be they potentially lose about 80% of it. That's $3 billion, which effectively reduces the Commonwealth contribution down to just $4 billion.
Except, of course,
less than 50% of it.
Except, of course, we're giving grants to all the other states, Senator, as well for infrastructure, and if infrastructure payments to all of the states are broadly in line with their population share, actually, it doesn't matter it doesn't get redistributed away in that way.
No, but this was made as a big announcement earlier in the year, suggesting it was a additional investment in the Bruce Highway, when it's, as you say, if it's just part of the overall package that other states are getting, it's not really that at all.
But there is, infrastructure as a program is reasonably large, and as I talked about before with Senator Sullivan, I think it ebbs and flows between years whether states get more than their population share or less than their population share, but over time it lines up pretty well. And at times there will be swings and roundabouts both in infrastructure payments and GST distribution impacts, but over time I think it's not a big impact, Senator.
Did you, you might have covered this before with Senator Sullivan, did Treasury have input into the terms of reference for the Productivity Commission inquiry?
We provided briefing to the Treasurer on the terms of reference, as we would normally do for those sorts of inquiries, Senator.
The terms of reference does include a request to look at the practice of exempting payments. Was that a recommendation of Treasury?
I wouldn't be able to recall that being a recommendation of Treasury, Senator.
So you don't. I just missed. You don't recall? Is that what you said?
I don't think we'd normally go to the substance of our advice to the Treasurer, Senator, but we definitely provided advice on the terms of reference.
Did you take it on notice then?
I can take it on notice, Senator. Yes.
Just moving to the no worse off guarantee. Is that going to be a consideration in the Productivity Commission inquiry? Is it going to be looked at?
I think the terms of reference are, as you would know, fairly broad, Senator, so there is the potential for the PC to look at a wide variety of different matters.
So no instructions have been given to the Productivity Commission not to make recommendations around the no worse off guarantee?
I just need to bring up the terms of reference to find what it specifically says.
Hang on, Senator.
We would not have, as Mr White said, we would have to actually take on notice any specific advice.
This is not the actual terms of reference. So I think, Senator, it'd be fair to say that the no worse off guarantee is, I don't know if we specifically reference it, but it is certainly I suspect it's certainly one of the things that the PC could look at.
It's not ruled out.
It's not. No, I don't think it's ruled out, and it could look at it as part of the way it looks at how it thinks GST distribution is best done. There might be consequences for the no worse off guarantee, I would think.
My understanding is the National Cabinet has made a decision to extend the no worse off guarantee to 2930. Is that correct?
There's a agreement with there's a Commonwealth state agreement that extends it to, is it 2930?
That's correct.
Yes, it is to 2930, okay. Yes. There is an agreement between the states and the Commonwealth to do that, Senator.
Is it the Commonwealth's intention that could be unwound as a result of this inquiry?
I don't think
you could say that.
No, there's not. We don't normally unwind Commonwealth state agreements, Senator.
Okay, I just wanted to make sure that's clear. So, okay, I wouldn't expect you would, but if you are ruling it out, that's good to know. Just moving on to something's been a bit of a bugbear of mine for a while, the gas situation or resources more generally, but particularly I want to focus on gas. As the Productivity Commission, or will they look at how the GST redistribution may impact incentives to develop resources, and especially gas, given the shortages we face in Eastern Australia?
I think that would be a question best directed to the PC.
I'm just wondering, I suppose you provided advice on it, and I don't know if you want to be really strict on this, I'm not sure
the terms
why you have to be, it's not that politically sensitive, but is this something that has exercised Treasury at all? Is one of the reasons you're asking for this inquiry to look at this issue, and I'm sure you're probably familiar with it, it has been discussed in previous reports, that the way notionally, my understanding is the way the GST redistribution should occur is a bit of like a Rawlsian blind eye to the natural attributes of each individual state, and it should be policy blind, I think, from memory the word was, for the redistribution. Yeah. But in practice, what the Commonwealth Grants Commission does is take the amount of royalties and effectively the amount of production that occurs in each individual state, and take that as a proxy for their natural resources. When obviously we know in New South Wales and Victoria they have abundant gas reserves, but they're not developing them. So they're not getting any penalty for not making decisions to develop them, but they're able to benefit from the redistribution of royalties from Queensland, which is one of the few states, the only state so far that's allowed a significant coal seam gas industry. Do you see my point?
Yes. Yeah. I would have thought that issue is one that could be raised in the PC review, Senator, yes.
Okay. All right. Is Treasury making a submission to this review itself?
It's not clear at this stage.
Okay.
Yeah. I wouldn't have thought
Might be useful. I mean, these sort of issues really need to be pushed. As I say, it's not a political one, and it's one perhaps where the Commonwealth could play a role, because we don't have a direct interest in these, certainly not the state royalty redistributions, but it's a very important economic point, I would have thought. Okay, all right, thank you, Chair.
Thank you. Okay, that concludes our session with Fiscal Group. Thank you very much for coming. We will now welcome representatives from the Department of Treasury, Small Business, Corporate and Law Group to the table, please.
Don't think so. No, unless I need to do something.
A little bit. Well, you had more to say.
That's right. That's true. Yes.
Oh dear. Hello. Good. Congratulations.
Oh, thank you.
This will be your last outing.
Okay.
Yeah. Different table, but yeah. I don't really need these anymore anyway, for the time being.
So the committee welcomes representatives from the Department of Treasury, Small Business, Corporate and Law Group. We will kick off with Senator Hume.
Yep. Thank you, Chair. I want to ask some questions about the New Access Program and Small Business Debt Helpline with Financial Counselling Australia. I just want to ask whether you can confirm what the annual funding levels are for those programs.
Senator Victoria Anderson, Deputy Secretary, Small Business, Corporate and Law Group. I'm going to throw to my colleagues, Mr Seaback and Ms Burke.
Thank you.
Good afternoon, Kylie Burke, Assistant Secretary, Small and Family Business Division. So, Senator, in the 24-25 budget, the government provided $10.8 million over 2 years to extend the Small Business Debt Helpline and the New Access for Small Business Owners programs. That was a split of $3.1 million for the Small Business Debt Helpline and $7.7 million for the NASBO program for an 18-month extension.
Thank you. Can I ask also how many FTE financial counsellors are deployed on the service and what the target ratio of counsellors to calls is?
I'll just find that information. I think I might need to take that on notice, Senator.
That's okay. If you could, that would be terrific. Can I also ask what the key performance metrics are used by the helpline? Is it the number of cases handled, or the number of cases resolved or referred on, number of calls by financial year? What are the metrics used?
Sure, Senator. So there's no specific targets for the small business debt helpline, so it's a demand-driven program.
Okay. Do you have a breakdown of the types of debt that are seeking support?
I don't have a breakdown in front of me, but there's a broad range of issues for which the Small Business Debt Helpline supports small business owners. So that can be things like avoiding bankruptcy, negotiating payment plans, debt waivers, grant applications and insolvency.
All right, so you don't know whether they are tax debts or whether they're loans or whether they're supplier debts or whether they're leases that are causing people to call?
I don't have that breakdown with me, Senator.
I know you don't have it with you. Is that data that you have, though?
Yes, we can take that on notice.
Yes, if you could take that on notice. I've got a number of questions on this that I'll put on notice for the sake of the committee too, and I'll throw to my colleague, Senator Bragg. Senator Bragg.
Thank you very much. So I guess I wanted to start with asking you about the matters we traversed last time, some of which revolve around the report into the governance of Housing Australia. So at the last estimates, you'll recall, you gave evidence that there was a $24,000 report that was conducted by, I think, a company called Intersection. That's right. Which looked at the governance issues inside Housing Australia. And you, from that hearing, took on notice our request for a copy of that report. So I guess my first question is, can you please supply the report?
So, Senator, the Minister for Housing has made a public interest immunity claim over that report. It applies to the whole report. And I think our question on notice in relation to that refers to that public interest immunity claim, which applies to, as I said, the whole report.
Okay, so you are referring to the Minister's right to advance a public interest immunity claim, which, for the millions of people who are watching this proceeding at home,
sell yourself short.
Will be means that effectively the government has decided that it will use a power available to it to stop the public reporting or production of that report. Have you provided that claim in writing?
The public interest immunity claim was made in writing, yes, to the Senate.
To the Senate through the Economics Committee?
It was in response to the order for production of documents.
Okay, that's a separate process. We've had this conversation before, Ms Anderson.
Yes, I understand.
There are separate processes which are available to citizens, which are then available to senators. This is a hearing of the Economics Committee, which has no direct relevance to OPDs or chamber activities. So we asked for the report on notice at the last estimates hearing. Is your answer that you, on behalf of the Minister, or the Minister is seeking to apply a claim of public interest immunity in response to the question?
That's correct.
Can I just jump in, just deal with your point that you don't think the Economics Committee has any relevance to the chamber? Like I question that because the powers for the inquiry come from the chamber. And so is your concern that a response made in the chamber claiming public interest immunity shouldn't apply to that same question being asked in a committee? Because
I don't know.
Or do you want? Would you have preferred that Treasury provide that, just for completeness sake, the public interest immunity claim to the committee in addition to the OPD? Because I think that is something we should think about.
Well, it's a good statement. I don't know, but what I'm trying to get at is that there are different processes here which
Yeah.
run their own race,
No,
right?
I
So if we
understand
ask a question on notice through this committee, then the
I
obligation is
understand
to provide a response. If we advance one of your favourite OPDs through the chamber, that has its own response. And separately, if there is an FOI which is advanced by a citizen or by a member of parliament, then it has its own response.
Yeah.
None of them are necessarily connected.
Yep. Okay. Well, we can certainly consider that. I
So-
mean, the answer would be probably that in relation to OPD number XXX, public interest immunity was claimed over that document. But I agree. If the distinction is two separate processes and they both need to be answered, then I think that's something that we can.
So I guess what happened in the last... Well, let's go to that now, because there was an OPD as well. Now, on the last or second last sitting day, the Senate rejected the government's PII claim. So when are you going to provide the report?
Well, we would stand by the PII claim.
But I don't think you can. I think the Senate's rejected it.
Well, I'm happy to take further advice on it. What usually happens then, the way the OPD are being misused in the Senate, is you'll seek to move to compliance and attendance, which is, routinely happening 3 or 4 times a day.
But the point is not about the volume of OPDs. The point is that this report is being kept secret. The Senate has sought its production. You have advanced a claim of public interest immunity. The Senate has rejected that. So my question is, when will the report be provided to the Senate, given...
Well, I'll see if there's an update.
The Senate was elected by the Australian people.
I'll see if there's any update from the Minister.
Okay. So I think we just need to, just for good governance, I mean, the Treasury has really, I think, lowered its colours here in how this has been handled in terms of the original FOI responses. Originally, there was the neither confirm nor deny response, which is not available for this purpose anyway. It's only available for PBO or national security issues. Then at the last hearing, actually, you made the point, Ms Anderson, that there were no adverse findings. So, I mean, I'm not really sure what is the basis for the claim. What is the basis to keep this report away from taxpayers' eyes, who've paid $24,000 for it?
So, Senator, I might invite Mr Hertzberg to the table as well to help me out. But I think the reasons for the public interest immunity claim are as outlined by the Minister's letter to the Senate, which I appreciate you would like clarified if that can be adopted in this committee, and our advice that it is. I think, as you know, we're no longer pressing the claim around confirming or denying that the decision maker under the FOI process made. As you say, that's a separate process and it has its own governing legislation. I think I would say that at all times we consider that we have applied all aspects of the law in the various ways that you've sought this report correctly. I appreciate you have a different view to that, but I think that's the reasoning is as per, in terms of the PII claim, the reasoning is as per the Minister's letter.
Okay, well, would you like to add some more information, Mr Hertzberg?
Senator David Hertzberg, Acting General Counsel at the Treasury. So the question is, what was the basis for the claim?
Yeah, why are you not providing the information? I mean, this Housing Australia organisation is a bin fire. I mean, it's hopeless, and you're covering up this secret report. Why are you doing that?
Senator, just before Mr Hertzberg answers, we're not covering up anything. We've outlined the
filing a
reasons.
claim
It's
of-
quite unusual to release investigation reports. Full stop. It rarely happens. Over many years, that has been the reason for PII claims in the past, and that has been sustained. I appreciate there's a process to go through, so I don't accept that we are doing something unusual in this instance. I appreciate you have a different opinion and a different view about that, but I think we would still assert that there are good reasons for the Minister to be claiming a public interest immunity.
Okay, well, what are those reasons?
Perhaps, Senator, I can jump in as well. I guess, Erin Wells, Chief Counsel for the Treasury. Certainly as an opening statement, I'd say that all of those processes that you've mentioned, OPDs, Quans and the FOI Act, do play a vital and important role in transparency and accountability for government, and we certainly support the purpose and meaning of those acts. On the OPD issue, so that was in response to OPD 197, there's a number of reasons set out in the Minister's response to that OPD. The main one is that, and as has been the point made by successive governments, it's to preserve the integrity of fact-finding investigations and to protect the confidentiality of those who participate in them. We do want people to be forthcoming and openly participate in investigations. Secondary reasons also listed there was around protecting the privacy and reputation of individuals referred to in the review, which is often put forward and has been accepted as relevant PII grounds. In relation to the Quans, I believe that we did respond to those Quans, Senator. They cross-referenced the PII claim made by the Minister, so those have been actioned. And in regards to the FOI, I can confirm that we did write after the last Senate hearing when those disclosures were made to advise OAC that we no longer were making the claim of neither confirming nor denying, and we did update the record there as well.
Okay, so in the past, if there's been an order of the Senate, a government will ultimately comply with it. I mean, the PII claim has been rejected. So unless you're saying this government's going to create a new precedent and going to ignore the will of the elected Senate.
Well, I'd have to go back and have a look at that because, I mean, I'm not sure that is the case. I think it was when OPDs were used rarely and for the power that it was originally intended, but I don't think that was the case from my memory of when we were in opposition. And, I think on a report like this, I think there has generally been acceptance that, where it's looking into, fact-finding investigations and individuals putting their view that, people just won't participate in things like that if you go and throw them into the public arena on the floor of the Senate. You're a reasonable person, you understand that. And, in the interest of good governance, having the ability for some confidentiality in investigations is pretty essential to those investigations being able to do the job properly, which I think is probably what you want as well.
I understand that, but in the past when there have been similar investigations, at least the government then, and actually it was your government, offered the committee a briefing or offered something. The way this has been handled is you've filed bogus FOI responses, which are wrong, using the wrong exemptions. You've really obfuscated and tried to avoid answering the questions at prior hearings. Finally, because there was some external pressure, you provided information to the media before you answered the FOIs or the Senate processes. I think, the basic assumption that people would have here is, well, the Senate has now rejected that claim, so either you provide the document in full or you provide with some redactions appropriate to take into account the sensitivities you have flagged. But, I don't think the option is available to you now to continue to obfuscate, given the Senate has ordered its production. Otherwise we're going to have another Briggs report scenario. You have a longer question time or other measures.
Senator, I just wanted to mention one thing. You said we used bogus or spurious grounds in the FOI. No, that's not correct, Senator, and that is something that Mr Hertzberg actually pointed out last time. We were able to use those exemptions that were available to us, and the decision maker did make that decision independently, not anyone at this table, as you. Yeah, but it's easy for you
to say that. He doesn't work there anymore, so you're throwing him to the wolves.
We're not throwing him to the wolves. We're defending this as it was an accurate decision or an available decision.
Was it a good decision?
It's not for me to comment on the nature of the decision. I was not the decision maker, Senator, but I don't think it's fair to say that those grounds were not available to the decision maker. They were. In terms of your
can you
question,
provide on notice then exactly how you justify your use of that exemption?
I'm happy to take that on notice, Senator. It will not be made by the decision maker, but I'm happy to ask my Lord Division colleagues to provide an answer to that so that you understand that that was an available exemption. And then in relation to next steps, I'm very happy to take on notice a discussion with the Minister. I haven't had a chance to do that since the last sitting week. So we're very happy to discuss with the Minister what she would like to do next in relation to that activity in the last day of the Senate, as you've said.
Okay, so I want to ask you... Yep.
How are you going?
I've almost finished this line.
Okay.
Then I've just got another issue I need to raise. But just on this governance issue, basically you have now said that the commissioning of the report was not done by letter from the Minister, the former Minister Collins. Okay. Because I think there was an inference perhaps in the past that there had been a letter exchanged.
Yeah.
So you're now saying there was no letter.
I think my evidence was that we were requested to do it by the Minister.
So how did that happen? So there's no letter
There was an exchange of advice and a response to that advice.
So is there any paperwork?
There is, yes.
Okay, well, can you provide the paperwork?
I'll take that on notice, Senator, yeah.
Okay, I just have one more line of questioning and I'm done.
Okay, great, thank you.
Okay, that's everything on that report. So we look forward to seeing your answers on that. Look, just in the other FOI I want to ask you about is in relation to the 5% deposit scheme.
Senator, I think that FOI is being handled out of... So we can answer general questions, but the decision makers in Treasury are not all in my group. They are in the groups that are responsible for the subject matter.
So we should ask housing about that tomorrow?
Yes.
So we should ask housing about housing FOIs to do with the 5% deposit scheme, but we ask you about things to do with Housing Australia.
Well, that was because that issue was handled in my group, Senator. The corporate governance function is in my group and decision makers were in my group for that.
Okay, what about FOIs to do with the housing funds payments?
I'm not exactly sure of the FOI. I'm not sure if anyone else at the table knows the exact FOI.
There's an FOI to do with an organisation called Hester, which is a super fund, and you provided back dozens and dozens of pages that look like that, black redactions.
So, Senator, I suspect that also is Housing Group.
Yeah.
Does anyone
Lots
know
of
the
pages like
decision
that.
maker
Very transparent.
Well, you can talk to them about that.
Great
Senator.
information. So don't I ask you about that?
Well, no, Senator, I'm not aware of that particular FOI.
So who do I ask that?
I mean, we can say a general statement that the decision makers do have valid exemptions available to them under the Act, and they apply that framework when making a decision around what to redact and what to release. As my colleague has stated, the decision maker is not within our group.
So just so I understand, we're going to ask the right people. Who do I ask about those issues?
So all housing FOIs would usually have a housing decision maker, with the exception of the ones that we've been talking about in relation to governance of Housing Australia, which were handled in my group.
Senator, I might add that it's standard practice to apply an exemption through blacking out. That's what redacting is. And
it's not very transparent though, is it?
Well, that's how the decision is presented. So when an exemption applies, the decision maker will black out the relevant material.
No wonder people are losing faith in democracy. That's a statement. Thank you very much.
Thank you, Senator Bragg. Sure.
This is small business, right?
That's right.
Almost all the small businesses I talk to are really struggling with electricity prices, electricity bills. Are you hearing that as well?
I'll check with my colleagues, but yes, generally we are hearing quite a few concerns around sort of pressures on a range of cost of living, but obviously electricity being a significant input to businesses. So I can confirm we are hearing that, but if anyone's got anything more specific to say, please do.
Which is why we extended the energy bill relief.
I'm going to get to that next. But is there anything else? No?
Yes, Senator. So it is an issue that we hear occasionally raised through small business channels. As the Minister said, there's a range of supports available through that. So one of them is the Government Cheaper Home Batteries program, which was launched in July this year. And that's helping more small
businesses get the home battery?
That's helping more small business install batteries on their premises.
So what's the definition of small business for that scheme?
I would have to check with my colleagues on that one, Senator. But my
Is it capped
understanding,
at a certain amount of money?
my understanding is that businesses can access a discount of around 30% on the upfront costs of installing small-scale battery systems.
Like, doesn't matter how much it costs? Like, so is there a cap, like a dollar cap as well?
I'll take that on notice,
All right,
Senator.
Okay.
There's also energy efficiency grants for small and medium enterprises to the value of $56.7 million. And this is about improving energy efficiency, helping small businesses and medium enterprises save on energy bills and lower emissions. And they can access grants of between $10,000 and $25,000, which can be used to upgrade to more energy efficient equipment. And as the Minister said, the energy bill relief as well.
The rebates, is that what the energy bill relief, is that what you're referring to?
That's right. And
what size do you have to be for those? Like, what's the definition of small business for those?
so it's estimated around 1 million small businesses are eligible to receive the rebate.
I'm just, I know there's so many definitions of small business, but like, what size, number of employees, what's the cut-off between small and big to get the rebate?
I'll need to take that on notice, Senator.
Okay. So those end at the end of the year, don't they? And obviously the things you read out are not really helping because small businesses are complaining, as we've all admitted. So what's on the books to try and help them in the future? How are they going to be? How is this going to be? I mean, it's one thing to listen to them and you've heard their complaints. What's going to be done to help small businesses from going under? There's a lot going under, partly because of this reason.
Well, Senator, I think ideas that are in generation would be subject to the budget process and the MyEFO process, so that there are obviously things that we're thinking about based on the feedback that we've heard, including through the small business roundtable that the Minister had in the lead up to the economic roundtable earlier in the year. So there's a range of things around red tape and coping with the digital environment, around cyber. In particular, that we're hearing is a huge issue for small businesses. So all of those things are sort of factoring into our thinking as we go into budget processes.
Well, hopefully we get some solutions. Because
Senator,
what we're currently doing is not working. Yep.
Sorry, Senator, I do have an answer to the question that you asked around eligibility. So under national energy laws, businesses are designated as small energy customers depending on the amount of energy that they use.
How much is that?
It depends on the amount of energy they use in terms of the designation. I think that depends.
Well, I'm trying to, anyway, maybe take it on notice. I'm trying to work out how much is that energy. Presumably there's a threshold of if you use too much energy, you're no longer a small business. Is that what you're saying? I need to
take that specific on notice.
Okay,
Sorry, Senator.
Okay, thanks. Thanks, Chair.
Thank you very much. That concludes our session with the Small Business Corporate and Law Group. Thank you very much. Thank you. And we will now invite representatives from APRA to join the table, please. Might just suspend for a minute. Again, thank you. So I would now like to welcome representatives from the Australian Prudential Regulation Authority. Would anyone like to make an opening statement?
Thank you, Chair. So we have an opening statement. I believe it's been circulated, and I'm happy to just have it tabled and reflected in the Hansard. Other than that, I'm happy with my colleagues to take questions from the committee.
Okay, Mr Lonsdale, your statement is being circulated now, so we will take that and incorporate it into Hansard and go to questions. And I believe Senator O'Neill has questions, so we might go to her first.
Thank you very much. Thank you. I haven't read your opening statement yet, so I may have some further questions, but if I can commence with APRA's role in the First Guardian Shield issue. I understand your main role is as the regulator of the trustees and their platforms, and that ASIC has taken the lead in coordinating a regulatory response in large part. But I also note that Diversa was a for-profit trustee and had both First Guardian and Shield products available to its members via its platforms. I also understand that Diversa is not a stranger to APRA in terms of regulatory matters. So can I just take you through a little of the documentation I have, and perhaps we can get to your role with regard. So the first item I'd like you to have a look at is a statement from APRA, a media release from from January 2023. Chair, and I've got multiple copies here. Are you familiar with that, or would you like to wait till you have it in front of you?
Well, I'm sure we will be familiar. I'll ask Ms Cole.
Not in recent history.
Thank you,
Senator. So
It would be handy to have it in front of us.
It's coming to you now.
Could I say something just in relation to what you said already, Senator?
Yes.
I think it's not quite correct to say that ASIC are leading the regulatory response so much as ASIC are leading the enforcement response.
Okay,
we have our own regulatory response, but ASIC are taking the lead on what I'll call the formal enforcement action.
Thank you. So you have that document in front of you now, is that correct?
Yes.
Okay, so if I could just draw your attention to a couple of elements in there. You announced on the 24th of January 23 that you were imposing additional licence conditions on Diversa trustees. What were the major concerns of APRA at that time with regard to this entity?
Well,
without going back into this, I'm afraid I can't tell you off the top of my head now in relation to this specifically, other than if it's reflected in here, Senator.
Well, I think it's reflected in the press release, Senator, particularly in the first 3 dot points that summarise our concerns at the time.
So can I just ask a couple of questions about the second set of 3 dot points? Governance and risk frameworks with a particular focus on third-party service providers. Who were those third-party service providers?
I think we'll
check if we know.
I think we'll have to take that on notice.
And what services were they providing to Diversa?
Sure. At this distance from these events, Senator, I can't really add anything expanding on what is in this, but we will take that on notice.
Okay. You noticed persistently high fees, and you mentioned that in your second dot point, but then you asked for the conduct of an independent review to ensure APRA's concerns had been adequately addressed. By whom was the independent review undertaken?
Again, I'd have to get you that.
And to what standard was it required to adhere?
I'd have to get you that on notice.
And when was it received?
I'd have to get all of that information on
and
notice.
Can you provide that in a timeline, whether that was before or after the listing of First Guardian and Shield?
Can we tell you whether we got it before then? I'm sure we will be able to when I've been able to go back through.
Okay.
There's somewhat historic information.
So if I can just say from a layman's point of view, you had a look under the hood at Diversa and you found some pretty significant problems. So can I ask then, having had the opportunity to pull up Diversa and impose additional licence conditions, did you have any concerns at this point about the products that Diversa was making available on its platform?
Well, what we will have done, and what is typical for us to do in this sort of context, Senator, is to obtain the report and to conduct supervision by reference to any of the issues in that report. But as I can't...
And the report you're referring to there, is that the independent review that I've asked you?
Yes, exactly. Sorry, that's what I mean, the independent review report, we will probably call it. And supervise, add additional supervision, scrutiny on areas that we were not satisfied, well, that the independent reviewer highlighted. But I'm very sorry, but at this distance I can't remember the specifics about that. I think we could probably offer some thoughts on fee levels, because those would be things that would be highlighted in the annual performance test and our own collections of information.
And you've indicated that in that second dot point there. Yes. But I am really interested in what the independent review was asked to cover off. And seeing as they were in your purview, my question is, can you tell me if you had a good enough look to observe what the trustees were doing with regard to putting products on their platform?
So, Senator, as we said, this press release almost is 3 years old, so we do want to come back with information. We'll take that on notice. The general proposition, though, around governance on trustees and platforms has been an issue we have been looking at for some time. And I might...
As far back as 2023?
So we certainly, in our last 2 corporate plans, we have indicated investment governance, including platforms, is an issue that we want to have a close look at and have been having a close look at. So
that would cover off the years 23 and 24?
23 and 24.
And this document is about 23, and at that point of time you were already looking at the governance of platforms.
We were looking at investment, so we've been looking at investment governance for many years, including liquidity arrangements, including valuations, and certainly more recently on platforms. But I will just ask if we can talk about how we
think
thought
your
about
last
that.
appearance on the 9th of October, you indicated reviewing the investment governance of major platform providers as part of that ongoing work.
Yes, but that started at an earlier phase. Perhaps Ms Beverley-Smith will outline what we've been doing over what time period.
Sure. Thanks, Senator. Carmen Beverley-Smith, the Executive Director of Superannuation, Life Insurance and Private Health Insurance. So specific to your question, subsequent to the last hearing, we have completed the review that we indicated that we were in the process of doing on the major platform providers. Those major platform providers comprise approximately 95% of all member assets that are distributed via platforms in superannuation.
I might come to that a little later, because that's kind of the current situation.
Yes.
I just want to interrogate Diversa if I can, seeing as they're so significant for so many Australians who really, they've lost their future. They've not just lost money, they've lost their future. And that has a very significant impact. I've got another document I'd like to table, if I can, from the Secretariat's, with the Secretariat's support. This is an article with you, Mr Lonsdale. Sorry, just before I jump on, can I confirm that you are taking on notice what actions APRA took in response to any concerns that became evident to you about Diversa?
Yes, we're taking that on notice.
So you're going to have a look at that. Thank you. So this document that I've just provided you is a document from August 21 of this year, when the full scale of what's been going on with First Guardian Shield was pretty well known. You're quoted in this article on the website Professional Planner, Mr Lonsdale, saying it's primarily ASIC that's looking into the issues of these products on the platforms, and you're quoted in here as saying on the second page, we flagged when we did the performance test review in 2023 that we had some concerns with platforms, which is why I was asking you about being aware of Diversa, putting in a licence conditions on them in 2023, and this statement that in 2023 you already had some concerns with platforms. Are you sure you can't recall if you had any concerns about Diversa in 2023, seeing as you're already in there looking at them and sanctioning them with additional licence conditions?
Senator, as we took on notice, the Diversa measures that you flag in the press release, they are 3 years old. We want to come back with the most accurate information that we can because it is a very significant issue. We've taken that on notice and very happy to do that. Our investment governance work, which includes our platforms work, as indicated, we have been looking at for quite a while. We have talked about
Since 2023 or prior to that?
Well, so what have we been doing in 2023? We have revised our investment governance rules in 2023. We undertook a thematic review on unlisted assets, particularly on liquidity in 2023, and we published that in 2024. When we became aware of specific concerns with Shield at the end of 2023, particularly on MIML, we commissioned an independent report. And through 24-25, there's been a lot of work happening with our co-regulator ASIC and supporting them on various issues related to Shield and First Guardian. And at the end of 24, we began scoping our work on the thematic review on platforms, which we delivered, I think, publicly in October 25, Senator. So there's a long history of APRA working on investment governance, including platforms.
And if I can take you to the 2023 Superannuation Performance Review and the media statement accompanying that review, which is the third item that I'm going now to provide to the Chair and ask you to distribute from the Secretariat, if I can, thanks. You released the results of the 2023 Superannuation Performance Test. And there's an important quote in there from Ms Cole towards the end of that document where she says, members in trustee-directed products make active decisions about their investment options and might select products, and some might select products for reasons beyond performance. Nevertheless, all trustees must take responsibility for the products they make available and ensure the products they offer are in the members' best financial interests. Right, so I read that as meaning APRA was concerned as far back as August 2023 about the appropriateness or the quality of the products being offered to members for these for-profit retail platforms. There's another quote in there that says trustees with multiple failed products had rationalisation programs underway. What action was APRA taking against these trustees in 2023 to ensure that they actually were offering products that were in members' best financial interests? And where was Diversa in your observation?
Well, we were doing several things, Senator. We have observed since I think this was the first year that choice products were considered in the performance test, because the first couple of years of performance tests were My Super products only. So having been given the regulations that meant we could expand the performance test, we ran the performance test, which at a highlights level did raise concerns that the trustee-directed products in the choice sector were not generally as well performing as the My Super products. So, as we had done with previous iterations of the performance test, we in our supervisory interactions sought to get the trustees to focus on how they were going to move their members to better products or better funds. That is a much more complex job than it is in relation to My Super. because members have typically gone in there with financial advice and have considerations such as tax considerations. So we were certainly have been pushing trustees who do not show as well on the performance test outcomes to encourage members to move to different products.
I'm sure you were pushing.
We can't order that, but nor can we. We can't direct that members should be automatically moved in circumstances where members have chosen to go there and may have considerations other than performance because they've got tax issues or they've made choices for particular reasons.
Members in the First Guardian and Trust were hardly choosing transparently. They were very grossly manipulated by a large number of people in the whole food chain who were doing the wrong thing.
Yes, look, we were clearly not aware of that, Senator.
But you had Diversa in your sites in 2023. You had imposed on them additional licence conditions. If you were looking at Diversa in 2023 and you were acknowledging in August 2023 that there were trustees with multiple failed products, why were you not investigating Diversa?
Well, Senator, I can't tell you again until we've had a look what was in that report. It looks from the dot points that it concerned risk management issues and may have concerned performance test issues. I simply can't tell you at this point. What I can tell you is that we were not aware of issues concerning First Guardian or any of the funds that First Guardian or any of the trustees that First Guardian were associated with or their trustees until a much later date.
So I have further questions, Chair. So
I'm going to have to rotate the
Thank
call. Senator Sharma.
Thanks so much. Thank you. I just wanted to follow my colleague Senator O'Neill's line of questioning about First Guardian and Shield. I'm relatively new to this though, so just forgive the simple questions to begin with. But what were the superannuation trustees that made these products available on their platforms? It's Macquarie, Netwealth, Diversa and Equity trustees, is that?
So Macquarie was Shield,
Yep.
Equity trustees was Shield, Diversa, Netwealth and Equity were First Guardian, Senator.
Okay. And then of the 12,000 Australians who've been impacted by this, what was the quantum that would have invested via these platforms? What's the overall cohort?
1.2 billion, my colleague is telling me.
Sorry, Senator, could I ask you to clarify the question?
Oh, yeah, so I understand there's about 12,000 Australians who've incurred losses as a result of this, and the figure was 1.2 billion. How much of that, both individuals but also dollar terms, is attributable to people who've invested via these 4 superannuation trustees?
As I understand it, Senator, it is the entirety of the 1.2 billion.
Everyone's gone in for these. Okay.
So
there's no other way they could have invested in Shield.
As I understand it, Shield and First Guardian products were only offered on platforms in funds under the trusteeship of those 4 trustees we mentioned.
Okay.
I'd like to be able to take that away and double check it, Senator. Sorry, I had understood that it wasn't all super monies, but I think we better just check.
Not all super monies, but the 1.2. It was only those 4 trustees, as I understand it, that offered those products on platforms for superannuation members.
Yes, sorry, I'm just asking, as I said, forgive the rather simple questions, but could an Australian have invested in Shield or First Guardian outside these 4 superannuation trustee platforms?
I think I'll have to take that one on notice, Senator. I'm not sure, but through the superannuation system, the answer is yes. I don't know if outside the superannuation system whether there's a different answer.
Okay. I mean, I know that wouldn't be your responsibility then, I guess. That's correct, right? Okay. And when you wrote to, so I believe you wrote to all superannuation trustees on the 7th of October 2025. I was just looking at that letter on your website earlier. And I believe somewhere in there you said if certain steps were not taken,
robust regulatory action and the full use of APRA's regulatory tools would be used. What does that consist of, robust regulatory action and the full use of APRA's regulatory tools?
It consists of being able to impose licence conditions and or directions.
Okay. And have you had cause to employ any of those today?
Senator, we are in
with respect to this?
We are in a process at the moment which well, maybe I'll ask my legal counsel to explain what we can and can't say about this process at the moment.
Yeah, so the range of APRA's enforcement tools are set out in our enforcement approach. In this sort of circumstances, not talking specifically, my colleague Ms Cole is right to suggest that licence conditions directions to require them to perform an uplift programme or something that will commission further independent reports and so on are tools in our toolkit.
Sorry, I couldn't quite hear what you were saying there, Mr Helpfully.
Yes.
Yeah, so what are your directions capacities?
So in high level terms, so if we think an entity is in breach of its regulatory requirements, we can direct them to do something or to restrain them from doing something. But what I think we should say is that our position is that we generally don't make administrative actions public until we've concluded the procedural fairness requirements of utilising that toolkit that we just talked about.
Thank you.
Okay, and sorry, the status of the consideration of the use of those powers, what are you able to advise me?
I think there was a clue there in what my colleague said.
I must have missed the subtlety.
We are obliged to give procedural fairness requirements to entities where we are considering imposing directions or conditions.
That includes.
And until that procedural fairness process concludes, we're not in a position to make any further announcements or disclosures.
Okay, and procedural fairness would normally entail a right to hear and contest the accusation and provide evidence in response?
To understand the matters that we're putting to an entity and to allow that entity to put forward its own position in respect of that evidence and what we were proposing.
Okay, okay.
Senator Chung, can I just ask if they're acting with ASIC in this? Are you coordinating with ASIC in taking your action? Because you talk about being cousins.
So at the beginning, Senator, when I said I just wanted to make a distinction between regulatory action more generally and formal enforcement action through a court process, that was exactly really the point I was going to, which is that we have a set of tools, ASIC have a set of tools and ways of doing things, and we're highly coordinated in how we are approaching the use of our tools.
That's okay, Senator Rayner. Was APRA rather given any warning about First Guardian or Shield before ASIC took action?
Senator, I don't think so, but let me just check the dates. So the first time we knew something about Shield was December 2023, and we had prompt discussions with Macquarie Investment Management Limited at that point, and shortly afterwards with ASIC. So I think the answer in substance to your question is no. And it was a later point in 2024 when we knew about First Guardian.
And when you first knew about First Guardian, what steps did you take at that time? So you said when you learnt of Shield in December 2023, you had discussions with Macquarie?
Yes. We required Macquarie to do to obtain a third-party independent report on their systems and processes. In relation to First Guardian...
Sorry, when was that, Ms Cole?
Sorry,
when?
The Macquarie report.
The request from Macquarie.
The request to Macquarie was April 24. We had numerous discussions with ASIC about the approach to that. And then when we became aware of the First Guardian matter, it originally appeared through discussions with ASIC that First Guardian were carrying out a capital restructure. So there was not immediate clarity on what was happening there. And we then again liaised with ASIC, who we agreed would again be in the lead on enforcement action in relation to First Guardian.
And
now,
so what time of year was this? This is in...
That is... I believe that takes us through to December 24, when ASIC informed us of certain investigations that it was undertaking. All of this period was subject to a lot of discussion as to who was doing what and ways to coordinate.
Yep. So you mentioned that First Guardian first came onto your radar because of a capital restructure. Was that in December 2024 or was that earlier?
No, sorry, Senator. December 24 was when we knew more about the action that ASIC was taking. In relation to May 24, that's when we first became aware from ASIC of various issues on First Guardian, which at that moment appeared to be a capital restructure issue.
Okay. And when ASIC issued the Section 912C notice to Macquarie regarding the concerns about Shield, when was APRA informed of that?
Not sure I know the answer to that one, Senator.
Did you know in advance, or do you only...
I don't believe so. Can you tell me what it was again? Just so.
Yeah, the issuing by ASIC of a Section 912C notice to Macquarie regarding...
Do you remember, colleagues, what the 921C notice was? I'd have to take that on notice,
okay.
Senator.
I believe it's a formal warning to Macquarie. I might be mislabelling what a Section 912C notice is. Is that what you understand it is?
I can't think what a 912C is at the moment. It's an ASIC process and I can't just think what it is, but we'll take that on notice.
Okay.
But Ms Cole, you keep saying that you're, joined at the hip to your cousin entity ASIC. You're saying we were coordinating about who was doing what. You've used the term highly coordinated interaction with them. Yet, from what you're saying, there's gaping holes in your communication with ASIC, and there's certainly no indication that although you had the warning about Diversa, you were looking under the hood at what they were offering on their platform.
I don't accept that there were gaping holes, I'm afraid, Senator. I think we were, I wouldn't say joined at the hip, I don't like that expression really, but we were highly coordinated and we continue to be highly coordinated. It's just that we clearly do have different mandates in the Twin Peaks system. We have a mandate that focuses on the system and the prudential level, and ASIC have the lead on consumer protection issues. That is the way the split happens, and when something like this happens where there is dual regulation, with us looking at different aspects of what entities do, we have that level of coordination.
You're further up the food chain. You get the early warning. You get to see under the hood of all of these entities and see what's going on. You're already into Diversa. You're already looking at them. You're already in 2023 talking about the platforms as an area of concern. You've got Diversa in your sights, and you can't even remember anything about it, and you didn't do anything about it. Did you talk to ASIC about that?
Well, I can't tell you at this moment because it's 3 years ago.
Senator, I don't accept the characterisation. We're going to come back on Diversa. We will have quite a bit of information on Diversa because that was a case where we actually took action with licence conditions, so we'll be able to talk to you about exactly what was behind that and what happened. I think it's important to note, when you say an early warning, we are a prudential regulator, so I think it is true to say that we're at the front.
Yes.
But we examine things from a system point of view. So we are not, there are thousands of products on platforms, literally thousands of products. We are not examining the thousands of products. What we are doing is looking at the system. We're designing rules to ensure that trustees exercise due skill and care, they act in the best financial interests of members, and they have due diligence in developing, and this is important, offering and reviewing investment options. And we do that by having high-level rules that we apply at the governance level.
Yep.
And so what we're saying is that we discovered, we thought that there were particular issues, not with these particular products that you're talking about, but general governance issues, and we've spent quite a bit of time drilling into that. Now, it was ASIC, as the responsible regulator looking after serious consumer harm, MISs and financial planners, who became aware of these particular issues before us.
Yeah, I've got more questions. You go. Sorry. Senator Sharma, thanks for letting me clarify.
Clarify? That's an understatement. That's quite all right, Senator, now. So when did APRA first become aware that Macquarie had been formally warned by ASIC?
Well, from what I have here, which I can expand on notice, is we had conversations with ASIC and Macquarie in December 23. Now, of course, I'll take it away and go back and see whether we knew of the particular notice being served that you've referred to, Senator.
Okay. And once you became aware of that conversation, did APRA take any steps to liaise with other APRA-regulated trustees who were offering that product, Shield?
I think I might have to take that on notice as well, Senator.
The
only other one was equity trustees.
Equity trustees, I thought, yeah.
And NetWealth? And NetWealth?
NetWealth was First Guardian, Senator. We're talking about Shield now for MIML.
So do you recall if APRA proactively engaged with equity
Oh, hang on.
trustees?
My colleague is pointing out that we did. Yes. We engaged with MIML and equity trustees regarding the issue, including member communications, in April 24.
In April 24 with equity trustees, okay. And when ASIC reached the agreement for an enforceable undertaking with Macquarie, was APRA consulted on that?
We were certainly made aware of it and the discussions in advance and the direction of travel this was taking.
And was APRA supportive of that? I guess I'm asking, did you have any concerns about the moral hazard that's potentially created here by the decision to go lightly on Macquarie?
Look, I think the primary issue for ASIC, and which we would all be very concerned about, it was arriving at a conclusion that would enable the members there to be made whole at the earliest possible time to relieve the stress on them. But the decision-making there was ASIC's, and we were aware, as I say, of the direction of travel.
Okay. Last question. The Assistant Treasurer has suggested that superannuation funds could be asked to contribute to the compensation scheme of last resort through a special levy. Does APRA have a view, or has APRA offered a view on the implications for APRA-regulated super funds being levied in this way?
I don't believe we have given any advice on that subject, Senator.
What is your view on it?
I think it's...
Well, we don't give views on that, no, Senator.
They're not here to give an opinion.
Our view on 23 is that if exercised, we provide the government with advice, and that is it. So there's an administrative function for us to do.
Have you been asked to provide advice on this issue?
On Part 23 we have, Senator.
Yes.
Not on the compensation scheme of last resort.
Only on Part 23.
Just to clarify that.
And that's not the formal advice required under the statute. It's just consultation with Treasury and the Minister.
Okay. And that's on Part 23, not the compensation scheme.
Just to clarify that distinction, there's the Part 23 power, and there's the compensation scheme of last resort, which your question referred to.
Yep.
We have not been asked to give any formal advice, or any advice on or view on the compensation scheme of last resort. And in relation to Part 23, it's in the public domain that NetWealth have
written to the Assistant Treasurer.
Yes. And we have not yet given the formal advice that is required.
To the Assistant Treasurer to inform his response?
Correct, because there would be certain steps and procedures that will have to be gone through and information gathering
before we will get to the point of being able to give her formal advice.
Okay. Thank you. That was all I had, Chair.
Thanks, Senator. My ambition to get to ASIC before the dinner break I don't think is going to be realised. We've got still a few more senators, so I'll just ask people to be as efficient as they can with questions and we'll get through to everybody. So Senator Pocock, you're next. Thank you.
I want to go to your recent announcement to limit high-risk loans.
Yes.
On the 27th of November, you announced a 20% cap on new lending to borrowers whose debt is 6 times or more their income. Is it correct that the 20% cap applies separately to both owner-occupiers and investors?
Correct. So there's one cap, but we have 2 buckets that applies. So one for owner-occupiers, one for investors. And the key reason is we want to make sure that one does not crowd out the other.
One does not crowd out the other?
Yes.
Why did you decide to apply the cap to owner-occupiers and not just new investor loans? Because it seems to me there's a very good argument for stopping the crowding out of first home buyers or home buyers generally from investor demand.
So our view was, Senator, that generally credit standards are at good levels, and that's very good. But we have had cuts in interest rates. We have got a robust labour market, and if you look at other cycles that we've had in Australian history, that would usually coincide with higher credit growth and more riskier lending. And that is what we're starting to see for high debt-to-income lending, not for owner-occupiers, but for investors. So currently, aggregate DTI flow is around 6.
Explain that and unpack that.
So if you
try not to use... Thank you.
Sorry.
That's all right.
Okay.
No, it's about me, not you, but I appreciate understanding what you're saying.
I think it's about me too. So I will keep it as simple as I can make it. So if you look at the quantum of investor lending that's being written, and you say, well, what is the high debt-to-income levels?
Mm-hmm.
It is 10% at the moment. And
10% of investor lending is at a DTI of more than 6?
Of more than 6, and growing.
And growing.
And growing. If you do that same calculation for owner-occupiers, it is 4% and stable.
So why have you hit both? Keep going.
And so we have instituted what we're calling a guardrail at 20. So it's quite a high guardrail. It is non-binding for both investors and for owner-occupiers. And we've done that because...
What does non-binding mean? Non-binding?
So it's non-binding because for investors it's 10% at the moment, and for owner-occupiers it's 4% on average. But we are saying that there is a cap at the 20% mark. So both investors and owner-occupiers are well below that. So in that form, it is non-binding in aggregate, although my one caveat is there are some lenders who are very close to that 20% for investors. So for those, you would expect that to bind in the not too distant future. So to your question, why did we apply it to owner-occupiers? We've applied one limit, right? 2 buckets, but 1 limit, because regardless of whether it's owner-occupier or investor lending, we would say high debt-to-income lending at a level of 20, once you hit the 20%, would be higher risk lending in aggregate for us. Now, we would expect investors to reach that limit much quicker than owner-occupiers. And in fact, for owner-occupiers, and particularly for first home buyers, it is not the DTI limit that would usually constrain them. So many first home buyers are constrained by the deposit that they can raise. So it's the LVR, the loan to valuation ratio, that is the main...
Sorry, can you repeat that sentence?
So for most first home buyers, it is not usually, I'm speaking generally, a debt to income constraint that would constrain lending. It's the fact that they struggle to raise a deposit, and so they are more constrained by the bank's assessment on loan to valuation, or what we call LVR lending, high LVR lending, and that's something that we're not targeting here. I hope did I explain that?
Yeah. Thank you. This cap then applies institution by institution, is that correct?
Correct.
So you're trying to constrain those who are out on the wing and getting close to 20% in either bucket. Is that the story?
Correct.
So do you have a bunch of institutions, or any institutions, which are close to 20% on both? Do you have oversight of all of this?
We have oversight.
Okay,
we understand
good.
the lending. I would have to come back to you, Senator. But
how many institutions have you got close to 20% on investor lending?
Is that the question?
Yes.
So I'm happy to take that.
No,
on note.
the other question applies also. I want to know whether you've got oversight on everything, both investor and a home, what do we call it? Sorry.
Owner-occupiers.
Owner-occupiers. And you've got it by institution in both categories.
Yes. So we would be tracking, as part of our reporting, we'll be tracking lending at high DTI lending for both owner-occupiers and investor lending by institution.
Okay, and you can't tell me off the top of your head how many institutions are approaching the 20% in either?
Well,
you can?
Let me take advice. Can we?
We can.
Okay.
We can.
Yes. Thank you, Senator. Yes, it's 4 entities.
4 entities. And how many entities do you have under surveillance?
The whole system.
How many?
150 banks.
150 banks. The 4 that are approaching the 20%, are they approaching it on both categories of investor, owner, occupier and investor lending?
When it's split, the investor lending is higher, and that is the most constraining.
So we now have a number of institutions, 4 out of many, who are reaching a concerning level of high-risk lending.
So I just want to be clear, Senator. There are some that are approaching the limit. Yeah. When you look at the aggregate level, so the total...
I understand the 10% and the 4%.
10% and the 4%,
Yep.
average 6%. So 6% high DTI happening across the system.
Yep.
We would say that is currently reasonably low. But because we're a forward-looking regulator and because we're concerned about these risks building and can build quickly, we are instituting what we call a preemptive guardrail. That's what we're doing. So right at this moment, though, I don't want any ambiguity, we think, and we stated this last week in the report, credit standards are good.
Understand that. But financial collapses, when they occur, can sometimes flow from 1 or 2 institutions that fail.
Absolutely.
So you must share. Do you have a serious level of concern? You must have to have taken this, put in place a preemptive guardrail. Is that correct?
We are concerned that if left unchecked, high DTI lending, high debt to income lending, can build risks in the system, and that can add to already high household debt, which is largely channelled through the banking system. So that's our job. So our job is tasked with making sure that the financial system is resilient. Where we are concerned about the potential build-up of risk, we will act. And what's unusual, Senator, about this action, I think is unusual, is that in past periods where we've acted after the build-up of risk. So if you look at 2014 and you look at 2017, we had to introduce binding constraints, and that caused quite a lot of disruption for lending. What we're doing here is that we're taking preemptive action. We don't see risks right now in the system for lending because aggregate credit standards are good, but we want to make sure that credit standards keep being good so that we can have good lending in the economy. That's what we're trying to do.
What's the difference between binding and non-binding constraints?
So binding constraint would be a bank that reaches the 20% and has to either curtail their lending or say to the borrower, you can't borrow that amount of money, but you can borrow a lesser amount of money.
So they must stay within the 20%. What's non-binding?
So non-binding is where the bank is lending according to their risk appetite, and our new constraint does not impact that decision.
Senator, you're at 10 minutes.
Oh, I haven't got past my first set of questions. Okay. Can I finish on this topic?
Yeah, if you can wrap this up.
Yeah, I'm sorry. I don't want to hold us here.
Can I just add, because I think you've got some really great points you're making, or the premise, which is, do we think we have some systemic risk at play? And you pointed to there's some banks that may need to curtail or adjust their capacity, their appetite. So we would say to you, no, we do not have a concern for stability in the system. The reason is that there are many things that flow into it. DTI is one part of it. We will look at things like, as we've done in the past, how much of the system has high loan-to-value ratios. That's very low. It's very low for both investor and home owners, owner-occupiers, and particularly first home buyers, very low. We don't have things like interest-only lending elevated. We look at 4 things in our macroprudential framework. One is this lending that I'm talking about now. We also talk about resilience. We know very confidently we have good capital and liquidity in the system. We're looking at leverage, and we're looking at asset prices and the performance. So there's a range of factors. What Mr Lonsdale has already said, and which goes to this measure, it is a measure that works through the cycle. It's not something that you would be wrong to say, oh, this is a reaction to something right now. This is about getting in front of a challenge. Where it works most, and the data would show, when you see rates very low, you see high DTI. So we've got rates at a fairly moderate level at the moment. You can see the Reserve Bank's action. Yes, it's a bit of easing. We can see a little bit of an uptick, sort of an increase in DTI, but not to elevated levels. But we know that if rates were to go lower, then DTI might rise. So this is about being in front of the problem and actually giving confidence. And I think we do really want to say, you should have confidence that we put something in place that will work through the cycle if rates change and go lower, for example. And that's where there's this, and I mean, we haven't talked about it here yet, but this is where there's a very good conversation happening at the Council of Financial Regulators. And there's a real sense that actually we know that this measure and the way Reserve Bank works with their measures on rates will actually work kind of, there's an aspect to it being a bit of an offset to each other. So it is a tool. It's only one of the many tools we have in our macroprudential toolbox. So you know we've got things like...
I'm curious about why you've chosen this one and not a cap on lending to investors, for example, or higher interest rates on investor loans. Perhaps you could explain that, and then I will surrender.
Thank you.
I need to come back if that's possible.
Yeah. So, just Chair, do you want me to answer this question?
Can I ask you to answer that question? Why have you chosen this tool?
So just to be clear, the measures that we announced on Thursday are the new tool that we've talked about, but we also reinforce that we've got a 3% serviceability buffer that applies and a 1% countercyclical buffer.
Can you explain that? Sorry, 3%?
So when a lender, when a borrower goes to a bank and seeks funding, we are saying that the bank needs to apply a buffer.
A buffer, I'm familiar with the buffer, yeah.
Yep, and so that buffer we are saying is 3%.
Well, that's unchanged, though.
No, but we review it, so I'm just saying...
You didn't do that?
We didn't change it, and we didn't change the counter-cyclical buffer, which is another buffer in the system, that together are our macroprudential tools. Why didn't we apply a cap like we did in 2014?
Or a higher interest rate, yeah.
So our view is that the way the system looks and the risks are quite different to what they look like in 2014. So in 2014, what you saw was rapid growth in investor lending, You've got a bit of that now.
Yeah.
You also saw significant growth happening in household debt, growth. You saw subdued income levels, and most importantly for APRA, credit standards, or the way that banks actually looked at the standards that they were lending money on, were a lot weaker than they are today, particularly underwriting standards. As we mentioned, there were interest-only loans, there were high loan-to-value ratio lending, as well as high DTI lending. We don't have many of those factors today. What we've got today is the beginning of some higher risk lending, just the beginning, that we want to get in front of, and that's why we didn't apply a hard tool, which is a cap, to investor lending.
Okay, I'll come back.
Thank you.
Thank you. Thanks for your answers.
We've got Senator Bragg and then Senator Roberts. We are going to break at 6:20 though, so if we're not finished with APRA, you'll have to come back after dinner, so we'll see how we go. Senator Bragg.
Thank you very much. So the government have this 5% deposit scheme. Have you looked at that?
Have we looked at the home guarantee scheme?
Do you know about it?
Yes, we know about it.
Okay.
We're aware of the parameters and the design of it, Senator.
Okay. And did you know that the government announced this policy 3 months before they asked the Treasury to conduct any modelling on price impacts and the like? Sorry, I've just realised I'm chewing my pencil and I'm not allowed to do that. That's not a question.
Well, I'm not aware, Senator, of the consultation arrangements and discussions between the Treasury and the Treasurer on the scheme.
Okay. Well, you're the prudential regulator. You look at risk in the system, do you not?
Yes, we do.
Okay, that's good. You do a good job. So, were you consulted on the modelling undertaken by the Treasury?
We were not consulted on the modelling. I don't believe we've seen modelling, but we were consulted on the scheme itself by the Treasury, which is an early version of the scheme.
You mean the changes to the scheme? Or do you mean the scheme as it was under the previous government?
The scheme, the current home guarantee scheme.
Okay. And what advice did you give on the scheme design?
So we were, I think we took this on notice, Senator, and gave you a response to it, but broadly we were asked about the effect on the LMI market and if there were any stability concerns. I think that was the question.
Okay. So you haven't seen the Treasury modelling on the price impacts?
So let me confirm. I think the answer is no, Senator.
You haven't been provided?
I don't believe so.
Okay. Well, I would assume then that you weren't consulted on the modelling that the Treasury conducted on the price impacts.
So I haven't seen them, Senator.
Sorry. My question is, so thank you for answering that question. That's very clear. My question before was, were you consulted in relation to the modelling done on price impacts by the Treasury?
So I think the answer to that is no.
Okay. So what do you think about more 95% loans in the system? I mean, what does that mean for the overall risk management of the banking system?
Well, Senator, I don't want to comment on the policy. That's an issue for government. What is an issue for APRA is the safety of the system. It's something that we look at very, very closely.
Yeah.
At the moment, what we can say about first home buyers and, as I mentioned to Senator Pocock, the key aggregate that we watch is high LVR lending, which we would say is currently at moderate levels, currently
Sure.
quite low. But it is something I should add. It's a new scheme. We have not seen data flow through yet, but it is something, as is a number of issues in the financial system, that we would watch very closely.
A 95% mortgage is by definition a high risk mortgage. Is a high LVR.
It is a high LVR, Senator.
It is. So when you look at your macroprudential statement from last week, you are looking at investor as well as owner occupied, as you just canvassed with Senator Pocock.
Yes, Senator.
So you're putting a cap in place of no more than 20% of an entity's loans, right?
For high debt to income lending.
Now, when you say 20% of loans, are we talking about 20% of the loans in total, or is it measured by value or some other? Is it just accrued 20% loans?
So, as I explained to Senator Pocock, we have two buckets that we're applying.
I understand
here.
that.
Yeah. So, if you look at take investor loans, for example, of the total flow of investor loans, what we're saying is that only 20% of those can be greater than 6 by DTI. That's what we're saying.
By number.
So doesn't that mean that if you are going to restrict the number of high LVR loans,
high DTI loans,
well, but they would also likely be high LVR loans?
I don't think that is right, Senator.
If they're owner occupiers and they're using this scheme, they would be.
Senator, so what we see is in the data is that first home buyers, as I was explaining to Senator Pocock, would usually be constrained not by high debt to income constraints, but by LVR constraints that the banks would apply.
That's right.
And that is not something that we are capping. We are capping high debt to income.
The income?
Correct, high debt to income.
So if you look at Melbourne, where average income is about 100 grand, the median house price is about 900 grand, it's going to make it pretty tough for a lot of people.
What's the question, Senator?
Well, I mean, aren't you ultimately going to be rubbing out people with lower incomes who could have used this scheme because you have higher income earners using the scheme?
So, Senator, I think it's, as I just go back to my previous response, with the scheme itself, we've seen no data yet. It's a brand new scheme. We want to see what the data looks like before we draw any conclusions on what the flows might look like and what the constraints might look like.
Sure, but you're putting a ceiling on the number of those loans.
We're putting a ceiling, well, we're putting a cap, a flow cap, on high debt to income lending. And as I explained, if you're a first home buyer, those caps would generally not affect you. There might be some that are affected, but generally not affect you. It's the high LVR lending that would usually capture first home buyers.
So the higher the income, the further you are away from hitting your DTI cap. By definition, right?
Yes.
So, sorry, if you have a high income, let's say we have two people. We've got a higher income person earning, I don't know, $200,000, and then you've got a lower income earner earning $75,000. The person that has the greater income is going to be further away from hitting the cap or the restriction on getting the loan, aren't they?
That's correct, sir.
Yeah, so if the same two people are using the 5% deposit scheme, isn't there a risk that the higher income earner could make better use of the government program compared to the lower income earner, given you've now introduced an income distinction?
So, Senator, again, you've linked the cap that we've introduced to the home guarantee scheme, and what I'm trying to explain is we like to make our comments on empirics. We want to have a look at the data flowing from this new scheme. We are watching very closely, and I'm just very reluctant to make any conclusions on the basis of what may or may not happen. We want to have a look at the data.
Okay. Well, there's an article in the Financial Review today which says mortgage brokers say a rush of first home buyers taking up the federal government's loan guarantee scheme has blown out borrowing processing times, with the Commonwealth Bank under pressure to, make people work on weekends and stuff. So there's going to be more demand coming through the scheme, isn't there?
Oh, more demand for houses coming through the home guarantee.
There'll be more people using because of the removal of the income caps and the removal of the place caps. By definition, I think anyone reasonable would agree that there'll be more people using this scheme than there were before.
Yes, Senator.
Okay, so I guess what I'm saying is, isn't it likely that a lot of the people that are going to be using the 5% scheme could actually hit the debt-to-income cap?
I don't think I can add to my answer, Senator. I really want to have a look at the data. Then I'm very happy to come back and talk more about it once we see what happens with the scheme.
Okay.
Senator, you're almost at 10 minutes. If you've got another block, I could potentially rotate to Senator Roberts and then we could finish. Would that work?
I have another block, but go to Senator Roberts.
Okay, let's do that.
What time are we breaking?
6:20. So if Senator Roberts can be done in 5 minutes, then we'll break.
I'll try.
Thank you.
APRA has previously, thank you for being here and thank you, Chair. APRA has previously stated that loans with loan-to-value ratios above 90% are, quote, clearly expose an ADI to a higher risk of loss, and that prudent, end of quote, and that prudent loan-to-value ratio limits are essential for portfolio risk management. How does APRA reconcile those warnings with the government's 5% deposit scheme, which institutionalises 95% loan-to-value ratio lending backed by taxpayers?
Well, it's something that we're watching very closely, Senator, and I think the premise of your question is correct, that high LVR lending as a general statement and high debt-to-income lending is at the more riskier end, and because of that we watch that type of lending very closely.
Thank you. We're on track for the 5 minutes. Has APRA provided advice to government on the systemic risk and implications of guaranteeing high loan-to-value ratios loans under this scheme? And if so, will you table that advice?
As I mentioned to Senator Bragg, we were asked for our advice on LMI providers for the early design of the scheme, which we provided to Treasury, not the Treasurer, but we've not provided any advice to the Treasurer on the systemic effects of the home guarantee scheme as currently implemented.
Thank you. Could we get a copy of that advice on notice that you gave to Treasury?
Well, I'm happy to take it on notice.
Thank you. Borrowers with 95% loan-to-value ratio loans are more likely to fall into negative equity during downturns, and taxpayers are underwriting 15% of these loans. Has APRA modelled fiscal exposure if property prices fall by, say, 10 to 20%?
So we do very stringent stress tests on the banks and on the system, Senator, that are more stringent than you just outlined there.
So you've done what I've said?
More stringent.
And more stringent?
Yeah, more stringent, I would say, and we publish those results, and the outcome is that our banking system, particularly our major banks, are very resilient.
Thank you. Does APRA consider the scheme consistent with Prudential Standard APS 220 and APG 223 guidance on sound risk management?
So I don't want to comment directly on the scheme, Senator, but what I can say is that it's a very important standard that you mention, and we deal with the banks all the time to make sure that they are resilient and they're adhering to our standards, of which that is one.
So why can't you discuss the scheme in relation to that?
So, as I said, if we're looking at the scheme, as I said to Senator Bragg, we want to have a look very closely at the empirics, the loans being written.
Once you've got experience.
After we've got experience, we like to base our conclusions on facts.
APRA's guidance, thank you. APRA's guidance emphasises limiting large volumes of high.
Senator, I was just going to add, government schemes at federal level and state level come and go from time to time. We see different structures of
ways in which government make their decisions and put in place policies. At all points in time, it is the bank to determine its risk appetite for the kind of lending that it would extend, and then that it adequately capitalises that and puts liquidity against it. So I think the really key point here is that we wouldn't and we don't opine on any regime put forward by a government. It is their prerogative. However, the banks are to uphold the lending standards and the risk management and to capitalise and put liquidity accordingly. What we then do is we look at the macro-prudential picture, and that we monitor. You can see us publishing very regularly our view of that and take our macro-prudential measures accordingly, which are within our gift to do. So it's like there's different roles there that we play, but the key thing is that banks are managing that risk and we are managing the system risk, and governments will make their decisions as they see fit.
Thank you. APRA's guidance emphasises limiting large volumes of high-risk lending. Does APRA classify the government scheme as high-risk lending?
Well, again, I don't want to comment directly on the scheme, but I'll make this general point, that the higher the LVR generally, the higher the risk involved, the higher the probability of default. I think that is true. Because we've had a large number of questions on high LVR lending, can I just make this point? It is part of our normal course that we would seek reporting from the banks on high LVR lending because it is high-risk lending. We do that. The other thing that I think is a very important point, when you look at the capital settings that we apply, the vast bulk of lending that is happening in the country, but also we'd expect under this scheme to be done by the major banks, the lion's share, and the capital that we are requiring to be held is agnostic to the home guarantee scheme. So regardless of that guarantee, we are requiring the same amount of capital to be held.
Thank you. So that means that APRA will apply the same supervisory expectations to banks originating these loans as it does to other high loan-to-value ratio products?
Yes, we will.
Thank you.
Senator Roberts.
Almost. Will APRA commit to publishing stress test results for the 5% deposit scheme under scenarios of price declines and unemployment shocks?
I don't, well, Senator, the stress tests that we do are much broader than any one government policy, and we do publish those. I'm not aware of a stress test that we will be doing on the particular scheme.
Thank you. Thank you for your succinct answers.
Thank you.
Thanks, Chair.
Thank you. We will now suspend for dinner and resume at 7:07 p.m. 45 minutes exactly. And just before I suspend broadcasting, we've just tabled your opening statement into the Hansard and the documents that were circulated by Senator O'Neill earlier. Thank you, everyone.
Okay, thank you.